It's not unusual for deposits to drop off in the first quarter because you normally end March on a pretty high. Frankly, I've worked in the US, I've worked in the UK, and deposits have pretty much stayed flat as a percentage of GDP and continued to grow all over the years, right? And there, obviously the participation in the capital markets is much, much, much higher than in India. So this notion that suddenly, there's going to be a complete dearth of deposits and everybody's going to invest in the capital markets, I think it's overdone, right? And I think that, look, as long as there's an economy, as long as there's expenditure, as long as there's businesses, deposits will continue to kind of go. Is the customer becoming more sophisticated and savvy? Absolutely. And that's bound to happen, right? But I don't see this situation as suddenly deposits are going to suddenly disappear.
Ashok Vaswani there, the MD and CEO of Kotak Mahindra Bank. Time for a short break. Up next, we get your cues from the commodity space. Stay tuned. Back on the other side.
What is the Ashoka differentiator?
Where when we first dreamt of Ashoka, we had no idea that students from 40 countries would be applying to our university. Now our aspiration is, why shouldn't it be one of the best in the world?
We are the best option for anyone wanting to do high quality scholarly academic work in India.
You firmly believed in was that this must be an institute that's also inclusive.
We are perceived as being elite. I think that's largely because we do get very good students and some of them from the very best schools. So I do think we're serving the country in one way, which is we're preventing the dollars from going outside. Individuals, R.K. Damani, Jhunjhunwala, Rakesh Jhunjhunwala, many others have contributed. 200 founders have contributed towards building this institution because they believe it's an important project for the country.
So we see Ashoka's mission to really be able to serve the country in solving these problems with the cadre of young people that we are feeding into the workplace.
If you want to maximize EBITDA, you'll be a teaching shop. You'll ignore, why would you run a PhD program? It's pure cost, no revenue. Right?
So how do you look at ROI then as far as Ashoka is concerned?
It's impact. We eventually will term out, and alumni, once they have matured, will take our place. We have no owner. There's no one family that backs this place.
The myth is that, if you study history or philosophy or political science or English literature, where will you get a job?
I'm a classic example of that. I studied philosophy and guess where I am. So
We have students who've turned down Berkeley, who've turned down Duke, Urbana-Champaign, London School of Economics, to come to Ashoka.
this takes me back to a conversation that I remember having with Mr. Murthy about starting Infosys. And I said, like 7 of you, of course, he was the first among equals, but I said, how did you get a decision made? Because, and especially we are known as argumentative Indians for a particular reason. What was that like? And he told me, he said, look, it was very simple. We had a sort of unwritten rule that in God we trust, everybody else brings data to the table. What was it like for you?
So we started with a smaller group. As Pramath was saying, Sanjeev, Pramath, myself, only a couple of others. It was a small group. And I think we spent a lot of time. So even as a precursor, we used to meet one Saturday a month at my old office, and we would have conversations. And this happened for a couple of years. So I think that helps with alignment. And then ultimately we said, we want to build a liberal arts and sciences, an interdisciplinary university. So everybody was aligned. This was going to be
And some people did get off the ship.
Yeah.
Back with us here on Power Breakfast, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. It seems to be a quarter to remember for the gold prices.
Oh, yes, it does. It is the best quarter in 8 years, where we have seen $2,685 an ounce of an all-time being hit as well. But since then, October has started, the first day that is, on a slightly weaker note. Well, we have seen some profit-taking coming in. The prices also are looking at expectations while of further rate cuts from the US Fed and China adding monetary policy stimulus as well. But this is plain simple profit-taking because of the prices getting overheated. It has been since October 2023 that we haven't seen a major big correction coming for the gold prices. And even now, as we have seen the prices come off its highs, most of the analysts and experts are calling it as a buy on dips because the longer-term view still seems positive. We still are looking at a global debt and a government borrowing at a record of 315 trillion. And markets do believe that till the time this goes on, till the time this is at these record highs, buying gold would be perhaps the only solution there. Well, if you look at the other commodities, then metals have had a good month of September and a good quarter as well. But what has seen a decline has been the crude oil prices, declining for a third straight month in the month of September, down 9%. And it has been the largest monthly decline since 2022. Prices also have declined by 17% for this quarter. So if you bar crude oil prices, most of the other commodities really have done well for the month and for the quarter.
Manisha, thanks a lot for that update. Moving on then, India's core sector did badly in August with output declining by 1.8%. The government fiscal data shows that government capex also did not pick up. The RBI also released the current account data for the June quarter. Lata is here to put all of that data into perspective. Lata, good morning.
Well, end of quarter always means a lot of macro data, and some of this has not been very flattering. Certainly not flattering to growth. And that in particular starts with the core sector data. The 8 core sectors, coal, electricity, cement, crude oil, gas, that set has declined, contracted by 1.8%, which is a bit shocking. We have seen low growth, but we have not seen a minus 1.8 in a long time. And the big sectors that fell or contracted were coal, crude oil, natural gas, cement, and electricity. Now, what's common to all this? They don't do very well in heavy rains. And that's exactly what has perhaps led to this contraction. Year ago, August was a month of poor rains, whereas the August 2024 has been a La Nina August, leading to very heavy rains. Perhaps that explains the lower output in perhaps all infrastructure-related sectors. It was only steel that has shown a slight growth, a low single-digit growth. Let's come to government capex. It's likely that that's also suffered for the same reasons. The overall fiscal deficit is lower compared to year-ago levels in August and in April-August, but that's because expenditure has been lower. Tax collections, and that's a bit surprising. Overall tax collections have grown 11.7%. In the past many years, it has been contributed by a very strong growth in income tax collections, but that in August has actually fallen by 25%. It's not very alarming because it's always the September, the June, those are the months when advance taxes are paid, that it's really important. But nevertheless, this is a bad sign. We have to watch it. Government capex has fallen by 30% year on year if you took April, August. That would be bad because in the election months, the government didn't spend. But you would expect August itself to have been better. August also was 20% lower than year ago August. So clearly it's probably the rains, but government capex is not catching up as much as we wanted to. Finally, let me come to the current account data which come in, which is the pleasant set of numbers. Current account deficit is marginally higher at 1.1%. Q4, I'm talking about the April, May, June quarter. It's a very lagged data. Q4 of last year was a surplus, but you should compare year on year. If you compare year on year, last year was 1% current account deficit as a percentage of GDP. This time it is 1.1. Not a very big difference at all. It's a very good number, actually. If you're below 2%, it's a very good current account deficit. And this slightly higher current account deficit is because trade deficit is higher, merchandise trade deficit. Services is a surplus, but it has not grown as much as it has grown in previous years. The other point is the capital flows. In the capital flows, last year we had a surplus of about 24 billion flowing in. Good FPI, good FDI, good ECBs, all that in 23. 24, all that is negative. FPI is negative, FDI flows have been very weak, and ECBs raised by Indian corporates also very weak, not too much capex perhaps, and that's led to a lower balance of payment surplus. None of this is earth-shattering. It just means that liquidity in the system was less. But otherwise, nothing to complain about the external data.
Nothing to complain about. Lada, thanks a lot for that. But that is a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call up next to set you up for today's session.
Did something else. So we were very clear that Indian higher ed had become too specialized, that we needed a new institution that really provided breadth and depth, that was interdisciplinary and holistic, and that gave students choice. So we agreed on the principles. We agreed on some of the disciplines we would cover and what we wouldn't cover. And we also said that we have to hire the best in the world to come, and the pedagogy has to be exciting. We'll primarily be undergraduate to start with.
Right.
And then over time, we'll build out a very strong PhD program. We won't have a very big master's program. So I think we spent a lot of time, so we were aligned on what the broader purpose is, the vision, broadly what the strategy is. And then we were able to bring in many other people. So we also had a governance model where we said, even if you put in a lot of money, you still have one vote. And you operate through...
How did that conversation go?
Well, I think a lot of it depends on, Sanjeev and I were initially the two largest contributors. And we'd said, we're going to do this. So it just became the norm. And we just went to everybody. When actually there was someone who wanted to put a lot of money in, wanted more than one vote, we turned that person down. So it's just a principle you stick to as you build it out. But we never realized when we started that we could end up becoming the largest, we think, collective philanthropy project in India.
Right.
We've raised about 3,500 crores, Shireen, in pure philanthropic money. We've had people like HDFC Group to Axis Bank to the Bajaj Group support Ashoka at scale. Individuals, R.K. Damani, Mr. Jhunjhunwala, Rakesh Jhunjhunwala, many others have contributed. 200 founders have contributed towards building this institution because they believe it's an important project for the country, that India needs a new institution. That's a new form of education for India.
The valuations are berserk over there. I mean, again, great companies, but and again, I usually don't talk about stocks, but just to put some sense. And again, don't get me wrong, I'm not disputing valuations or anything, but just to give the Infosys example, let's say our favorite stock this year was, say, Zomato. It's a $30 billion market cap. Let's say we expect the market normally to give you a 15% CAGR for 10 years, which is 4 times. So it should be a $120 billion market cap in 10 years. Let's say it's a 30p by then because it'll be a fairly large company. So it needs a $4 billion PAT, profit after tax.
So when we say melt up, I just want to sort of finish that point. It usually we are talking about like a frenzied move in the very short term, but that's not what you mean. You think
I mean it makes a major long-term top, which is not a great thing. So I mean it's great that we are going up on a wall of worries in a way that every time we meet, we are worried about, is this the end? Is this market going to fall? Will the investment?
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Tuesday morning. We are, of course, coming after the sharp fall that we had yesterday. Global markets overnight are a little okay. Lots to discuss. And, of course, we are also one day before a market holiday, midweek holiday. I'm Prashant. With me, my colleagues, Surabhi and Nigel. Guys, hi, good morning.
Explains the bright smiles on a Tuesday, But yeah, I think the midweek holidays actually right in the center of the week, they come right there when needed.
Well, indeed. And in fact, you have quite a few Asian markets that are shut today.
Yeah.
So our turn is tomorrow. So let's get straight to the trading session then.
Absolutely. And, so US equities, I'll start there because we'll get to, of course, yesterday's session, which was which was down and out, right? Completely down and out. So US equities last night managed a small gain, and actually on the S&P, not such a small gain as well, about 0.4% on the S&P, but it came in the last final minutes of trading. I mean, they were actually down for most parts of the day, and then towards the close, they kind of went up a little bit higher. The S&P, as a result, of course, made a new all-time high, 0.4% higher. And I think what kind of flipped the market a little bit at the margin, if you can move along, is that markets digested commentary from Powell that re-emphasized the strong footing of the economy. It's, as we described it when it happened, kind of a happy situation that the economy is strong, but rate cuts are coming. Maybe not 50, maybe 25. And I think that was the other thing, right? Comments from Powell reinforced likelihood of 25 basis point cuts at the time when they had cut by 50. He'd said in the press conference, well, don't make this the base case that every meeting you will get a 50. And yesterday, I think some of those comments were reinforced. But that was because the economy is in a good shape. So you don't need 50, you need 25. So anyway, markets reacted. Dollar also bounced. It's been bouncing from the support zone of between 100.5 and 100.8. And it went up about 1/3%. Those are important support levels we've kind of held on to. We left off at about 100.75. Now, China, of course, was the big story, has been the big story for the last many days. But remember, as we've been saying since yesterday, perhaps part of the reason why there was such frenzied FOMO kind of buying yesterday was that, Chinese markets, at least mainland market, the Shanghai Composite, Shenzhen, those markets are shut for a week starting today. They're not trading today, and they won't be trading all the way till the 8th of October, which is a Tuesday. Which is the 11th of October. That is, about a week away from now. Now, the Hong Kong markets are shut today, but only for today, and they restart trading tomorrow. A lot of people play Chinese stocks via the Hong Kong route. The Hong Kong Chinese Enterprises Index is a sort of apt route through which global investors access Chinese markets. The Shanghai and the Shenzhen is more oriented towards retail Chinese investors in any case. Let's just circle back the levels to what we saw yesterday. The Nifty and the Bank Nifty, they very quickly, as we started, broke through hourly averages. It kind of indicates short-term weakness. That's point number one. And as I said towards closing yesterday, the 20-day moving averages, both on the Nifty and the Bank Nifty, are the important support levels now. For the Nifty, that level stands at about 25,480, 479 to be precise. For the Nifty Bank, that level is 52,476. That's a 20-day there. Hopefully we will not break that even if we come close to it. Those levels are not very far away. Bad day or two and you'd be there. But the fact is that, those are important short-term reversal markers, and hopefully they will not go. Now, lots of stuff has come from SEBI, and we will talk more about this, but F&O restrictions did not come. Those F&O rules did not come. But I would say again, they are expected soon. Just because they did not come yesterday does not mean, I think they are imminent, and we'll see that over the next couple of days or so. Market holiday tomorrow, I think, which perhaps also means that action may be a little more subdued, which is not a bad thing after the complete bashing that the market got yesterday, especially on large caps. GIFT Nifty will come up on your screen, gives you an indication of how we are likely to start. It's about a 10-point higher start, so absolutely flat, nothing on it. Surabhi.
Absolutely. And Prashant, which is why I want to start first with the fund flow picture.
Yeah.
First up, looking at the number. And as we were expecting, while this huge large cap fall was playing out yesterday, it has bbeen driven by a lot of FPI selling. And the critical question is, was it a one-off, or will there be more such tactical shifts, perhaps because of what's happening in our neighborhood with the large markets like Japan and China? The sell number yesterday was 9,791 crores, almost 92 crores. So near 9,800 crores worth of selling coming in from FPIs. Domestic institutions cushioned a lot of that selling with a buy figure of about 6,650 odd crores. But clearly it wasn't enough. So this is a very critical watch point where the cash market selling will continue to be as large or whether it was just one-off. Let's move to the macros. Got lots of data on the economy. And just to kind of give a summary, the fiscal deficit numbers are looking really good because the April to August year-to-date deficit number is a lot lower than the same period last year. We're at about 27% of the FY25 target, so that's also good news. And the help is coming in from the fact that tax buoyancy is amazing this time around as well, with the tax collections crossing 13 lakh crores already. Talk about the August 8 core industries data. Now, that's negative because there's a decline of 1.8%, so very sharp contraction coming through. And a lot of the sub-constituents like coal, electricity, etc., all of them are in negative territory. Look at the CAD number. That's also a slight negative cue from the macro standpoint because we have swung back into a current account deficit versus a surplus in the previous quarter. So quarter on quarter, there's a variation. The current account deficit is about 1.1% of GDP right now. The reason why we're back in deficit is because of a mismatch or a imbalance between exports and imports. Merchandise exports have grown actually quite well, over 5%, but imports have been surging as well, and therefore the problem. Let's come to the SEBI board meeting, and we'll discuss this with guests throughout the course of the day. Lots of very interesting developments come through, so keep this on your radar. First of all, this new asset class that's been declared, so mutual funds, asset managers, listed companies, they'll be in focus as well because it's a brand new product that sits in between mutual funds and PMS. It's finally been cleared. Then the whole MF light approach to passive funds, that's been green lighted as well by SEBI. So that's something to keep in mind. And then one of the most important things is the expansion of the definition of connected persons. And we'll discuss this with experts and sort of people who have a legal view as well, because this is a big one. Now, connected persons will include the partner of a company, that company's employee, other partners in that company, and also members of a household. So if there is a connected person in one house, automatically everybody else who's living in that house also becomes a connected person. And likewise, the definition of, broader definition of relatives has been now used instead of immediate relative. And it's been really expanded in terms of spouse, children, children's spouses. So sort of a whole family tree that gets covered with these latest changes in terms of the definition. So we'll watch out for this. And finally, I'll also watch out for the gold financing stocks. RBI yesterday came out with an advisory. It's an advisory. It's not a new ruling. They're not shutting down anyone's business. But the advisory was very interesting to note because they're saying that there is a lot of gap in terms of compliances when banking correspondents are involved or third-party service providers are involved, and gaps even otherwise in terms of, maintaining important compliances, whether it's loan-to-value norms, risk weights, auctioning of gold in case there is a default. And also there is a lot of concern about perhaps inadequate due diligence when the gold loan is actually being given out and the end use, monitoring the end use of gold loans. So let's see, stocks like Manappuram and Muthoot will be on the radar as well. So plenty of local action too today.
Well, that's right. And nothing untoward really came in post-market hours yesterday. I think that will be a relief because Fed's Powell, well, he didn't sound overtly dovish, but the markets took it in its stride, and I'll view that possibly. That was one fear. The other fear was that maybe SEBI comes out with something that could be drastic. That as well didn't play out. So both these fears didn't play out, and the bulls will be looking at both these points with the relief. The problem is the FI selling. That was nearly 10,000 crores, the highest we have seen all the way since August 5th, and we'll have to track this number. Are FIs in the mood of offloading more amount? That's something that we'll have to track very, very closely. But the last time around when they sold, the next few days, in fact, they turned things around. So we'll keep an eye out on that front. What about the FIs in the FNO market? Well, yesterday they unwound some longs, so there was no shorts that were added in the system. They continue to remain net long with 81% of their positions on the long side. On the client side, well, we had a big dip yesterday, and the clients that actually have got it right, well, they covered some short positioning out there. And net, if you look at the positioning now, the FIs, they're net long, but the long positioning has come down a little bit because of that unwinding that we have seen. While the clients, well, they are net short at around 1.9 lakh contracts or thereabouts. Today is going to be a big day because we have the dual weekly expiry that plays out. That's the Nifty Bank as well as the Nifty Financial Services Index. And these two are going to be the movers today because financials as well as banks have got hit in the last two sessions. The Nifty Bank has corrected 1,500 points in just two sessions. Could be due for a bit of a bounce. On the downside, the reference level you're looking at is closer on 500 points away from where we closed yesterday. That's at around 52,450 odd. While the recent high, well, that becomes a bit of a resistance. I think the Nifty Bank could be due for a bit of a bounce in today's trading session. And both the Nifty Bank as well as the financials, they'll give direction to the market today. On the Nifty PCR, that's come back down to around 0.8 odd because of the kind of call writing we have seen and the kind of put writing that we have seen. So in terms of a level, since we saw 26,000 call fairly active, the 26,050 odd mark, that becomes a bit of a resistance zone. So if we bounce, you want to get past the 26,050 odd mark. On the downside, well, the reference point comes in at around the 20 DMA. So you'll feel more confident once you get past this mark. Stocks that I'm looking at the cement stocks, and a few of those larger cap names should be in focus as well because it's the end of the monsoon, so construction activity picks up. You'll hear from somewhere today that there's a price hike that's been pushed through. How much of it gets absorbed is going to be important. And the third point is petrol prices have cooled off, so petcoke prices as well at multi-month lows. Keep an eye out on the cement stocks for the second half of this year, and also from today onwards, given that monsoons are behind us.
Okay, all right, got it. We'll watch out for all of those cues. Let's kick off the action then with the equity call of the day. We've got actually two big calls coming through. First one is from Rhythm Desai of Morgan Stanley. He says the market, especially small and mid caps, continue to defy gravity and climb a wall of worry. He expects strong growth signals in the months ahead, accompanied by heightened capital market activity. To decide where share prices head, he says, while they prefer large cap cyclicals over defensives, at the sector level, financials appear to offer the best risk-reward ratio. He says they're also overweight on technology, consumer discretionary, and industrials. They're underweight other sectors.
Well, another view coming in from Vikas Jain of CLSA, who says that as over 90% of FI money invested in India is non-India dedicated, a risk of selling in India to fund any reallocation to China is a real one. He says we experienced a similar correction in India when Chinese markets spiked up in November of 2022. He adds, from the list of large stocks that are up over 40% in 2024, so far the most vulnerable to profit-taking are likely to be some quote-unquote Modi stocks. And names that he gives as examples are Oil India, BHEL, IOC, Ambuja Cements, and some real estate plays like Godrej Properties and Macrotech developers. Some excited auto names like Bajaj, as well as expensive discretionary plays like Voltas.
Okay, so pretty interesting, saying that there is a real risk of some profit-taking in India and a tactical allocation towards China. We saw some of that yesterday. Was it a one-off? That's the big question. But now let's focus on the other big story that came in late towards the evening. A slew of announcements after SEBI's latest board meeting. To talk about some of the key decisions that were taken last night, we have with us Sandeep Parekh, partner and founder at FinSec Law Advisors. Sandeep, morning. Thanks for taking this early call. You know, as I was going through the SEBI press release, I got back to a conversation that we had on this, I think, a couple of weeks back when we were discussing the widening scope of connected persons, right? And for the benefit of our viewers, I just want to read out the exact changes. Now, connected person includes a firm or its partner or its employee. It also includes a person sharing household or residence with another connected person. And then the whole definition of relative has been broadened. It's not just immediate relatives, it's all relatives, which has a whole list underneath it. Your first thoughts on whether this is warranted, justified? Because I remember in our last call, you were fairly concerned about going maybe a bit overboard on this.
Yeah, hi, morning. So I think it's an extremely poorly thought move, and it's going to hurt. I call this a move which is going to have result in 100% false positives and 100% false negatives. So it will only catch the non-crooked people. And how many crooks do you think are going to call their uncles there at trade kar lo? So it's really going to really hurt people who will be able to disprove. If you have an uncle who's traded, how do you disprove that you didn't pass on information just because you chatted with him every once a week? So it's going to be quite a disastrous law in practice, and unfortunately, despite opposition, SEBI has chosen to implement it.
Sandeep, you've read through what they've announced, right? There is no. You were saying that they could tweak it to make it more reasonable, but that's not happened.
That's right. So it's okay. And remember, it's not just relatives. They've introduced classes of people like vendors and other people. So anybody. Again, this is not clear from the press release whether they've implemented everything. But based on the proposal paper, it included even people like vendors, etc. So it makes it very, very broad. And even if you're chatting with somebody, or somebody's a connection, and you happen to chat with them on the phone, and there'll be a presumption drawn that you use some information, illegal information, which was passed on to you. So, and that's impossible to disprove. So it's going to be a conviction even before a trial.
But Sandeep, I don't know. This is just a press release. I don't know when the final guidelines come through Could there be some caveats or carve-outs? Because I think the broader thought seems to be that the existing definition was maybe not stringent or tight enough. And, there was all kinds of market activity going on where it might not be in your wife's name or your son's name, but, via other connected, persons.
No, so absolutely. So, depends what you mean by stringent. If you want to behead everybody on earth, then, you'll be the most stringent. But you have to catch the right people, right? So if you're catching the wrong people and kind of putting penalties on them, that's that's not a stringent law. That's a perverse law. I mean, that's exactly what it has become. It's already, I think there are many cases where people are just happen to be connected under these deeming provisions, and even a 5,000 share trade, there's a presumption drawn that you got some illegal information outside from the insider. So these are impossible things to disprove. And therefore, it catches the innocent a lot. And with this expansion, it will only catch the innocent. I don't think a crook is going to really trade through his or her uncle, right?
Sandeep, anything else apart from the connected person thing? I mean, there was a long list of things. Anything else stood out to you?
It's a pretty long list. So I think the major thing, interesting thing is the alternative fund option which they've opened up. That kind of, I think they want to bring in more of the F&O traders or people who want more risk into the market through more regulated products. So I think that should be a big positive in terms of allowing people to take more risk through a regulated and structured product, which will have higher risk, but will also have a higher ticket size.
The other stuff that kind of stood out, Sandeep, in case you have a view on this, first of all, the whole move towards T+0, they're expanding it to, up to 500 companies. But I think that instantaneous settlement, that the release says that thought is that's been let go. Yeah, for now. So that's one. And the other one, which, I track personal finance, so that's also of extreme importance, because I know that the investment advisor community has been crying out, saying that the compliances are too heavy. And that whole thing of, getting more people to register as RIAs and maybe even research analysts, I think there's been a lot of dilution over there. Anything else that you took note of?
So I think that's absolutely it's a great thing to start with the dilution, but, regulators don't like to call it dilution, they call it rationalization. But I think it's important that a country of 1.5 billion people, we don't have 1,000 registered investment advisors. We really need maybe at least 1 lakh. So I think broadly, I think the red line is, they cannot commit fraud or mis-selling. Beyond that, I think they need to relax the norms even further so that, we come to our goal of, having a large number of people cater to. Investment advice is relatively elite service, but most of the investment advice is actually provided by distributors in India and anywhere in the world. So I think at least have a reasonable number, we may not have 1 million, but maybe target at least 50,000 or 1 lakh registered investment advisors in India. I think that should be the goal.
Okay.
All right, Sandeep, we'll leave it there. A quick conversation on the top of the show, but, maybe we can sort of connect once again once you have had the time to look through everything, because there is a lot of stuff there. But thank you for joining us with your first sort of thinking on what has been done. We have lots of stocks to discuss, which we'll get to in just a bit. And this is, of course, our top 10 segment. We're looking at names like NTPC, Tata Power, NHPC, Bank of Maharashtra, IREDA, Interglobe Aviation, Piramal Pharma, India Glycos. We have Kalpataru Projects, Blue Dart. So lots of names with positive news flow. Some stocks which perhaps are likely to open in the red. Nothing. So we'll see. But that's news flow related names with our research team in just a bit. Stay with us.
Okay, let's talk about the corporate interactions lined up on the show today. Coming up at 8:35, we have the management of Northern Arc Capital to talk about their earnings and the outlook ahead. At 9 a.m., an exclusive conversation coming up with Ashok Vaswani, MD and CEO of Kotak Mahindra Bank, on the recent RBI action, tech spends, expansion, and a lot more. At 9:20, Shreyas Devalkar of Axis Mutual Fund joins in to talk about the market way forward. He's our market master today. And then at 9:30 a.m., the management of Bajaj Auto will be with us to talk about September auto sales trends and, of course, the demand expectations ahead of the festive season. And it's actually auto full throttle. Following that interaction with Bajaj Auto, we have the management of Mahindra and Mahindra joining in to talk about the farm equipment side of the business. And, of course, the sales picture for the month gone by. Hemant Sikka, President, Farm Equipment Sector, M&M, would be joining in. And a little later at 9:50, Rishi Raj of Max Estates joins in to talk about the company's recent announcement of clocking pre-sales of 4,100 crores for one of their Gurugram projects. And finally, at the end of the show, in our special segment, It's the Economy, Lata gets chatting with K. Ravichandran of ICRA and Somashekar Vimuri of Crystal Ratings.
Let's slip into a short break. Come back. We'll go full tilt on all the top stocks that we're tracking for you.
Will people run away? Markets don't climax at periods like that. And this seems to be more like the 90s bull market where, small caps were doing phenomenally well. And what tipped it eventually, of course, one was the Asian crisis, which happened outside our control. And B, it just got overwhelmed with supply. And that's really what capitalism should do, that prevent what I call that melt up where the entire market goes up 10x in a decade. And then you don't see that prices for, maybe next 10 or 20 years. So I'm hoping we don't get a melt up and supply response takes care of it. And supply is coming, but it's still what I call a quadrant 3 or quadrant 4 level supply. The big guys haven't yet come. And in the bigger ones, if I take the top 10 companies, no one is supplied. Having said that, the owners of those companies, whether it's BAT selling down ITC or Singtel selling down Bharti, that's happened. But it's not like the Reliances or the Tatas or someone has come with massive issuances, which I think is around the corner. It should come.
I mean, bankers we speak to tell that over the next 12 to 18 months, about $25 billion worth of IPOs should happen. But that is, I'm not sure how much of the...
So, Prashant, 25 also, I'm saying, is a small number now. It's a $5 trillion market cap. So if you don't do 50 billion, is 1%. So issuance is, the government ought to be doing 25 billion. The larger groups easily can take 25 to 50 billion. And this is combination of primary and, of course, QIPs and so on. We've seen promoter selling, we've seen PE selling, we've seen MNC strategic selling, and it's gone from across the world, right? If GE of US has sold, Whirlpool has sold, BAT has sold, Sumitomo from Japan has sold, Singtel has sold, and now Hyundai is approaching the market. So all these chaps are getting it right. But we still haven't come and raised the money.
And that will happen according to you?
I think it's inevitable. I mean, that's what capitalism is, right? That demand for paper will create the supply.
And we're a long way off from that climax. Or
I hope I'm not proven wrong next week.
Welcome back. Well, we've spoken about the cues, which are fine, considering a lot of regional markets are on holiday. But it's going to be all about individual stocks as we kick off the day. So our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, good morning to all of you. Vivek, let's kick it off. You're watching out for a bunch of the power companies. What's the news?
Well, good morning. Whole host of power companies on the radar. So yesterday, whole host of power companies went ahead and signed MOUs with the Rajasthan government. So first on our list today is NTPC, NTPC's green energy arm, which is headed for an IPO. That is NTPC Green Energy Limited, signed an MOU with the government of Rajasthan. Now they are looking to set up and develop close to 25 gigawatt of renewable energy projects. So that's a significant commitment from NTPC coming in there. The next stock on the radar is Tata Power. So Tata Power also has signed an MOU with Rajasthan government. They have a capex commitment of close to 1.2 lakh crores. Now the investments will be across the power distribution, transmission as well as renewables. Almost 75,000 crore will be dedicated to renewable energy projects. Company is looking to go ahead and set up close to 10,000 megawatt of renewable energy capacity. Also, another capex close to 2,000 crore for module manufacturing. So significant capex coming from Tata Power as well. And lastly, NHPC along similar lines, they too have signed an MOU with the Rajasthan government. Estimated investment envisaged by the company is close to 50,000 crore rupees. Where will they be putting the money? Development of pump storage projects, renewable energy as well as battery energy solar projects is where NHPC is looking to go ahead and do the capex as far as the state of Rajasthan is concerned.
Okay, all right, Vivek. Thanks a lot for that. Well, let's hop across to Vivek. To Abhishek. He's here to tell us about Bank of Maharashtra as well as IRDA. Morning, Abhishek.
Morning, Nigel. Yesterday, we broke the news of about, Bank of Maharashtra looking to raise QIP very soon. And they have launched their QIP. So, CNBC-TV18's news break has been confirmed. The base issue size is about 1,750 crores, which, based on demand, can be up by another rupees 1,750 crores. So, on the whole, they are looking to raise about rupees 3,500 crore of capital. So, SEBI floor price is about 60.36 per share, which is at a discount of 4.9%, they have given in terms of indicative price to SEBI floor price. So indicative price is about 57.36 per share after the discount, and BRLM are Motilal Oswal and others. Now calculation shows that if they raise about 3,500 crore, tier 1 ratio of the bank could move to 15.75 from 13.4% in the previous quarter. Book value will increase by 21% and net worth will increase by 31.5%. Calculation shows that Government of India's stake post this fundraise would come down to 79.6% versus 86.5% that they had earlier. IRDA, they have given their Q1 business update. Sanctions for H1 is up about 302.5% YOY, and disbursements for H1 is at 9,787 crore, which is up 56% on a YOY basis. However, the loan growth on a sequential basis has tapered down, so it is just at 2% quarter on quarter, but YOY, the loan growth is close to 36%. Back to you.
All right, Abhishek, thank you very much for that. So that's essentially stocks in focus. Well, let's talk about Indigo and Piramal Pharma as well. Winnie's here with details. Winnie, good morning.
Good morning. So yes, keeping an eye out on Interglobe Aviation, could expect a bit of a positive move today because OMCs have reduced the ATF prices for the second consecutive month. So whether you look at any of the metro cities, Delhi, Kolkata, Mumbai, Chennai, there is a reduction in terms of prices. Overall, let's not forget, for aviation companies, raw material cost, that's a fuel cost, is around 40 to 50%, which accounts to their raw material cost. So these prices reducing surely turns out to be positive for them. And overall, ATF prices have been at the lowest level since April 2024. These prices that we are seeing, as well as since May 2024, they're down by 13%. So keep an eye out on that. A positive move expected for Interglobe Aviation. Piramal Pharma also be expecting a bit of a positive move here. Piramal Pharma Solutions, which is a part of Piramal Pharma, has announced an expansion of around $80 million expansion, and this is going to be in Connecticut for a sterile injection facility of the company. This will increase the production of the company as well as operational efficiency. And in terms of production, currently around 104 batches that are produced in this facility per year. That will move on to 240 by 2027 when the facility will see the complete expansion coming into place in Q1 2027.
Okay, got it. Vinny, thank you for that. Let's quickly go across to Sonal. She's watching out for a bunch of stocks as well. Sonal, morning.
Good morning. Well, 3 stocks on my radar. Let me start with India Glycols. They have expanded capacities in Uttarakhand in one of their plants. One is for 100 kiloliter per day of existing grain-based distillery at Uttarakhand, which increases the total capacity to 500 kiloliter per day. For biofuel ethanol plant, they have added 180 kiloliter per day, which converts ethanol to biofuel. There is also 2,500 metric tons for new chemical products at the same Uttarakhand facility where they have done an expansion. For Kalpataru projects, the company has been awarded orders worth 1241 crore rupees, so that's a positive. For Blue Dart, like other logistic companies, this company has also gone ahead and they have spoken about general price increase from 1st Jan 2025. They say it will be in the range from 9 to 12%, so see some green on that stock as well.
Okay, all right. Thanks a lot for that, Sonal. Well, let's do a quick recap of all the top stocks we covered for you. And as we said, all of them with positive news flow. We look at NDPC, Tata Power, NHPC, Bank of Maharashtra, IRDA, Interglobe Aviation, Piramal Pharma, India Glycols, Kalpataru Projects, and Blue Dart. All of them will be reacting to positive news flow. Well, let's get in Manisha Gupta to tell us what's going on in the commodity market. Morning, Manisha.
Thank you for that, Nigel. Well, some profit-taking finally coming in for the gold prices after it's posted its best quarter in 8 years. We did see prices hit an all-time high of $26.85 an ounce. It's holding around $26.30 right now, so nearly $50 off its all-time highs right now. Same is the case with silver. Last week was at 12-year highs, but since then we've seen the prices come off by nearly 3%. Metals have continued to gain up, though, with China now promising more to do with property sector and mortgages. We've seen prices continue to firm higher. Copper is trading near its 4-month high. Some profit taking, of course, seen in case of aluminum and zinc, where the international study group suggests that we are looking at higher supplies for the last quarter of this year and the first quarter of 2025 as well. So next 6 months could be looking at higher inventories is what's weighing on some of these metals. The crude oil prices in the meanwhile have continued to decline as well. We did see September go down as a third monthly decline for the crude oil prices, and October has started on a very flat note as well.
All right, Manisha, thank you very much for that. So that's commodities in focus. We'll take a quick commercial break here. On the other side, we'll be joined by Amnish Agarwal, Head of Research at Prabhudas Lilladher, for some fundamental stock talk. Stay tuned, that's coming up. We'll also have the management of Northern Arc Capital with us to talk about their earnings and, of course, the outlook going forward.
This has legs to go.
This has legs to go. PSUs, capital goods, real estate, infrastructure, that's essentially been the leader of the bull market. But people, defense, etc., right? That part, it looks like we're starting to rotate, people are starting to rotate out of that.
Which is inevitable.
Inevitable. You think that's done, or is just like a pause and refresh case here?
Again, in terms of market cycles, when you see the leaders of every cycle, then they go to sleep for a decade. So the leadership of 2000 to 2007, which you were earlier alluding to, was indeed commodities and infrastructure, power, real estate. And then the excesses which happened in that period made them complete pariahs. So 4 years ago, we were on a show and Ramesh and I remember we would talk about PSUs and everyone was like sniggering, like, what's wrong with these chaps? But because the correction had been so steep that it's eventually an investor's job is about valuation. Like I said, the greatest Infosys may not give you the return, and the what so-called poorest PSU may give you the best return. So it was a mean reversion trade which happened, and of course all the right policy things happened for infrastructure and defense and railways and so on. So you go from being what I call terrible to bad is a rate of change, but you went from terrible to being good. So that rate of change is so dramatic that's what the markets have discounted.
And now maybe to great.
And now you're imagining it to be great. Some of them may make it, but most of them won't. So I would be very, very cautious in those kinds of places. And typically these are not high return areas. By definition, if you make 25% IRR in an infrastructure business, the cost to the consumer, which is the average public, is going to be too high. So your money made is really on leverage, and therefore the return on equity comes in that business. So and people are shy of doing leverage after again the last cycle. And the flip of it, to just complete, the leadership of the last cycle was all the high quality businesses in the last decade, which were all getting re-rated. Asian Paints, Page Industries, Kotak Bank,
consumers, retail.
Welcome back. Well, hope you're having a good morning. Plenty to discuss in terms of all the stocks that are in news. So let's get in Amnish Agarwal, the head of research at Prabhudas Lilladher, who joins us. Hi, Amnish. Thanks a lot for joining in. Well, there was that news flow earlier today that Vivek just told us about on NTPC as well as Tata Power. Both of them have signed MOUs with the Rajasthan government. Tata Power actually last week was quite strong as well. What's your view on both these two counters?
Good morning, Nigel.
Morning.
You see, both Tata Power as well as NTPC, I think all these companies are now going in for more and more renewable capacity. And we have seen that in the past few years that the valuations of renewable companies in general or pure renewable plays, they have been on the higher side. So as the proportion of renewable grows in their portfolio, I think the valuations for some of these companies can catch up. And that has also been reflected in the valuations in the last, say, 2-3 years in particular. Now, coming to NTPC, I think their NTPC Green IPO is already in the pipeline. So I think this shift towards renewables will continue and these companies will continue to have good valuations. So I think it is positive for both the companies if the share of renewables in their overall generation goes up over the coming few years.
All right.
Okay. All right, Amnish, got that point. Amnish, just want to get your thoughts on gold financiers because there's this advisory that came out from RBI yesterday. They're flagging off a lot of issues with respect to whether proper due diligence is happening or not, and whether the norms are being followed when there's auctioning, and whether end use of funds is being properly monitored or not. So a lot of things that the RBI is raising. They've not singled out any company per se, but your thoughts and whether you still like the space and how would you approach it?
You see, gold financing has been growing over the years, but usually the people who have been taking gold on loan, so it is usually considered as a, you can say, last resort if anyone goes for taking the gold loans. Now, it is very difficult for any entity to monitor what is the end use of such a loan. That is one. Secondly, your volatility in the gold prices also impact this. And if you look at, say, numbers or otherwise, I think whether it is auctioning, whether it is, you can say, your use auctioning, you see, all this trade, I think it is not that transparent, and going by the fact that lot of these loans also happen and very small ticket sizes, it is not easy to monitor that. Now, given the fresh directives which have come from RBI, I don't rule out that in the near term, it is going to impact the gold financiers in terms of their growth rate, because they will have to rejig their system, they will have to improve the processes. So by the time I think the dust settles and the new systems get into place, I believe there could be some sort of a slowdown in growth rate, which could also impact the stocks in the near term.
You know, I was thinking IIFL, right? Those gold loan curbs were removed. But look at the stock. It's basically below where it was when the restrictions were removed by the RBI. So, you know, March, the restrictions came that they can't do any more gold loans. And just last week, they said, well, RBI removed those restrictions, but the stock's not gone. Actually, it's lower now. So I think, I don't know if market had a small inkling of something like this, that maybe, you know, the regulator is not very happy with that segment of loans. But the fact that they're being able to allow to do it, and we spoke with the IIFL management as well, has absolutely done nothing for the stock per se. Amnish, you know, auto sales numbers today, and I think we've got one or two, and we'll get more through the course of the day. Yesterday, stock sold off, and there was that report. I think there was a UBS report which was also going talking about very high inventory levels. Hero was down 4-5% yesterday. Just your thoughts here.
You see, the month of September has not been good for any category in the discretionary segment, and auto is no different. Now, specifically in autos, I think last 2-3 quarters, two-wheelers were doing well, but even in the last, say, month and a half, two-wheeler sales have also seen some sort of a slowdown. Your cars and PV inventory, any which ways, they remains at elevated levels, and all eyes are now on the coming festival and wedding season. So I think in terms of numbers, the numbers are likely to remain weak for the September month, which are being reported. And it all depends upon how the numbers go up in the, say, next couple of months in particular. So I think in anticipation of that only, there might have been, you can say, some sort of a sell down in these stocks.
All right. Got that. Amnish, request you to please stay with us. You know, we'll need to get to a conversation with the management of Northern Arc, and we'll come back to you. So Northern Arc Capital, the recent listing, it came out with its set of numbers. To understand what's the way ahead from here on, we're joined by Ashish Mehrotra, the MD and CEO of the company. Hi, Ashish. Morning, and good to see you. And as always, what's the outlook from here on? You know, you've declared your past quarter's numbers. That's quarter one. From here on, what kind of a growth are you looking at in terms of AUM, as well as in terms of your margin outlook from here? Let's get both those two questions out of the way first.
Thank you. Very good morning. Nice to be there. We've been consistently growing at over 30% year on year for the last 3 years. Q1 growth is broadly in the same line. Growth on a YOY basis is over 32%, and I think we should be able to hold a similar kind of a growth number. NBFC lending business tends to be a little bit seasonal. Obviously, the H2 is far more stronger on growth than H1. Revenues has grown by over 30%, and profits have actually improved by about 40% on a year-on-year basis. So fundamentally, a strong performance. The credit cost has remained broadly in line. Our GNPA is about 47-48 basis point. That gives you a context. On a risk-adjusted basis, our NIM, risk-adjusted margin, if one looks at, is actually improved to from 6.9 last year, same time, to about 7.4 So it's a fairly strong franchise. I think we will continue to stay focused in our diversification and ensure we are able to optimize the risk-adjusted return across the focus sectors and ensure the flow of credit to the underserved.
All right, Ashish, couple of more details then, going through your release, there's been a sharp increase in provisions. It's at around 51 crores, but on the lower base, both on a sequential as well as on a year-to-year basis, it's up. Why did this happen? And also your other income is sharply lower. Explain both these two to us.
Two ways of looking at it. Like I said, risk-adjusted return is a better way to look at the metrics. Obviously, our PCR is now provision coverage ratio is over 74%. We did tweak the model beginning of the year to ensure we have a higher amount of good book provisionings. So that's almost 60 basis point. What you see as a credit cost last year of 120 basis point has gone to 170 basis point. That includes a higher amount of good book provisioning given the stress we are seeing and to ensure there is an overlay sufficient for us. So that's taken us to 170 basis point. After adjusting for that, your risk-adjusted return has actually improved by 50 basis points from 690 to 740. And I think that should provide the sufficient direction in the way we're looking at the continue to grow and optimize the risk-adjusted return. The fee income, like I said, tends to be a little more seasonal. Large amount of placement income as the growth in credit is more driven by festival consumption-led stuff. So it'll be tends to be higher in H2 than on H1. That's one of the reasons why you see marginally lower fee income, but on a year-on-year basis, it is significantly better.
Got it. All right. Also, if you could tell us, on the operating efficiency, I'm looking at your cost-to-income ratio. I think it's at around 55%. A year ago, it was around 50%. On a sequential basis, it compares with around 62%. Where does this number stabilize at?
I think the way to look at it, like I said, your risk-adjusted margin has improved by 50 basis points since we invested in expansion, both in terms of building a very strong tech platform, both for enabling the B2B credit and the customer credit through NPOS and the other technology solutions in data sciences. Our OPEX went up from 380 to about 410. I think OPEX on an overall basis should be at about 4% after we adjust for it. But the margins will continue to happen as we made the jaws are actually expanding. If you look at it, your income is growing faster than expenses, and expenses broadly should stabilize. And we should aim to get higher productivity gains as we look forward.
You want to give us a number? Cost to income ratio stabilizes that?
I think we are right now at about 410 basis point. My sense is we should end this year around 400 basis point to my mind. That should hold true. So your jaws will open as your revenue growth will become faster as the balance sheet growth happens and the fee income picks up. And the expenses broadly will continue to get optimized for us to ensure we get productivity gains for all the expansion and investments we've made.
Okay, all right, Ashish, thanks a lot for joining in and filling us in with some color on the past quarter's numbers. We look forward to chatting up with you as this fiscal year does progress. Well, let's get back to Abneesh Agarwal, who's with us. Abneesh, any view on this particular company, recent listing?
Okay.
No, all right. Okay, no worries. Let's talk about the cement stocks. Abneesh, as a house, how are you all viewing them? You know, the quarter two is going to be a very, very terrible one. Offtake wasn't great. It's a monsoon season, so seasonally weak as well. And they won't really get the benefit of lower crude prices in quarter two. But that benefit will start flowing in the second half of the year. So suddenly you'll start seeing some optimism on some of these cement stocks because price increases should come through, demand should pick up, and petcoke prices are at multi-year lows. Your view on this space and what do you all prefer?
Okay. You see, in cement, particularly South and East are the two regions which have been weak. And this year we are also having the prolonged rains. Plus, there was a slowdown in the projects also around the election time. So 2Q any which ways is not likely to be anything great for cement companies, but incrementally your raw material scenario or the input cost for them, that remains favorable. That is one. Secondly, once you can say the weather stabilizes and the demand picks up, some price increases are likely, but it depends how much price increase they can hold on to. Because as we have seen in the past, the cement companies have been taking the prices up, and then the prices also tend to go down after a while. So all it depends on how the demand pans out. If the demand remains strong and the projects pick up, then we would actually see the prices remaining firm, and which in your benign input cost should benefit the cement companies. So we remain constructive on the cement companies. The overall real estate as well as infra demand should drive the cement companies. The three stocks which we have been very positive about, I think they are all large caps led by your Ultratech and Ambuja. And if you look at the Ambuja and ACs, the valuations of ACC are at, you can say, steep discount. So I think overall, the outlook on the cement companies remains positive. Near term, it could be a little jittery, but when little bit of optimism creeps in terms of any price increase or all, these stocks are very fast to, you can say, move up or react.
Yes, absolutely. That's a fair point to make. Amnish, one more stock, Interglobe Aviation. There's again favorable news coming in, and while we're still waiting for a fuel price cut in terms of motor spirits, I think on the ATF side, the cuts have really been coming through, so it's good going. Interglobe has had a great year, right? The stock's doubled in the last 12 months or so. Do you like the story here? Because, I mean, how else do you play? The fact that travel and tourism is booming, either you play it through an Interglobe or maybe through one of the hotel stocks. Your thoughts here?
You see, tourism is one space we have been very positive about, and I think Interglobe is, including, you can say, some of the hotel companies, I think it is one of the best places here. Now, you see, the markets have consolidated here. The market share is strong, but more important, you see, the ATF prices have come down. And with the ATF prices coming down, I think particularly in the festival season, it is a big positive. Because in festival season, your pricing power is better. And if your ATF prices are also benign, I think it gives them some leeway even to reduce the prices and improve the traffic. Or otherwise, if you can say you just hold on to those gains, your margins are going to improve. So I think barring, you can say, your volatility here or there, in the near to medium term, I think the outlook on the stock still remains positive.
Any look into SpiceJet? You had Plutus Wealth Management that bought a large chunk yesterday. I had spoken to Mr. Singh and I asked him a couple of questions. He said he's going to clear the GST dues, which he's done. He's cleared the employee salaries as well, which is good. But from a shareholder perspective, what's your view? They've got that required 3,000 crores. Is it enough to claw back some market share from that 2.5%?
It's difficult for me to say whether these funds will be enough or not. But having said that, you see, aviation today gives one of the best opportunities in the discretionary segment in India. And SpiceJet has been there, I think, for around close to 15-20 years. But somehow they have been not able to get their act together in terms of service, in terms of, say, pricing or routes and controlling their costs. Now, this fundraising has been happening at a very frequent intervals. I think once they clear their dues, and I think if they are able to increase their market share a little bit and improve their overall positioning, I think given the fact that there's a lot of scope in the aviation space, we have seen even some new brands in the low-cost airlines coming in. I think if SpiceJet is able to deliver, then I think there's a significant, I would say, scope for this company to improve. But again, the million-dollar question is that whether they will deliver this time around.
Yeah, their answer to me was that we did it in 2015 to 2019. They believe they can do it again. But we'll have to wait and see whether or not they can do it this time around.
Taking a flight, Nigel, soon?
No, I did take a SpiceJet flight 2 days before I spoke to Mr. Singh. And, I was coming from Ayodhya to Mumbai and that was the only flight. It was a pleasant one. So that's about that.
I meant a flight, not a spice, but anyway. All right, we'll take a quick commercial break here. Up next, we'll have our technical experts, Mitesh and Sudarshan, join in with some specific trading ideas. And, that tease at the bottom of the screen, that's a special conversation with the sort of top boss at Kotak Mahindra Bank. That's coming up at 9 o'clock. Stay tuned.
Because banks became 30% of the index. And you're seeing that getting corrected. That Kotak, HDFC haven't performed for the last 5 years. Again, great companies. But it's the excess of that which is now getting reverted back. And now they've become so hated that when will HDFC move? And there are memes on HDFC doing the round the way it was for ITC. And then you saw the way when ITC moved, it just doubled before anyone realized it.
You think...
so things like that tend to happen. I can't forecast what will happen in...
But you're very bullish on the financialization theme.
I am very bullish.
the magic wand that everybody is talking about at this point in time is AI and what AI can do, and specifically generative AI. How do you see that linking back to the efforts on the healthcare side, the innovations that you're working on? I mean, how transformative is AI likely to be, or are we on the cusp of seeing that kind of transformation?
Usually when you get new technology, it's applied to in the rich world for those who are well off. And what we'd like to do this time with AI is make sure, both in terms of discovering new interventions for nutrition or vaccines or drugs, and helping give people health advice, in voice in their native language, that we actually bring these AI advances to those most in need. I mean, after all, where's the greatest shortage of doctors? It's in developing countries. And so the foundation is leading the way by giving grants to various people and pushing this forward. Even for a topic as complex as nutrition, the AIs are going to help us understand things faster than we would without it.
If you could do a startup all over again and focus on AI, what would the niche be that you would like to address?
Well, if you could go back to my school days even, and then I was saying, hey, how do we make software as smart as human beings? And I was constantly thinking about it. I underestimated how long it would take, but here we are on the cusp of that. And so now the lens I apply is
Okay, welcome back. Flashes at the bottom of the screen, and this is important. SEBI is likely to come up with the final rules in terms of F&O trading very, very soon. This is likely to, this is source-based information, but that is what we at CNBC-TV18 are given to understand. Yesterday, for example, there was some chatter, and I saw some reports, etc., saying that the rules F&O trading curbs and the new regulation could be part of the board meet output, and we specifically said perhaps it will not, because it does not need to go to the board. But the final rules are very much on track, and they are expected to be released very, very soon now. Remember, the draft paper in terms of the SEBI regulation, the F&O proposals were put out in the month of July. And there were lots of things. I mean, with regards to one expiry per exchange per week, increasing the size of the lot, so that very small investors are not able to participate in the market, etc., etc. But those were the two big ones which got the maximum attention, and we'll put some of that out as well at the bottom of the screen. So interesting. As we're saying, this is expected very soon, and we'll, of course, tomorrow is a market holiday. So it makes it kind of a little complicated. We'll have Mitesh and Sudarshan join in and weigh in on this as well. Gentlemen, good morning. Great to have both of you here. Thank you very much for your time. Mitesh, why don't you go first? Set it up for us in terms of the Nifty. So again, what you said yesterday, till noon today, maybe a little bit of consolidation, downdrift, but all's not lost. Go on.
Morning, Prashant. So one, I think, we talked about two targets when the second target was around 25,800, which was tested. Kind of held on in the last 1.5 hours, despite the fact that there was good selling. And the other thing which is important to observe is that yesterday there was a gap down, which the markets did not attempt to fill. So technically, slightly negative event. I think if the gap down is not filled in the next few days, then there's a good chance of us breaking below 25,800, heading towards 25,500 and mildly lower levels. So the market could turn slightly bit more corrective, but we'll get that answer in a day or two. So what I would look for today is that we might have a very flat start, but keeping 25,800 as the pivot and making a stop loss below that by about 25-30 points. Longs can be taken, but I would be slightly quick to take profits around 25,950, 26,000 zone. I think is where I would want to take profits. In case we don't fill the gap, which is at about 26,150, 170 levels, then I think, we might even turn negative in the coming few days. But for the timing, keeping a close watch on 25,800 on the Nifty and hoping that this level will give a strong bounce back.
Okay, all right. We're just 10 points away from that. So let's see how today's session plays out. Good morning, gentlemen. Sudarshan, let me come to you as well. What's the call on the Nifty? Are you willing to buy now after yesterday's major drubbing?
Yeah, good morning. Well, yesterday the idea was to stay away completely, and that worked. Today it's different. The chances are that we are going to see some kind of a rally. It's difficult to quantify and say beforehand what rally would it be. Will it be mild? Will it be tepid? Or will it be significant? But the trade is to go long today. So in the morning, after an initial choppy period or whatever happens in the morning first hour, I would be willing to go long and keep a stop which is about 75 to 100 points below the opening price. And that's the trade for the day. Remember, tomorrow is a holiday, so traders should have become aware whether they want to carry the trade or not. That's a different point. But I think it's better to be long today morning.
Okay, so think long and be nimble. Got it. That's the advice at an index level. Gentlemen, we have to take a very quick break. We'll come back on the other side. We'll get some stock-specific trading calls as well. And then pre-open rates will be here. So we will do a quick check on that too.
If I was somebody young, sure, I'd compete with, OpenAI and all these people. But, now I'm in the stage of saying, how do I help other people working in AI apply it to those most in need?
As far as India is concerned, the role and relevance and the significance of India, especially as far as the foundation is concerned, and what you're hoping to do on the innovation side.
So India's the country the foundation does the most in. Other than the US, that's our largest group. We have a great team there. We work a lot with the national government and many of the state governments. And not only do we see in areas like nutrition or using ultrasound to detect a difficult pregnancy, we're doing a lot of studies with our partners there, which will have a benefit for India. But also, because the digital infrastructure in India is so strong, we can try things out there and take them to other countries. The digital infrastructure itself is a great example where the leadership has laid that foundation, and now both India and Gates Foundation are going to Africa and other places and saying, hey, you should do the same thing.
Was there a specific learning from this trip to India for you?
Well, it was pretty amazing in Odisha to see how the digital approach was connecting with farmers, that they had categorized which farmers were in which location, what were they growing. And so when they would see crop disease outbreak, they could notify them. If they saw weather coming, they could notify those farmers. If the market prices were changing, they could help guide the farmers. And so the digital revolution, bringing that into that agricultural sector, that was the first time I saw that at work. And it's being scaled up in India. Now we'll take it to the rest of the world.
News which just came out, government to government.
Welcome back. Just about 30 minutes to go before we hit the opening bell. Let's quickly go back to Mitesh as well as Sudarshan. Get some stock-specific trading ideas going. Sudarshan, what's on your list today?
Well, I have one short-selling idea, only one. That's Hero MotoCorp. Consider going short with a stop above 6,082. That stock had a very big decline yesterday, broke support levels. The other three are buying ideas. Granules is a buy with a stop under 516. IRCTC is a buying opportunity. It's coming out of a very decent base, stop under 903. And Canfin Home, which also had a breakout in a day which was not very good. So buy Canfin Homes with a stop under 876.
Okay, gentlemen, Sudarshan, morning and thanks for that. Mitesh, what about you? What are your trades?
Like yesterday, I have a mix of buys and sells. So Maruti is on the buying side with a stop below 13,000 for targets of 13,800 to about 850. Dower is on the sell side with a stop at 637 for targets of 600. A sell on HDFC AMC with a stop at 43.70 or just above it, and a target of 41.50 can be looked at. And a buy on IGL, which appears to be coming out for consolidation. Keep a stop below 548 and look for a target of 580 to begin with.
Okay. All right, gentlemen. Got it. Thank you very much for all the trading advice today. With that, let's move on and get you the promised exclusive conversation that we have. This is a CNBC-TV18 exclusive. MD and CEO of Kotak Mahindra Bank, Ashok Vaswani, says that they are engaging with the Reserve Bank of India almost every week in an effort to lift restrictions. Also, they expect to come out of the RBI embargo exceedingly strong. Listen in.
India has the best digital public infrastructure compared to any other place in the world. I've worked in every other place in the world. I've never seen anything like this, right? Now, obviously, that has led to the demand for digital services having gone up dramatically. And it's about the bank systems having to keep up pace with that. So we've been spending the last couple of months really focused on how we grow and make our systems foolproof. And like in every crisis, there's an opportunity. So we've taken this as an opportunity to really say how we'll really leapfrog and make our systems really resilient and relevant for the days to come. So I think we've made very, very good progress. Obviously, we've been in continuous touch with the RBI, sometimes even every week, updating them, getting their guidance, making sure we're on the right path. And I think we've made tremendous amounts of progress, and we'll continue to do it. You know, obviously the RBI is exceedingly important, but the customer, I've got to get it right by the customer.
Yeah.
I got to stay resilient for the customer. I need the best customer experience for the customer. And, you know, RBI has told me, you got to do it. So,
and I understand that some of this is confidential, some of this is, of course, up to the regulator to speak about as well. But from your perspective, and you said that you're engaging with the RBI sometimes even on a weekly basis, you know, again, for the benefit of our viewers who are watching, what are the steps? If you can give us some specifics, the steps that you have taken, what has that meant in terms of incremental investments, for instance, as well? What has that meant in terms of big changes on the IT infrastructure side to address some of the deficiencies that have been pointed out? And whether there's been an acknowledgement by the Reserve Bank in any form or fashion, formally or informally, on any of those measures?
So, Isha, actually the process started about 2 years ago when we started ramping up our investments in technology. And we spend roughly 10% of our entire OPEX on technology. So that adds up to a very significant sum. And we've been kind of growing that to about 11%. Since the order, we've doubled up on resources. We've used, you know, consultants and stuff like that. And we also, I think, went on record to say that the cost of the order would be something to the extent of about 450 crores on an annualized basis. And pretty much that number seems to be correct even now. But like I said, we've made tremendous amounts of progress. If you look at downtimes, they're down significantly. Customer experience has improved quite significantly. And when we come out of the gate, I think we'll come out of the gate exceedingly strong, both in terms of new products, but new customer experiences, much higher level of resilience, and really deliver great products and services for our customers.
You know, you talked about coming out of the gate and feeling that when you do, you will be much stronger. But is there any indication on how long it will take for you to be able to get yourself to come out of the gate, so to speak?
So that's not entirely within my control, obviously. But every single day, we're getting a little better, a little better, a little better. So the more time I have, the better the product and service when I do come out of the gate. And, you know, the RBI actually...
But surely you wouldn't want more time, you'd want less time,
absolutely, right? Absolutely. But all I'm trying to say is that we're utilizing the time well. And when we get there, we'll be out very, very strong.
You know, and you're right in pointing out that it is not up to you to decide when the restrictions will be lifted. It's up to the Reserve Bank. But is there any indication on the Grant Thornton audit and when we could expect that?
So GT started work, Grant Thornton Bharat started work pretty much immediately after we appointed them. they've done, they've kept pace, they've added resources to make sure that they kind of keep pace. And it's not like a one bang kind of, they'll issue one kind of report. We keep the RBI updated of the work they've done as well. So all of it is in work in progress and moving smoothly and nicely.
Okay. I also want to understand from you what the implications or the impact is likely to be as far as customer addition is concerned. For instance, FY23, 8.5 million customers, 8.8 million in FY24. A lion's share comes on board via the digital route. So what is the likely impact till these restrictions are lifted? And even post the restrictions being lifted, how confident do you feel of being able to better these numbers?
So that's actually a very, very interesting question. As you correctly said, we get a lot of our customers digitally, right? Now, what have we done since the RBI has asked us not to onboard digitally? We've changed our processes and changed it from digital only to assisted kind of journeys, where a human being assists the customer to do the journey and complete the journey. So obviously we can't do as much as we were doing digitally, but we are running at roughly 30-35% of what we were doing pre the order. Once this is lifted, I'm very confident that we'll come back stronger, because even now, while the order exists, the amount of traffic we are seeing on our websites asking for digital products, obviously we can't fulfill, but the demand still exists. So when we get out, I'm hoping we come out even stronger. And we've used this period not only to improve our technology, but, for example, use it to create new journeys on the mobile app, which will allow a customer, instead of taking one product, to take 4 products. So when we come out, we should come out with a much, much stronger proposition and a far more fulfilling proposition for the customer and a profitable relationship for the bank.
Does this in any way also change your plans as far as physical expansion is concerned? And I'll ask you that in the context of what you've been able to do in terms of physical bank branches over the last 4 years. 300 plus is what is the number that I remember. Does it change the strategy at all as far as physical expansion is concerned?
So Shirin, the fact of the technology order does not change our strategy. But generally speaking, what we've said is we are at about 1,948 branches as we speak. In the next 3 to 4 years, we would like to get to about 3,250 to 3,500 branches. And that is determined by where we want our branches focused, which geographies we want them focused, and how we are going to go it out. So we'll step up the pace of branch expansion, but that's not directly linked to the technology order. That is just a business strategy issue.
Well, you talked about branch expansion. Let me ask you about expansion from a different lens, and that is the M&A route. And, Kotak Mahindra Bank has not shied away from big ticket M&A. We do know that you are in the race for IDBI Bank. You did submit your expression of interest. Whether that finally converts into a formal bid or not, yes, no, maybe?
So look, we've never shied away from M&A. We are not shying away from M&A even today. We look at every single opportunity that comes along, and as and when the opportunity comes along and presents ourselves, we will evaluate it.
But does it still make strategic sense, IDBI Bank specifically?
I don't think it's hot and cooking right now. So I think when the time comes and there's talk about doing something, we will definitely look at it and evaluate.
The transaction is still in, it's quite literally, from all indications from the government, it's kind of moving forward at this point in time. So does Kotak intend to take it forward or not?
When the government tells us and the RBI tells us, we'll definitely have a look at it.
And you can catch that entire conversation tonight at 7:30 p.m. on CNBC-TV18. Ashok Vaswani, MD and CEO, Kotak Mahindra Bank. All right, with that, let's get back to the market. So the pre-open session has settled with a very minor 22-point sort of a dip on the Nifty right now. The mid-cap index is flashing a little bit of green. Back to our technical experts. Sudarshan, so what's the call now, 9:10?
IRCTC is a buying opportunity with a stop under 903, IRCTC.
Okay, all right. Mitesh, what about you?
I'll go with the buy on IGL for targets of 580.
Thanks, gentlemen, for joining in and giving us a 9:10 call. Well, let's hop across to Nimesh. He's here to tell us the standout brokerage report that he's picked up. Nimesh?
Hi, morning, Nigel. So today's standout is on Tech Mahindra. Just before the earnings season, CLS has to upgrade the stock to an outperform from hold, and they've raised the target price now to 1749. Now, CLS believes that the EBIT margin expansion is already underway. But now the next milestone would be the order book. Now, however, the growth is expected not before FY26. That's a serious expectation. Where the growth will come from? Financial services, healthcare, and manufacturing. These three verticals are going to drive the majority of the growth for Tech Mahindra going forward. EBIT margin, which the company had put out as a guidance for FY27 of 15%, that is not something which is achievable according to the CLSN note. And they believe that the recent ramp up in the EBIT margin does provide a further scope for re-rating. So on back of all this, an upgrade to an outperform on Tech Mahindra, and they've raised the target price now to 1749.
Okay, all right, Ramesh, thanks a lot for that. Well, I'm tracking two metal companies. One is NMDC, and I understand from my sources that NMDC has gone ahead and increased prices by 3 to around 400 rupees odd. The street was anticipating that price increase is effective from midnight. Now, keep in mind that this is after they've cut prices by around 1,000 to around 1,100 rupees from May 2024 onwards. The key reasons for the price increase: one is global prices have recovered smartly from $90 all the way to around $110 per ton. And the second factor, second half of the year is seasonally stronger. Steel production will pick up and they'll require iron ore. So that's NMDC in focus. We reach out to the management, yet to get a comment from them. Next one is Nalco. Kotak has done a bit of a turnaround. They have upgraded the stock to add from sell earlier. They've increased the target price to 235 from around 160 rupees. How does that happen? First, they've increased their EBITDA estimates for the next few years. The second factor is they've increased the multiple. Earlier, they were giving it a multiple of around 5.5 times. Now they're giving it close to around 7 times. And the big 4 points that they're focusing on is they've upgraded their estimates both for aluminium as well as for alumina. They've highlighted the ongoing tight supply in the alumina market, which will help them because they have a fair bit of exposure to the alumina market. And also the captive coal, that the blocks that got commissioned, they'll help them save some costs in this year, help them save some costs last year. And from here on, the savings will only go up. And finally, everyone's worried about volume coming about. But they are saying from the second half of FY27, the alumina refinery, the expansion will come on stream. And that's what will support volume. So tracking both these two stocks, Nalco and NMDC.
All right, metals have been, yesterday as well, they lost a fair bit from the day's high, but relatively speaking, they were the outperformers, in a down kind of a day. What do we have? First rates this morning, I think in the pre-open, we basically have got absolutely flat indications, 0.05% change on the Sensex, so nothing on the indices at least. So 25,820 is where the Nifty is starting at, 25,850 now. The Sensex is starting at about 84,425. So it's basically, I think 30, 40 point change, 50 point change now on the Nifty at this point in time. And a 200 point change on the Sensex. The Nifty Bank is starting with a 100 point bump. That's about 0.25% higher. Advanced decline is comfortably 2:1 in favor of what is higher right now. IT index, it's this complete flip-flop. We had almost 0.7% cut yesterday. We got a 0.7% gain today. So 42,265 on the IT services index. And the Nifty heat map is coming up on your screen. And here you've got about 20 odd names which are starting lower with the rest which are starting in the green. Surabhi.
Okay, the stock that Nimesh just flagged off, it's the best performer on the Nifty now. Tech Mahindra, gain of 2.5% on the back of that positive brokerage note, where the target price, I think, is about just above 1,700. Anyway, it's not just Tech Mahindra. Other IT stocks like Infosys and Wipro are also having a decent start. Reliance is recovering from the blows yesterday. A couple of the banks, Axis and Kotak Mahindra, on the upside of the screen. Basically, the screen is an exact mirror reversal of where we were at 3:30 last afternoon. A lot of these beaten down names are coming back, SBI included. And on the flip side, you actually have the metal stocks finally cooling off. JSW Steel, Tata Steel, Hindalco, they're all shaving off, not much, just about 0.5%. And quite a few of the consumer names like Britannia, Lever, ITC, Trent as well, they are on the way down. So some buying back in banks and IT this morning.
Well, the stock that's running away is Nalco, reacting to that news piece coming in, or the brokerage upgrade coming in from Kotak. Yesterday, to be fair, the stock cooled down from around this 217 odd mark. Today, It's popped back up to those levels post that big upgrade that did come about. The stocks that are getting it, hard on the chin, though, are these gold financiers. That's after, the RBI commentary that came out. They've said that they're seeing some deficiencies identified in select supervised entities, and they've ordered a comprehensive review advice for all of them. So on the back of that, you have Manappuram that's down 2%, Muthoot Finance is down 2.5%, though most brokerages indicate that they could actually relatively outperform, and they're already following most of the protocols that have been laid out. So I'll be interested to see whether or not some of these gold financiers actually recover from these days lows of around 2.5% to around 3% or thereabouts. Well, the other stocks that are moving around quite well, you have Balkrishna Industries that's up to around 1.8%. So good move is what we're seeing out there. SRF has come in for some profit taking. That stock's down close to around 1.7%. But it's a good start. We're back at around the 25,900 odd mark. The Nifty Bank is finding its form. It's up close to around 200 points. It's down 1,500 points in 2 sessions. So that one will have to find its form if the Nifty needs to recover.
On the gold financiers, look what's happening to IIFL Finance. And this is just sort of commonsensical thinking that because IIFL Finance has been given the green light and the all clear from the RBI right now, maybe the market feels that at least here there's no problem. You've just got a complete green signal from the RBI, so no issues. Who knows what's coming for the others, because this is a sector-wide advisory, so perhaps the others would be on scrutiny. But this is the one where there's comfort in terms of price action. Prashant is pointing out the price is not recovered at all. And now if the others would be under scrutiny, this one's got the green light. Maybe that explains the kind of, very different trades. Pull up Manappuram, Muthoot, and then IIFL Finance. Very, very diverging moves coming in right now on these stocks.
Absolutely. But I would say that the RBI, it's unusual to see this kind of an advisory, broad advisory from the Reserve Bank of India. Generally speaking, more regulatory scrutiny, essentially, for that particular segment is what is out there. The two biggest pure gold financiers, not pure anymore because they do other stuff as well, but they were at one point, Muthoot and Manappuram. Manappuram, of course, is more diversified. Both are lower, and some of the others, and some of the other NBFCs are higher. By the way, it's a decent lift now for the Nifty. We are up 85 points. 25,900 is where the index finds itself at, and it's not a bad-looking screen at all. So some recovery coming through after yesterday's slam dunk. Maybe just one or two other names, and then we'll go across to our guests. Z Media's, was up 10%, I think, yesterday. It's up another 7% this morning. Vamakshi, of course, was telling us what's happening here. 25 rupees on Z Media. Senco is up 3%, the gold jeweler. 1475 on Senco. Our Power, Reliance Power, is the top volume traded gainer. There is no sort of, the second name is far behind, just in terms of sheer volumes traded. And of course, I think as Surbhi mentioned, Tech Mahindra is up about 3% or so right now. On the downside, PNB is down 2%, and Saregama had a vertical rise. That's down about 2.5%. All day we were highlighting AstraZeneca. You heard from the management as well. It had a 2-day sharp run up. It's down about 3%. So in the context of the run, nothing much. Phoenix Limited is down 2%. That's been correcting lately. Motilal Oswal Financial Services is down about 2%. We'll keep an eye out on these brokers, Angel, Motilal, BSC. If these, as we just put out, the F&O rules are going to come out shortly. They're coming out soon. Incrementally, it starts to, first of all, we need to see if everything which was in the draft circular is part of the final rules. And second, how much of it is already in the price. But I think worth watching the space as we go forward. Let's welcome in our market master of the day. Shreyas Devalkar is head of equity at Axis Mutual Fund. Shreyas, good to have you with us here. Thank you for your time. Yesterday we had Mark Mobius with us, a veteran investor. And actually, even he was, and unprompted, by the way, it was not a question. Unprompted, he said that the SEBI F&O rules may temper overall momentum for markets. Otherwise, he'd make a case for 1 lakh on the Sensex by the end of the year. That's 15% from here. But of course, these rules may temper enthusiasm if they were to be harsh, and we will see how they are. But I just wanted your thoughts, Shreyas. We are reporting that they're going to be out very, very soon. What's your sense? What will it do?
So once actually they are out, let's comment on that once it's comes out with the clarity as such. As far as overall markets are concerned, historically also, you have seen that various regulatory changes have been there. But more importantly, it's about basic fundamentals about the stocks and overall economy. And in the flows, definitely it matters. So in my opinion, let's wait for the clarity on the rules, and then maybe we can take a view on that.
Okay. Shreyas, hi. Good morning. Good to have you with us. So a lot changing within the market, right? The texture, newer sectors coming back, forgotten sectors coming back in the mix as well. So you tell us, any significant overarching sort of thought changes to the strategy, and where would the preference be? The big debate right now is whether it's time to get off the industrial and the capex bus and get on the FMCG, IT, banking, that part of the market, that bus. So tell us what's the thought process?
So definitely your observation is right, and it is observed especially in last 3 months. You must have seen that some of the factors like quality has started doing well. Some of those factors and those indices has done well in last 3 months. So since your observation is there on that part, so underlying parameters and underlying sector preferences definitely is visibly changed. In this, then we get more into it and try to analyze where and why. Definitely, as you are highlighting, that industrial sector has had a very sharp run by TD election, and that's where it had to cool off some time. And probably since the trigger behind for that sharp rally, that sector has seen cooling off in last 3 months as such. With a lot of liquidity in the market, definitely it has found its way in pharmaceuticals, IT, and FMCG, as well as private sector banks. So it has gone in broadly in these 3-4 places. Now coming to it fundamentally, as far as industrials are concerned, I think the growth remains there. It's the valuation which is a concern. There are no indication that there is any slowdown, because the industrials has been more about power sector, defense sector, and thirdly, railways in that order. So in my judgment, power definitely is a global story. Defense also worldwide, everyone is spending on that. It's a valuation which is where the debate is going on. Secondly, on the where the money is going, it's IT as well as banking. If you talk about those sectors, then definitely in some of these sectors, especially IT, FMCG, etc., then the bottoming out is clearly seen. So there are no signs of improvement, but there has been earning cuts multiple times in last multiple quarters. And earning cuts, the halt of that earning cut has definitely given some hope of revival in those sectors. So we will have to watch out for these results as well. Fact of the matter remains that the volume growth in both the sectors remain in mid-single digit. So that's where the big call on these two sectors will be on. Pharmaceutical definitely doing well, especially both on the domestic front as well as from the US front. And so we are also positive on the pharmaceutical in that sense.
All right. Hi, Shreyas. Good morning and good to see you in. Nigel on this side. The big theme that has played out is the metal stocks, and valuations is not really a point to debate out there because they move with momentum. And the momentum seems to be with the bulls. It's a tricky space though, because if China actually doesn't come out of this rut that we've seen, then you'll get stuck in these names, given the capacities that are there in China in comparison to the rest of the world. How are you all placed out here? The balance sheets of our companies are in far better shape, but they've run up considerably as well. Your view?
Definitely here there are a lot of news flows always are around. So now if you look at the steps which have taken which are being taken in China, so they have the bigger trouble has been about the real estate. So they came out with the policies first on the monetary front, and monetary front policies they have been doing for some time. It's not that something new they have done this time around. But in addition to that, they have also tried to to take some policy measures on the fiscal front as well. Now, individually, one may try to say that, yes, whether it is sufficient or not to revive the big economy or the big real estate sector in China. But point is, the measures are being taken. There is the big Politburo meeting which is going to be there in next month or this month actually, and so there are indications that yes, they are serious about reviving it. So if there are more fiscal steps are also, if they are going to take, then definitely there should be good positivity around China economy, and obviously in India, the metals is the big play as far as the Indian listed space is concerned.
Just to, Shreyas, hi, just a quick word on the power space here, which has been, generally, you kind of ask people what they like, what they don't like, and, power will fall in that comfort zone where people are comfortable playing it through different ways, and it's a big value chain, starting from financiers all the way, of course, to product makers, EPC companies. What is your comfort level here, and what's the best way to get exposure in your opinion?
So obviously in power, there is asset owner, which are utility companies. In that also, there is generator and distribution companies. Then there are capital goods companies. And obviously the financiers you have highlighted. Historically, when it comes to any capex stories, the capital goods companies have been better off. The picking order always has been capital goods first, and then utilities, and then the financial. And it is more to do with the financing risk. The first one is balance sheet light, and you go down, the balance sheet becomes more balance sheet heavy, and that's where it has been the preference from the quality point of view.
Okay, quality point of view, fair enough. Shreyas, by the way, do you own, without getting into specifics, do you own PB Fintech in any of the portfolios?
So if you see our last disclosed portfolios, then you will observe that.
Okay. No, so you must have heard news flow around this one, right? And we had the management join us yesterday with regards to the new investment they're making in a new subsidiary up to $100 million. Stock corrected last week, a little bit of recovery, but not much. Just wanted your broad thoughts on how you think about this new development. It requires a board approval, the management said, but doesn't require a shareholder approval. As a shareholder, how do you feel?
So without getting into the specific of this company, so if you just notice, there has been multiple such cases historically. And the parameters obviously always you use is in such cases when there is a diversification, where shareholders may think that whether the diversification is right or not. From the shareholders' point of view. So historically, there has been multiple cases, and we use certain parameters for that, whether there are guardrails or not, whether it is and how the management will take up with that, the bandwidth as far as bandwidth is concerned. So we have used certain such guardrails earlier as well, since there has been multiple cases as I highlighted in this space.
Okay, all right, Shreyas, thanks a lot for joining in and filling us in with all of those details, and wishing you all the best, and look forward to chatting up with you soon. By the way, keep your eye on the bottom of the screen. Welspun Corp, they have bagged an order worth around 2,400 crores, and it's come in from the United States, and I think orders from there haven't been coming about. So that's good news actually for them. The stock as it is I think it's at a fresh 52-week high. But as we speak, that's a big size order that's coming in for the company. Should help them in terms of an outlook, because the US otherwise, there was lack of orders coming in from there. Well, let's move to Bajaj Auto. They've reported a healthy performance actually for the month of September. Their total sales witnessed a 20% surge, with domestic sales up 23% on a year-on-year basis. Exports also saw a double-digit jump. Mr. Rakesh Sharma, the ED at Bajaj Auto, joins us on the show. Hi, Mr. Sharma, good morning, and good to see you in as always. Well, tell us about the export market first up. You had indicated in the last time we spoke, with regard to the August data, that Nigeria was seeing a recovery. I think you briefly mentioned 20,000 units. For September, was it even better? And do you expect exports to improve from here on?
Good morning. Yes, as I mentioned, there is a steady improvement in Nigeria and also, of course, in exports. You rightly recalled it was 20,000 last month, and this month we have closed at 25,000. So that's a smart recovery. It also indicates, growing confidence of the network for stocking up for the upcoming season. October to December is a slightly better period in Nigeria. And that contributes to a steady upward growth trajectory for exports as a whole. As we've been saying, that month on month, we expect to see about a 10% improvement in exports. That's what we've been clocking. And I think that hopefully should continue.
Okay. Good morning, Mr. Sharma. Good to have you on. So it's been looking fairly good, I guess, both on the domestic side as well as the export front. On domestic, if you could throw some more color. I mean, we're now getting into the festive season full throttle. So what are the expectations? What are the kind of inventory levels you're looking to maintain? And what are you expecting from the season this year?
Well, the domestic business is really getting up for the cracker of the month, which is October. But the highlight of September is our green energy portfolio, which comprises of obviously the electric two-wheeler Chetak, the Yulu micromobility two-wheeler, and the electric three-wheeler, as well as our CNG bike. All of them are combining now to be almost 40% plus of our domestic revenues. So that's a really, big chunk on green energy, which is continuing to do well. On the motorcycle side, the stocking up has been done, and we are expecting about 6 to 8% underlying growth in October. The like-for-like comparison in September suggests that the market is, even Stevens. It's not in growth mode, but I won't read too much into that because consumer psychology is such that as you get closer to festive, people tend to postpone purchase to the festive period. And we think that it should have good 6% odd growth. And that the indications, again, are confirming that will be led by the top half of the industry, which is the 125cc plus. That now is accounting for almost 53% of the Indian industry, 47% being the 100cc category. And we continue to see the top half powering away and driving the industry growth.
Got that. Mr. Sharma, hi, good morning. Prashant here. I just want to take one bit on the electric vehicle side, sir. I think in the month of September, you have become the biggest EV player, counted by everything. I mean, two-wheelers, three-wheelers. I think you've surpassed 25,000 units in sales. So congratulations for that. In terms of specifically two-wheelers, I think the number is about 17,570. So, a competitor is still slightly ahead. Just wanted your thoughts. What should we expect on the EV front going forward, especially on the two-wheeler side? I think market share has also been improving, close to about 22% now. What should we expect here?
Well, on the EV side, you got it's not just about the September outcomes, which of course put us at the number 2 position just for the electric two-wheeler, a few thousand units behind leadership numbers. But one has to see the momentum. Just in April, we closed April of this year at about 11% for Chetak, but it has now surged to 22%. So besides the number 2 position, we are also looking at the momentum, and we expect to carry this momentum forward, particularly into the important month of October. We are also lining up new launches, etc., which will hopefully put us in a pole position by the time we close the year. So that's looking good. On the E3-wheelers, there also, I think we are neck to neck on leadership position. certainly in the passenger segment, but we combined electric passenger and electric cargo. There too, I think there is the business is enjoying solid momentum for growth and for leadership.
So from 11% in April to 22% now, and you said you expect to continue momentum. Would you want to? You'd want, targets can be, of course, you'd want, as much market as you can. But are there any sort of targets here by the end of this financial year? Where would you like to be?
Well, of course, we have internal targets for what kind of volume we are aspiring to. But I cannot, and of course, we want, like I've always been saying, a leadership position, a podium finish, then a better podium finish and all that. Any business likes to have that kind of ambition. But what exactly the market share settles at is also a consequence of what competition is doing. So let's see how that pans out. But we expect to continue this momentum of growth.
We spoke to Bhavesh of Ola, and he said that he believes that he's going to be the leader. But you're clearly narrowing the gap out there. So pole position is something that you're tracking as well. You have narrowed the gap down considerably from 11%, and I think 35% plus is what they were at. Now you're down, I think, to around 500 basis points, the difference between both of you all. So by the end of this fiscal, Mr. Sharma, you believe you all will be in pole position?
Well, like I said, our ambition is to continue to grow the business. When I look at it purely as a EV business unit, though, as you know, we are, we've got EV, CNG, ICE, we are a full portfolio company. But when I put on the lens, and we put on the lens of just electric, our enemy number one is the ICE scooter. So, if we continue to win and cannibalize ICE scooters, then I think we will do at a faster rate than anybody else. I think we will continue to power ahead as we are doing. That is when we are building our product portfolio, when we are building our propositions, the key thing which we have in our mind is what can tempt the ICE customer to move from ICE to EV. And as you know, we have not been in scooters. So this is an absolutely new business segment for us.
No, absolutely. I mean, Chetak on the EV side, those numbers are nothing to scoff at. It's very, very impressive performance. In fact, as we promised our viewers, it's the auto sector full throttle. I think in the next couple of seconds, we'll also have Mr. Hemant Sikka join in from Mahindra and Mahindra as we wrap up the conversation with Mr. Sharma. Oh, okay, Mr. Sikka is joining in. Mr. Sikka, allow us that one last question. We're discussing two-wheelers with Mr. Sharma, and then we come to farm equipment and tractors. But Mr. Sharma, just to complete the point, so we've discussed a lot on the volumes front and the numbers are looking better. Just a word on pricing and the competitive intensity as we get into festive season full throttle. You said we need to see what will it take to shift an ICE customer to EV. One of the triggers clearly is discounting and attractive pricing, right? Now, I didn't even know that you could buy two-wheelers online, but apparently you can buy two-wheelers on Flipkart. And there it seems that there's a lot of very interesting freebies, discounts that are being given out. So is that just routine online versus offline discounting, or is there more to it? What should we expect in terms of pricing and discounts this festive season, given the competitive intensity?
Well, people move categories and you build market positions and growth on the basis of fundamentals. These are very transitory things, and it is understandable. It's not just about auto, but the whole milieu is like that e-commerce platforms, other categories, phones, this, that, everyone is wanting to take advantage of this month of festive, which, accounts for about 22 to 25% of the annual sales. So one can understand that. But it just advances sales, I must put that. Now, what happens is our approach on this is that we like to stick to the fundamentals, and we won't draw first blood. But I mean, if there is a gunfight, we'll not go to it with a knife. So, one does end up participating. But having said all that, it just serves to advance the customer, the sales. but the customer expects it because that is the whole atmosphere during the festive. One participates in it. But once the dust settles down, it's back to good product, proposition, and customer care.
You've given us a headline.
Won't bring a knife to a
gunfight. That's the headline, sir.
By the way, Surbhi, I didn't know that you said you could buy a two-wheeler on a e-com
on Flipkart,
platform.
yes. I don't know about the others.
Buy it on Blinkit.
By the way,
10-minute delivery.
By the way, we pioneered that with Amazon. Chetak was the first one to be available on Amazon.
Wow. All right. We wish you all the best of luck. Thank you very much. Great conversation as always, Mr. Sharma. Appreciate your time here on CNBC-TV18. Well, as promised, Mahindra & Mahindra September order sales have come through. Tractor sales are in line with expectations. Farmer sentiments improving owing to normal rainfall and actually great rainfall. Management expects robust demand for tractors going forward. We have the management, Mr. Hemant Sikka, President Farm Equipment Sector at Mahindra & Mahindra, joining in to take some questions. Mr. Sikka, good morning. Prashant here. Thanks for your time. You've been sort of, in a way, conveying to sort of investors at various forums that the tractor segment is looking a bit more robust going forward. We've spoken here in the past about the full year guidance, and you've said, well, it's got upside risk from that 5% number. And you said that we will revise it. We'll take a look at it once again after the second quarter results. Would you like to do it now, sir? I mean, the quarter is behind.
So, Prashant, first of all, I mean, we are seeing very strong momentum in the market. And clearly, this is on the back of some very good rainfall. Of the 36 agri-climatic zones that we have in the country, 33 zones have got either normal or above normal rainfall. And even in terms of, if you see the state stratification, for only the states of Bihar and Punjab do we see little bit deficiency in the rainfall. But broadly, all the agri states also have very good rainfall. So this is giving us a very good momentum. In fact, we are for the first time seeing a very strong momentum even play out in the Shraddh period. Mostly you would see, Prashant, that people generally don't buy very expensive assets during this period. But if you see the average of the last 5 years, we are seeing clearly about 10 to 12% better sales in the Shraddh period. And we believe that as the Navaratri period starts in a couple of days, this momentum will further build up and we are heading into a very good festive season. In terms of revising the guidance, no, we will still maintain at 5% level because we want to see through the festive season and then maybe take a call at the end of Diwali. That would be our view.
Q2 is already panned out much better than what you thought, right? What you imagined at the beginning of the quarter, isn't it?
No, QT actually is broadly kind of flat. If you see YTD industry is flat, at Mahindra we are up 4%, so we have gained some very good market share YTD so far. But most of the heavy lifting, Prashant, will happen in H2 of this year, and that would give us an overall 5% growth rate.
So 5% would be the overall FY25 growth in the tractor segment that you'll play out. I mean, what more can you tell us about the pickup? Because if you look at, say, the month-on-month performance, and it looks really impressive, September over August. I mean, how are you expecting the coming months to play out? And do festivities matter? I mean, are you expecting a bigger pickup in the festive season, or will it be more linked to the next crop cycle?
So, Surbhi, first of all, in tractor, we should not compare month on month. I mean, auto, you can compare month on month, but tractor goes with the cycle. It goes with the cropping cycle. So, it is always better to compare a YOY scenario. But even on a YOY scenario, we're expecting the industry to start a very strong growth in S2 of this year. Since first half was kind of flat, most of the growth has to come now in the quarter 3 and quarter 4. We are looking at a very strong momentum. We already seen momentum build up in the short period, and we are seeing the momentum to further multiply in the days to come. And so you are right, festive do play a very significant role in the sales of tractor. Farmers try to time it with the cropping cycle. So as the harvesting, in a couple of weeks, the harvesting will start, and this will lead to then a very quick sowing of the Rabi crop. The good point is all these monsoons are giving us very good reservoir levels. I mean, just to share a data point, the reservoir levels are 13% more than the long period average. Now, this is a very strong momentum building factor for a Rabi crop because Rabi crop depends on what is the moisture in the soil and what are the reservoir levels. So if you have a back-to-back good crop, Kharif is already kind of done. The sowing has been at 110 million hectares. So overall, Kharif will be a very good crop. We are seeing paddy, oilseeds, pulses, sugarcane, maize, bajra, all the crops are going to hit a very bumper output this year, except for cotton, which is below average. So overall, on the back of very good kharif crop and a likely very strong rabi crop, the momentum in this market is very positive, and the farmers usually try to time their purchases with festive and with harvesting cycle, because that's when the money flow happens. So clearly, you are right, the festive plays a very critical role.
So, Mr. Sikka, let's talk about, just to understand the relative position where we are at in tractors. With this 5% growth this year, where will you be vis-a-vis the peak of the cycle? I mean, I don't know which period would be the peak and how much above or below, is M&M and in the industry overall, and what should we expect in the near term?
So we would be 2% below the peak as an industry. So we are almost like at that level, which was the all-time high. But Surbhi, I would suggest that we should not look at peak as the peak. I would say that was an all-time high is the right phrase to use, because I believe there is still a lot of under-penetration in the tractor industry. We should never look at units sold. We should look at what is the horsepower per hectare sold. And in terms of horsepower per hectare, I think there is still a lot of catch-up to do in our agri economy. And that is what is giving us confidence that there are still a lot of headroom for the industry to grow in India.
Horsepower per hectare, Mr. Sikka, and where do you see it headed, since you're optimistic on that particular parameter? If you could give us some sense so we understand better. And also, what about your market share? What was it at the start of this fiscal with this 5% growth that you're guiding for? What do you end the year at?
So market share so far, Nigel, has been holding very well for us. So we are, right now for September, I can't talk the number because the industry data is still not out. But YTD August, we were 180 bips higher than last year. Last year, our market share was 41.6, and we have added 180 bips to that. So on market share, I think both our lead brands from Mahindra and Swaraj are doing very well. All our new products have been very well established. For Swaraj, we have come up with a new tractor called Tractor. For Target, we have got a new Swaraj, a completely new styling with better engine efficiency already into the market. On Mahindra side, we have launched Oja as a lightweight tractor brand. So all these products are going into the market. We are getting very good feedback from our farmers, and that is helping us gain a market share in this. Now, coming to the horsepower, currently, Nigel, we have to do reverse calculation that if we have to feed our 1.4 billion population, and we are seeing that the population still continues to grow. So there is a paper done by the government of India which says that by 2030, the horsepower per hectare requirement will be about 4 horsepower. We are currently at about 2.6. So even if the industry continues to grow at 7.6 CAGR, which was a CAGR for the last 15 years, we will have to move from the current population of about 8 million to almost like 17 million. And if we do this calculation, by 2030, the industry will reach only at a level of 11 million. So that means there is so much headroom for the industry to grow. We are looking at units, so clearly number of units, India is the largest market. But in terms of horsepower per hectare, I think there is still a lot of room to grow the industry.
All right, Mr. Sikka, just one quick question. Domestically, you've explained things to us. Exports, very small part of your business. On a low base itself, on a year-on-year basis, I'm comparing September this time to September of last year. I think it's down by close to 10%. Could you explain that to us? Year to date, you've done well. Year to date, you'll have done well on exports. But just for September, what happened?
Yeah, so year to date, just to get the data point across, is 36% growth. We are
yes, 36% growth year to date, but in September to September, I think it's down 9 to 10%. So explain it to us.
Nigel, I mean, September has been a slow month for us in exports, and there are two factors to it. One is that in our neighboring countries, there are some geopolitical challenges being played. These are all very big markets for brand Mahindra and Swaraj. And even in the US market, we are seeing that 11 quarters of continuous degrowth in US tractor industry. Now that is, we know the factors that is on back of very high interest rate cycle, and people were waiting for Fed to start cutting. And now that has happened, I think the transmission will take 3-4 months time. And even in our US, which is our second largest market after India, the sentiment will revive. So that will again give us growth getting into our Q4. But I think for next 3-4 months, the exports might be a little slow.
Okay, all right, Mr. Sikka, we will leave it on that note. Thank you very much for joining in and providing us all that perspective on the farm equipment side. Appreciate you being with us. Well, with that, we have to take a very quick break. Come back on the other side and the corporate conversations continue. We'll connect with Rishi Raj of Max Estates to talk about the company's recent announcements of clocking pre-sales of over 4,000 crores for their Gurugram project.
US and India to set up a semiconductor fab unit in the country. Right. There are elements of technology transfer, etc. That's the cutting edge semiconductor and sort of plans to localize production. Right. I just wanted your thoughts.
I think it's great. I would love to, India's quote a non-aligned nation, and I don't think we should be asking to align, but I think it's great that we're reaching out to each other, helping each other, investing in each other, and I would love to see far more of that. And this has two elements. One is the national security part, which of course all countries have interest in. And the second is just, better economic relationship.
Over the last 2-3 years, we've seen the rise of the so-called industrial policy across the world. Yeah. National security is being prioritized, as you said. Do you see this as part of that, in the context of that?
Yeah. So industrial policy, I'm a little cautious about. I think to combat some of these things and to do things in your country's own interest, which are hard to do economically, you're going to need some economic policy, industrial policy.
Welcome back. Well, the corporate conversations continue. The next company on our radar is Max Estates. Now, their Gurugram project witnessed pre-sales booking value of 4,100 crore within 30 days of launch. To talk about this, and of course, a lot of fundraising going on now within the company as well. And the growth outlook, of course, has to be discussed. We have Rishi Raj, Chief Operating Officer, Max Estates, with us. Rishi, thank you very much for joining in. Okay, so lots to talk. What do we start with? Let's talk about the response that you've got to this Gurugram project. I think you've already revised the gross development value from 4,000 to 4,800. So is it fully sold out? And would you be revising the numbers even higher? How strong is the demand in the region?
Thank you, Surbhi, for having me in your show. Estate 360, just for your audience, is Delhi NCR's first and truly first intergenerational residential development at scale. The response to this product has been phenomenal. As you said, pre-launch, we gave the guidance of 4,000 crore of booking value in FY25. Given the response, we have already booked 4,100 crore and collected 400 crores from that booking, which is roughly 10% of the booking value. And given the response, we are revising 100% booking value guidance to 4,800 crore to be done in FY25. So this is, in summary, the response to Estate 360. Over to you.
Been fully sold, or do you still have some units remaining?
We have some units remaining. That's why the total 100% booking value guidance is now 4,800 crore, of which 4,100 crore has already been booked, which, given the market, is a phenomenal response.
Okay. Rishi, hi, good morning. Prashant here. So what does that do to overall pre-sales for the year, FY25?
Right. So if you look at, Prashant, we entered residential a year back in FY24 with our launch of Noida project called Estate 128, which was 100% sold in July 2023. Booking value was 1,800 crore, pre-sales booking value. For this year, the total guidance is 4,800 crore from this project, and we expect to now launch Tower 4 in Estate 128, which will add to another 800 crores of booking value. So total booking value will be in the range of 5,500 to 5,600 crores.
Okay. So pre-sales of 55 to 5,600 crores in FY25, right?
That's right.
What will, and as you said, you've just entered the residential space, and you've got a strong pipeline on the residential. We'll come to commercial in a bit, but on the residential side, you've got a strong pipeline. What are the numbers going to look like in 26, in 27? Because, I mean, I'm assuming you're sort of obviously planning ahead.
Absolutely. So Prashant, again, just to give a bit of context to your audience, if you look at Max Estates, today we have a portfolio of 12 million square foot. I would like to break that portfolio for the audience. 2 million is delivered, 6 million is under construction, between 2 commercial and 2 residential, Estate 128, Estate 360 that we just launched, and another 4 million is under design, which we have already acquired. And our guidance to the market is that we will continue to add at least 3 million square foot every year to our development pipeline. And that's where the focus is going to be, which will help us increase our booking value from where we are and grow that booking value in coming years. I'm not giving any specific guidance, but needless to say, with this operating guidance of adding 3 million, 2 million in residential and 1 million in commercial, that booking value is going to grow year on year. Also, what I would like to add is of this 3 million, 1 million is roughly commercial on an average. Today, we are sitting on 4 to 4.5 million square foot of commercial. Our annuity rental income today is around 125 crores, but when the entire commercial portfolio, which we already have, is built and leased, this has an annuity rental portfolio potential of almost 450 to 500 crores, which will further grow as we add to our commercial portfolio.
By when is this, Rishi? 450 to 500 crores?
That is in next 3 to 5 years.
Okay, and you didn't answer the question on pre-sales in 26 and 27. As you launch new projects and you come up with these, you put them out in the market. What will the numbers look like? If, of course, the demand for luxury real estate stays strong. Of course, that's a big if, and we'll see. But what will the numbers look like from 5,500 crores in 25? Where do you go next year?
Yeah, as I said, not giving any specific guidance, but needless to say, if you look at what we already have in the portfolio, and I'm not talking about what we will be acquiring through the QIP capital and the capital that we have raised, we already have acquired 18.23 acres of land contiguous to Estate 360, which has a development potential of 4 million square foot and which has got total gross development value potential of 9,000 crore. So that we will be launching that in phases starting next financial year. And to that, we will be adding additional acquisitions that we will be doing in the residential space, which will grow this booking value in the coming years.
Okay. Rishi, that's on the business side. Let's also talk about this QIP that you've done. I think you've raised around 800 crores. So tell us what's the end use of funds? And also on the project side, I mean, the investments that you've got from, Max Life, New York Life. Will we see more of that? Will we see more of that in projects? Are talks underway? So give us the thought on funding, both QIP, the money that's coming in the company, as well as more such sort of equity tie-ups on a project-to-project basis.
Yeah. So Surbhi, we have built now a corpus of 1,300 crores, 800 crores through QIP, 150 crores through pref allotment, and New York Life has invested 49% in 2 of our 100% leased commercial office tower, Max Towers and Max House, which gives us another 400, to be precise, 390 crores. So this corpus of 1,300 crore will be largely deployed, predominantly deployed in adding to our development portfolio beyond 12 million square foot, meeting our guidance of 3 million square foot addition every year. So this we expect to deploy over next 12 to 18 to 24 months at max. And as far as New York Life is concerned, we are delighted to have New York Life, not just as shareholder in the list co, 23-24%. New York Life is our platform partner for entire commercial office portfolio. With this 49% acquisition of Max Towers and Max House, in entire commercial office portfolio, now they are 49% partner at a SPV level, at a project level,
And New York Life is very bullish on India, real estate, and our partnership. And we expect to grow investment from New York Life as we expand our commercial office portfolio.
You know, Rishi, just one last bit. You know, the actual you'll start booking actual revenues on the P&L only FI. I mean the full flow will only start FI. Yeah, 27, 28, right? That's when the numbers will all start to show up, right?
That's right.
So do you have any sense on what those numbers will how they will progress? I mean, just a broad sense. You're not giving near-term guidance. Maybe you can look far into the future. That's not near-term. So, yeah, go on.
So if you look at what we have already done, if you look at our annuity potential of 450 to 500 crore, if you look at the booking value that we have already announced, 1,800 followed by 4,800 to 55 to 5,600 crore, all of this will start translating into revenue once the possession kicks in. So from a 3 to 5 year perspective, one can look at a total top line in excess of 7,500, 8,000 crore, roughly broadly speaking. That would be a rough guidance from a top line perspective.
So we're in 25, 26, 27, by FY 28?
29, 30.
Okay, FY 29, FY 29 or FY 30?
Yeah, FY 29. Yeah, FY 29.
Okay. 7,500 to 8,000 crores in top line, basically, right?
Correct.
Okay, got it. Rishi, great speaking with you. Thank you very much for your time. Appreciate it here on CNBC-TV18. Good luck. And, we'll continue to track sort of new project launches and further developments at Max. I think we want to take a quick look at the market as well. We were up about 80, 90 points when we started. Then the market went absolutely flat. And then there's been a bit of a recovery. So all of it in the last 1 hour or so. Mitesh is back with us. Mitesh, what does one do?
So, Prashant, we are still, managing to stay above or just keep our neck above the levels of 25,800. If that doesn't get broken, I'll still be okay. Though on the stock side, like in the morning I mentioned, we are trading with a mixed bias. So we have I right now have both a buy and a sell call. On the buying side is Chambal Fertilizers. The stock is up about 3%. It's given a good breakout from a ranged movement. So buy here with a stop at 534. Look for targets of around 575. And after a very good and a long upside, I think Jubilant Foods is showing first signs of correction in profit booking. So we'll recommend a trading sell with a stop at 677 and a target of around 630 on the downside.
Okay, got it. So those are some of the trading calls that Mitesh has. Market's completely flat. I mean, from that little bit of red, now there's a minor 20-point green coming through. Mitesh, just a word on technology. Actually, tech is the one solid space today. Tech Mahindra obviously has, there's a positive brokerage note on the fundamental side that's helping the stock. Infosys, quite a few, Wipro, all these names are up and about. So if you could just tell us if you see a trade anywhere and specific levels on Tech Mahindra.
So two things. One, I think, Tech Mahindra recently has had two swing rallies and around 1660. So from a trading point of view, I think if somebody's holding, I would want to suggest taking some profits around 1660. A close about that will be a fresh breakout, but I'm not sure, given the fact that the indices are not showing strength, whether we'll get a breakout or not. So one, try to take profits closer to 1650, 60 range. And above that, we'll take a long position with a 30, 35 point stop loss for another 100 points on the upside. And within this space, I think what is the strongest to me is Coforge. I think in this entire, last few days of tech pullback or correction, mild correction actually, Coforge was one stock which was sideways and is now trying to break again on the upside. So if I was to buy, I would buy Coforge once it crosses 7100, take a 100-point stop loss and look for a rally of around 7500 or so.
All right, Mitesh, we leave it there. Thank you very much for joining us. Appreciate you coming on with some of that perspective on markets and specific trades as well. We put the focus on commodities when we return. Manisha is going to be with us. Stay tuned.
for rare earths and things like that and lithium. Every country is different. So the national security needs of India are going to be more around energy. I think for everybody it's going to be semiconductor chips. So I do think that's industrial policy. I would caution industrial policy when it's used for regulations, bureaucracy, politics, votes, social, and it doesn't have the twin of permitting. It's not going to work. So you got to be a little cautious when you use it. But yeah, we're going to have some. And like I said, I think it's very important that America and India have a great economic relationship.
Would you agree, though, that in the former part of what you described, industrial policy is kind of taking the lead? Businesses and who you align with, who you want to do business with, building supply chains. A lot of that is now, it seemingly is led by that. I mean, what governments really want to do.
Well, no, it's two different. Governments have always negotiated economic arrangements, stuff like that. If you look at the United States, the industrial policy is a very teeny part of the economy. So it isn't like it's taking over the economy. Right. I think in other parts of the world, it's obviously a much bigger part of the economy. So, but yeah, nations, because of national security and because of what some people might consider unfair competition, there will be forms of industrial policy. If I was a government, I'd be very, very careful. It should be very targeted, very specific. It shouldn't be to protect local industry. It shouldn't be to just create jobs. It should be for a very specific reason. But you're going to see it, and hopefully it's well done.
Let's talk about the big event from last week, which is interest rates coming down, the Fed cutting by 50 basis points. Do you think it was a bit excessive, given the fact that GDP is expected to grow at 3%, the stock markets are at all-time highs? I mean, there's no issue with credit spreads, etc. Indicators are all pretty good, and you get a 50 basis point cut. What do you make of it?
I think it's a lot more ink than it deserves. I think they raised rates to 5 very quickly. They were a little late, which they acknowledged. They raised it to 5. The economy is slowing down. Inflation is coming down. And relative to inflation, even if inflation is 3%, the 5 is maybe a little bit too high. So they made a big step to get it close to what they think it might be. They've got plenty of room to go down, and hopefully we'll continue to exhibit growth with inflation coming down. I'm a little more skeptical than other people about that, but it is happening, and they're just reflecting reality.
Yeah. You've been cautious in the past about prospects and said, well, one has to be prepared for things going wrong. Are you a little more positive now? I mean, this is not a cut when you're facing a recession or things are looking weak. It's like a happy cut. So, I mean, are you a little more...
So my caution is all geopolitics, which may determine the state of the economy. But it's really the geopolitics that these things, they're getting worse, they're not getting better. There's chance for accidents in energy supply. God knows other countries getting involved. You have a lot of war taking place right now.
Welcome back. Let's now shift the focus to commodity markets. We have Manisha joining in with all the action. Manisha, so what's top of mind for you today?
Well, I'm looking at the crude oil prices, Surabhi, because if you look at the month of September and the quarter gone by, precious metals and industrial metals have done very well. But you can't say the same about the crude oil prices, which actually put in a decline of 9% for the month of September. And with that, this was the largest monthly decline since November 2022. And not just for the month. When you look at the previous quarter, the crude oil prices have seen a decline of nearly 17%, which has been the biggest quarterly loss, by the way, in last 1 year as well. Well, what really has been weighing onto the market is the China manufacturing numbers that came in yesterday, showing that there has been a contraction for a 5th straight month for the month of September. Also, Libya has been saying on and off that they would resume and start exporting 500,000 barrels per day as early as next month itself. Saudi Arabia has been coming out with statements suggesting that they will abandon the unofficial price target of $100 a barrel and they are willing to work with something lower. And then OPEC and allies already once have delayed their output increase of 180,000 barrels per day. That comes in on the market from the month of December as well, and that's exactly what the street is looking at. The reason that you're looking at $70 holding for the Brent prices is, one, there are escalating tensions in the Middle East. There is every day one headline coming in from there, and then the US crude stocks also seems to have declined in the US. The markets also are looking at almost 20% of the oil output shut in the Gulf of Mexico. This is after Hurricane Helen, so that is what is providing some premium to prices. But when you look at the overall markets in 2024 until now, and we've done 3 quarters already, The high for the Brent was at 91.2. The low that we saw in the month of September was at 87. And we are working with the low was at 69. And we are working with that 72 at this point in time for the month of October, the first day that is. When it comes to WTI, well, the high has been 87. September low has been almost 65. And we are trading at around 68 to 69 at this point in time. So the kind of lows that we saw in the month of September, October has started on a strong footing, let's say that. Well, going forward, the expectation is that for this year, until the kind of numbers that we have, the expectation is that the demand growth has been anywhere between 1 to 1.7 million barrels per day. Clearly, OPEC has been suggesting it on the higher side. But going forward, when it comes to prices, it clearly is a divided street. UBS, for one, says that they're looking at $75 a barrel of an average price for the next year. Bank of America says that 75 is what you could be looking at in the second half of this year. Goldman Sachs has lowered its average for next year to 80. And Citi, clearly the most bullish, most bearish rather, when it comes to the crude oil prices, $60 as a possibility for next year is what they're anticipating.
All right, Manisha, thank you very much for that. So those are forecasts as far as oil is concerned. We'll take a break here. We come back with our segment. It's the economy. My colleague Lata will get chatting with K. Ravichandran of ICRA and Somshekhar Vemuri of CRISIL to focus on the health of the corporate debt in the first half of FY25. And as we look into the second half, stay with us.
Ships being attacked almost every day in the Red Seas. That's my biggest question. You know, the economy fluctuates. I don't worry that much about the fluctuation of the economy, and you know, obviously the Federal Reserve will try to do its job to moderate, you know, the vicissitudes of the economy. But we are spending a lot of money, and you know, in my view, that spending the money causes growth. It also causes inflation, and whether it all moderates, I think it's true for countries around the world. We got to really think through how much debt countries can put on before it causes a real problem. So I'm long-term optimist. Short run, I'm a little more skeptical than other people that everything's going to be great. Markets are pricing things like they're going to be great. I'm put me on the cautious side of that one.
US has been trying to reduce its dependence on China. India has been and is expected to be a big beneficiary of it. Do you think we are sort of using that full potential right now, or there's a long distance to go?
Well, look, going to China, okay, national security, America was overly reliant. That's not being angry at them. You should ask why we didn't do it before, but in terms of rare earths, semiconductors, penicillin, ingredients for pharmaceuticals, obviously every nation look at it and say, we can't rely on someone who might one day be an adversary, that doesn't make them an adversary today, for supply. Just like JP Morgan's always have multiple diverse supply chains, we don't rely on anything. The second one is around disagreements around policy, like, you know, if countries are aiding and abetting industries to dominate global industry and beggar thy neighbor, well, that's not going to work either. So you're going to have people, you know, they're going to be hard fought. It's not going to cause deglobalization, but it's important that countries do that. And so, and it's just starting. It would take years. The semiconductor, you're talking about 5, 10, 15 years. So even if it's going to take place, it's going to take a long time. But companies are doing it on things like iPhone. I know iPhone production. So some things can move quick. Some will take years. Huge opportunity for China. I mean, for India. A huge opportunity for India. People call it the China plus one strategy now, that companies that relied solely on China are going to look at India, Vietnam, Malaysia, Indonesia, etc.
We've got U.S. elections, and I think one thing which both Democrats and Republicans agree on is China. You'd agree with that? I mean, in that sense, what's happening is in a way irreversible. The break in relations, sort of a Cold War.
I think you have to be very specific in this one. I think national security, everyone's going to do. Unfair trade, everyone's going to do.
Welcome to It's the Economy. We know that Indian corporate equities have done exceptionally well in the first half. How did debt do? How did corporates do on debt metrics? Well, it appears equally brilliantly according to the rating agencies. CRISIL says 506 companies were upgraded by them in this first half and only 184 were downgraded. ICRA says their number of upgraded companies were 2.2 times the number of downgrades. That's more than double. But this is, of course, average, sectorally speaking. Within them, there are some ultra-strong sectors and some weak ones like chemicals and textiles. Both rating agencies have written in their release. To get an idea of the sectors and, more importantly, the outlook, how long will the debt metrics look so good? I have with me Mr. K. Ravichandran, Chief Rating Officer at ICRA, and Somashekar Peburi, the Chief Criteria Officer and Senior Director, Regulatory Affairs and Operations at CRISIL. Gentlemen, thank you very much for your time. Somashekar, if I may start with you. Excellent upgrade, downgrade. Is this the best ever ratio we have had? 506 to 184? Is it, or 2008 was perhaps the last such superb upgrade downgrade ratio?
Lata, thanks for inviting us. Yes, the number of 2.75 is amongst the higher ones that we have seen. But just after COVID, when there was a very sharp rebound in the economic demand and the cash flows were fairly robust and companies were just intent on deleveraging, we did see a much higher number touching even 5.5 times in the couple of years back. But yes, I mean, this is amongst a number which is amongst the higher side, 2.75 that we've seen in the past.
Okay. Ravichandran, would this also rank among the best for you? How does it compare historically?
Yeah, historically we've had, historically we've had on an annual basis more than 3 times, especially in financial year 2022. Since then, it has been moderating. We had about, 2.2 times, for the, off year ending September, 24.
Okay. Somashekar, how are the number of downgrades doing? Are they falling or rising? If you only compare downgrades historically.
When we look at the number of downgrades, that's 184. But when I look at it as a percentage of the overall base of about 7,000 companies, that came in at about 5.3%. And yes, it is lower than our 10-year average of about 6.5%. So it is trending a little downwards, as well as if you look at another metric, which is defaults, even there also the default rate is also trending lower, at about 0.4% annualized. So that also indicates that there is resilience and buoyancy in terms of cash flows, which is there.
Okay, let me come to sectors. Ravichandran, who did very well, and it looks like both of you have found chemicals and textiles on a weak footing. If you can explain, give me some nuances, Ravichandran.
Yeah, sure. See, in the case of chemicals, China has been the biggest, spoil sport. They have huge capacities, so more than 10 times bigger than India. So because of the slowdown in the construction sector in China, they are left with huge overcapacity, which they are flooding the market, which is resulting in higher inventory and price related, impact. It is ebbing in few cases. There are, chemicals is a really omnibus term. There are different subsegments within that. The deep impacted would be agrochemicals. Otherwise, if you look at sector which has really turned around, would be specialty chemicals. Other chemicals like, petrochemicals and polymers, etc. They would fall somewhere, in between in terms of impact. So most of them are in somewhere in the, low to mid end of the, margin cycle.
Okay, that's important to note. Somashekar, both you and ICRA are pointing out that infrastructure has done very well. In fact, Ravichandran's note also points out to power, more specifically renewables, doing well. Can you tell us, infra has always been the one that was dragging the averages down. Why are they looking good, and is the outlook also good?
So coming to infra, over the last at least 4 to 5 years, what we have seen, the credit quality trends have started showing an improvement. And there are multiple reasons for that which are there. If you look at segments such as renewable power capacities, you are seeing a lot more participation of central counterparties, which is there. That is giving a lot of comfort to the stakeholders in terms of payment security. And we are seeing a lot of upgrades there. Also contributed in part by the fact that there is lower debt, which is sitting compared to what we had expected in the renewables, as well as takeover by stronger sponsors, which is there. Road projects, if you look at especially the HAM road projects, as they achieve milestones, and the project risk reduces. So they naturally tend to reflect the counterparty risk, which is NHA, from which the annuities start coming in. So that's also a sector which is doing well. The construction segment also is amongst the ones which has done well amongst the infrastructure linked sectors because of fairly robust order execution. And capital goods segment is benefiting as there is a lot of infrastructure spend. If I look at overall infrastructure itself, 38% of the rating upgrades in our portfolio of the 506 I have mentioned are either infra or infra linked in the first half.
No, if infra itself, yeah.
And outlook also, when we looked at 12 different subsegments of infrastructure sector, we have a fairly positive outlook on almost all of them. So outlook also is fairly positive.
Okay, that's good to hear. Even Ravichandran points out in his release that many projects have transitioned from project stage to operational stage, and that has accounted for healthy infra balance sheets. Ravichandran, what's your sense about financials? The anecdotal news, RBI going after gold companies, unsecured debt, microfinance. Is financial sector as good as it was last first half?
Yeah, financial sector overall, still they're in a healthy position, I would think. But within that, there are certain segments are showing signs of incipient stress. The companies which are dealing with unsecured loans, personal loans, business loans, and MFI loans of late, they are seeing strains in few states, I would think, largely on account of unabated lending by the industry. The growth was upwards of 25-30%. Because of that, and also the multiple leveraging by the borrowers, it was a heady combination, resulting in stress in few pockets. But within MFI, there are large MFIs who are not affected that deeply as compared to smaller MFIs. I would think they're well capitalized and they should be able to ride out this storm, especially after the industry level guardrails which have been put forth by MFIN.
Okay, that's good to hear. Guardrails have come in, but it's important that the debt is showing some strain. Somashekar, one of the best paragraphs in your release is the outlook. Just tell us, how does the debt quality look that it will sustain in all of FY25, FY26?
Yeah, so when we look at the outlook both on the corporate side, infrastructure side, as well as even when we look at the financial sector side, I think the credit quality outlook is fairly positive. Government continues its infrastructure investment. The private consumption is something which is reviving. Also, we are anticipating rate cuts which will start happening, and that should spur a bit of domestic demand as inflationary pressures are likely to kind of subside. So what we will, on the other hand, be watchful of is, the heightened geopolitical risks, which could create some bit of a challenges, if at all, on our export-oriented sectors and disrupt supply chains. So that's something that we are a little bit cautious about. And like I think what Ravichandran mentioned, in the financial sector specifically, unsecured loans and microfinance are pockets where asset quality numbers could show a little bit of increase in terms of delinquencies, and that's something which we'll be watchful about.
Okay. Two last quick questions to both of you. Ravichandran, has capex picked up? And usually debt starts looking difficult when capex really takes off. Are we anywhere in that inflection point?
See, capex, one has to look at capex by listed companies and unlisted companies. When it comes to listed companies, certainly there has been a good pickup, especially in the green areas of the market, pump storage and renewable energy, EVs and so on and so forth. Plus other capital intensive sectors like oil and gas, telecom, metals. All of them are in midst of brownfield projects and greenfield projects, etc. So on a year-on-year basis, I would think the capex has been growing by more than 10-12%. When it comes to unlisted companies, that's a very large pocket, also contributing to capex in terms of overall gross fixed asset formation. There, I mean, the kind of a growth has not been that good, I would think.
Okay. What about you, Somashekar, quickly on capex?
So very clearly, we've done an interesting analysis on 900 companies in our portfolio, and we are seeing that fiscal 24 and 25, the aggregate annual average capex is about 4.3 lakh crore compared to 3.2 lakh crore just prior to the onset of COVID, 2019 and 2020. Other thing which we looked at is we look at capex intensity, which we are measuring by capex to EBITDA. That is at around about 50% currently, compared to even a decadal high of 72%. So we would say that the capex intensity is not that high. In terms of sectors, yes, steel, cement, oil and gas, exploration and refineries, also PLI-linked sectors, including pharma and some electronics, auto components. Those are the sectors which are seeing a lot of capex in the manufacturing sector.
Okay, just 10 seconds left. But Ravichandran, you're most bullish on the hospitality sector. No downgrades for the past 2 years.
Yeah, that is certainly reflected in the high room tariff and occupancy. Over the years, there has been minor slowdown, I must confess, in the current financial year because of elections and heat wave, etc. But then, if you look at the anticipated supply additions, according to our estimate, that will lag demand growth rate. Especially in metros, rates are going to be very firm, at least for another 2 years. That's a good sign for some of the large hotel chains, according to us.
Okay, on that optimistic note, let me wrap up this discussion. Thank you very much, Somashekar and Ravichandran, for laying out the debt performance of the first half. It's been excellent. That's the verdict coming from the two rating giants. But of course, there are some chinks in the armor. Textiles and chemicals haven't done too well. And hospitality, of course, gets a huge thumbs up. Most importantly, infrastructure is doing very well. That's really the benchmark of debt performance. Thank you very much for joining us on this special edition of Bazaar. After a break, Chartbusters.
The Ukraine, the terrorism in Israel, Russia, Iran aiding and abetting. China's kind of on the other side of America in that one, so that's causing a lot of the tension. I think the better thing to do is get fully engaged, which they've done, our government, to try to protect ourselves in national security, unfair trade. And yeah, I think if the war goes on, yeah, there will be contentious issues between the far more contentious because of that. So both sides, I think, will be fully engaged. Both sides are going to be tough, but I don't think either side is talking about disconnecting.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer. A leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand.
Tech Mahindra is the top Nifty gainer. The stock rally is nearly 4% after CLSA upgrades the stock to outperform and increases the target to nearly 1750 rupees per share.
Mahindra & Mahindra is higher after the passenger vehicle sales comfortably beat estimates, even as the tractor sales fall marginally below expectations in September. The management tells CNBC-TV18 that the sales momentum continues and they expect strong sales growth in the festive season.
Nalco trades higher as Kotak upgrades the stock to an add from a sell rating and attractive risk reward. The brokerage also has hiked the target price to 235 rupees from 160 rupees earlier.
Northern Arc reports strong growth in revenue and net interest income in the first quarter, even as provisions spike. The stock is high as the management says they will continue to grow at current levels.
Blue Dart rally is almost 6% as it announces annual price hikes to the tune of 9 to 12% effective from the 1st January 2025.
Hello and welcome to Chartbusters. I'm Nigel. With me is Mangalam. The markets from the highs of the day have slipped a little bit. So yesterday we had a down session. Today we bounced back a little bit in the first hour of trade. But as we speak, all the key frontliners in the red. Well, Mangalam, the markets actually in the last few minutes have suddenly seen a nosedive. We're down close to around 100 points, I think, in a matter of around 20 minutes.
It is, Nigel. You know, we need to watch out for where it goes from here. And what's interesting is that today, even the mid-cap index, yesterday was an outperformer in the form that it did not fall as much as the frontline indices. But in the first hour of trade itself, we have the mid-cap index, which is down 1/3%, as against the frontline indices, which are down just about 1/5% itself. Though even the advance decline ratio currently is in favor of the advances. The lines have come closer to each other and narrower. So let's see where this goes in the second half of trade. Also, speaking about the second half of trade, we will have both the financial services and the Nifty Bank expiry playing out today, largely because tomorrow is a holiday. So let's see how that pans out, especially on that end of the things, because the Nifty Bank is down now almost 1,600 points from the earlier high that it hit. So good time to get in Nagraj Shetty of HDFC Securities for a quick technical check on the market. Nagraj, you know, over the last 3 trading sessions, the market's been a little volatile and mostly on the downside. Rallies are being sold into. Is this a change in trend, or is it something that is just passing and one should still buy on dips?
Hi, good morning. I'm not expecting a bigger change in trend as of now. Market has been in a spectacular rally over the last few weeks. We have seen higher tops and higher bottom formation on the chart itself is indicating the strength of the market. From the resistance of around 26,200, 250 levels, the market has been correcting. This is a healthy correction. I'm expecting this to be a buying opportunity at the lower levels. I'm expecting Nifty to halt its downside momentum around the support of around 25,400 levels, and we could see upside bounces coming from the lower levels. And once Nifty sustains the higher bottom around 26,400 odd levels, I'm expecting Nifty to reach even new all-time highs around 26,300 in the near term.
Got it. So you're not looking to perturb Nagraj. Good to hear that. What about individual stocks? There'll be a lot of trading ideas out there. So help us out with a few.
Yeah, mid-cap and small caps are continuously outperforming. Recently, they are showing a consolidation movement, but the underlying trend remains up. I have 2 stocks from alongside. One is from fertilizer front, another is from commodity sugar front. Let's discuss about the sugar stocks, Renuka Sugar. Chartically, Renuka Sugar has been in a consolidation phase with a broader range of around 51 to 47 levels over the last few months. Recently, it has witnessed a decisive upside breakout of 51 trendline resistance and moved into new swing highs. the overall chart pattern is looking positive. Currently trading around 55.60, 55.70 odd levels. One can look to buy at this point of time. 62.50, 63 is going to be the upside target for the stocks, and one can place a stop loss at 52.50. Another one is from fertilizer front, Chambal Fertilizers. Chambal was moving in a narrow range movement over the last few months. From the last week onwards, it has witnessed a decisive upside breakout. Sharp upside breakout was seen from the last week onwards, and the upside momentum has been continued in the last so far this week. The overall chart pattern is looking upside breakout of the bullish flag pattern. Currently trading around 544, 545. One can look to buy at this point of time. Immediate target would be around 580, and one can place a stop loss at 525.
Well, you know, I'm just looking at a couple of other stocks which are buzzing around right now. One of them is V-Mart Retail, 10% higher, and this is on the back of good volumes as well. It's not a stock which is not done well. In fact, this year itself, it's more than doubled. The street expects, you know, this festive season to do well for them. They're value fashion retailers, so fundamentally, it's well poised for growth. Is there anything in the charts which is suggesting there is further upside, or maybe it's tradable even after a 10.5% up move that we're seeing?
Yes, it is moving right away, because after the range bound action, the upside momentum has started. There is a possibility of a consolidation 1 or 2 days. That has exactly happened in the past also. Whenever the stock has spurt up, it has shifted into a consolidation without showing any major decline. I'm expecting 1 or 2 days of a consolidation, and this upside momentum is likely to continue.
All right, take that point. Thank you so much for joining in and giving us your views on a whole host of stocks on the indices as well. Not too perturbed about the decline that we're seeing in the indices right now. Don't think that these dips will be very deep. In fact, shallow dips are reasons to buy in the market. That's the word coming in. But remember, that's the technical view. We'll get you the fundamental view on the market as well. We spoke with Sunil Kaul, who's the APAC equity strategist at Goldman Sachs. He says that there could be some continuation of a tactical rally in China, not for the next 7 days because Chinese markets are shut, but on India, they do have a target of close to 27,500 on the Nifty. And going forward, they believe that flows could ebb in India, but that's not because of China, but it's because of India itself. So let's hear out Sunil Kaul's views on India and the markets.
There could still be a bit of tactical rally continuing in China. Positioning from what we are hearing, both from long-onlys, but also from the hedge funds, long-short managers, is that things have kind of gone from positioning in the bottom half of the decile to like 14-15% in terms of the overall positioning, but there is still some more room for that to improve. So I would say I think you could still see next couple of weeks China momentum continue. The critical thing would be to see whether there is any improvement in the higher frequency data for the month of September, which comes out in the middle of October. Sense is that India probably still stays resilient overall. You might see a bit of weaker foreign flows, which is not just because of China. You also have US elections coming up. You have state elections in India. So there's lots going on, because of which you could see kind of tepid foreign buying in general. Our view on the overall sort of India positioning side of things has been that overall foreign positioning is still decently light in India. We still feel confident that you could see around 14% earnings growth over the next sort of 4 to 6 years, which sort of should drive markets higher, even with some multiple derating from current levels. So you could still see decent sort of early double-digit returns in the market on a sustained basis. We still have a 27,500 target on Nifty, and we are overweight the market in the context of the region.
Good news coming in, right? He's talking about mid-teen earnings growth, and he's saying that 27,500, so you're talking about an 8 to 9% increase even from these levels or thereabouts. So decent returns on the index with solid earnings growth is what Goldman Sachs is factoring in. Well, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Khushbu Rai of moneycontrol.com joins us to talk about a stock that she's tracking closely. Khushbu, over to you.
In today's idea for profit, we have Emami Limited. The company has reported healthy earnings backed by largest rural presence as compared to the peers. The company reported high single-digit volume growth in the June quarter, led by summer-centric portfolio and continued rural demand recovery and favorable weather conditions. In the healthcare category, the growth is expected to improve given Emami's leadership position and product differentiation. The management has guided top-line growth in the high single-digit, led by mid-single-digit volume growth in the coming quarters. We are of the opinion that continued focus on the core portfolio and scaling up of the acquired businesses and other premium D2C brand will help growth and margins in the coming period. Emami's presence in the niche personal care categories with low penetration makes the stock a long-term investment case. Also, if we look at the valuation, the stock is trading at a PE multiple of 33 times on FY26 estimated earnings. We feel that the normal monsoon, improving macro trends and accelerating rural demand will help growth in the coming quarters.
All right, with that, we'll step into a short break, come back on the other side. Don't go anywhere because we'll get you our exclusive interview with Kotak Mahindra Bank CEO Ashok Vaswani. All the snippets of that after this break.
Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m. Investing.
Welcome back. You're watching us here on Chartbusters. The market continues to, move lower, and that's largely because of Reliance. So the index heavyweight should come up for you right now, currently at the low point of trade, and it's taken with it the Nifty lower to the lower end of today's trading range so far. Close to 25,750 is where we are, which is a correction of almost 120, 130 points from the highs. Importantly, this week itself, Reliance has corrected about 4%. So, when that puts the pressure on the frontline indices, it's difficult to rebound in absence of other sectors doing well for the market as well. So just keep an eye out on this one. We'll watch out for how that pans out. But talking about index heavyweights and, stocks in particular, let's get you a CNBC-TV18 exclusive. The MD and CEO of Kotak Mahindra Bank, Ashok Vaswani, in his first conversation with CNBC-TV18 says growth and transformation of the bank is the mandate which has been given to him. He also reiterates that the bank is regularly engaging with the Reserve Bank in an effort to lift all the restrictions as soon as possible. Let's hear him out.
Kotak is a great brand. Kotak is a great platform. There's no reason why Kotak shouldn't be within the top 3 private sector banks. And I'm talking not only of the bank, I'm talking about our subs. Where our subs are within the top 5, why we can't be within the top 3, or just full stop, be within the top 5. right? Growth and transforming for scale is exactly what this mandate is about. India has the best digital public infrastructure compared to any other place in the world. I've worked in every other place in the world. I've never seen anything like this, right? Now, obviously, that has led to the demand for digital services having gone up dramatically. And it's about the bank systems having to keep up pace with that. So we've been spending the last couple of months really focused on how we grow and make our systems foolproof. So we've taken this as an opportunity to really say how we'll really leapfrog and make our systems really resilient and relevant for the days to come. So I think we've made very, very good progress. Obviously, we've been in continuous touch with the RBI, sometimes even every week, updating them, getting their guidance, making sure we're on the right path. And I think we've made tremendous amounts of progress. It's not unusual for deposits to drop off in the first quarter because you normally end March on a pretty high. Frankly, I've worked in the US, I've worked in the UK, and deposits have pretty much stayed flat as a percentage of GDP and continued to grow all over the years, right? And there, obviously the participation in the capital markets is much, much, much higher than in India. So this notion that suddenly, there's going to be a complete dearth of deposits and everybody's going to invest in the capital markets, I think it's overdone, right? And I think that, look, as long as there's an economy, as long as there's expenditure, as long as there's businesses, deposits will continue to kind of grow. Is the customer becoming more sophisticated and savvy? Absolutely. And that's bound to happen, right? But I don't see this situation as suddenly deposits are going to suddenly disappear.
All right, and remember you can catch the entire conversation tonight at 7:30 p.m. only on CNBC-TV18. Until then, we'll keep playing snippets of this exclusive for you on our channel. Let's move on. Let's talk about the top Nifty gainer in an otherwise wobbly market. That is Tech Mahindra, following a bullish report coming in from CLSA. Nimesh joins in with the details.
Thanks, Mangalamino. So, as you rightly pointed out, Tech Mahindra is buzzing in trade on the back of a big upgrade coming in from CLSA. Just ahead of the quarter two earnings, CLSA today upgraded the stock to outperform from hold, and they've raised the target price to 1749. Now, CLSA believes that the EBIT margin expansion is pretty much underway. The next big milestone will be the order book. Now, broad-based growth, but only will start from FY26. And what will bring growth? Financial services, healthcare, and manufacturing. These three verticals will largely drive the majority of the growth for Tech Mahindra going forward. Now, EBIT margin, target of 15% by FY27. That's the stated goal by the company. CLSA believes it's not something which is very ambitious and is pretty much achievable as well. So that's the view there. And they believe that the recent run-up in the EBIT margin trends do provide further room for re-rating. So on back of all this, a big upgrade to an outperform on Tech Mahindra, and CLSA has raised the target price now to 1749.
All right, that explains why that one's the top gainer in today's trading session. But Mangalam, what's your bet? Do you think India is going to pull it off against Bangladesh? Most of the 5 days have been rained out, but our boys are making a good effort. Bangladesh is 40 runs ahead, but we just introduced Ravindra Jadeja, and he's picked up a wicket right away.
Yeah, 301st test wicket for Ravindra Jadeja, doing extremely well. If there has to be a result, it has to be India, and you have to give it to the way our boys played yesterday. They played a wham-bam sort of innings in
half a day.
In half a day, it was the fastest 50, the fastest 100 that we saw, and the captain led from the front. Yes, he did get out at 23, but the first 2 balls, 2 sixes, wagged it out of the park.
Well, that's right, Mangalam, and good to see, right? Trying to make a game out of nothing at all, coming in there, smashing it out of the park. In the first 10 overs, I was wondering whether they're playing Test or T20 because they were 120 runs in 12 overs.
But the English keep talking about their baseball and this and that. There you have 2 boys from Azad Maidan going ahead and knocking it out of the park and telling them, no baseball, nothing, this is India ball. And that's exactly what's happening. We'll take a short break, come back, we get you the latest score coming in from the auto sales from the month of September. Stay tuned for that.
Trump again, and I think he should debate again. The American people have a right to hear us discuss the issues. And as you say here in Las Vegas, I'm all in. I'm all in. We know this will be a tight race until the very end. And let's level set. We are the underdog. We are the underdog, and we have some hard work ahead. But here's the thing. We like hard work. Hard work is good work. Hard work is good work. And earlier this year, we had a chance to pass the toughest bipartisan border security bill in decades. And Donald Trump tanked the bill because he thought that that bill, if passed, would have hurt him and he'd prefer to run on a problem instead of fixing a problem. That's not the kind of president we want.
Welcome back. You're tuned into Chartbusters here on CNBC-TV18. Well, let's focus on the auto stocks. Vinny joins us to help us out with a quick analysis of all those numbers that have come in. Hey, Vinny.
Good morning. Yes, some of the numbers that have come in so far. We have M&M that has reported its September sales numbers. Good set of numbers coming in, especially on the auto. That's the SUV front, passenger vehicle front, where they've seen a good growth. Tractor, bit of a muted to an inline versus estimates of what we were expecting. Bajaj Auto also above estimates. Escorts Kubota, good set of numbers for September auto sales. Now, quickly taking a look at the numbers, M&M Auto, when you're looking at it on a year-on-year basis, they managed to see a 16% growth, while the tractor segment, that is much comparable and better comparison, would be on a year-on-year basis. That would also be because of the seasonality that comes into play, 2% growth there. What impacted tractor business was the export sales, because that's been a bit muted, but they're expecting the momentum to pick up going forward, and the second half is what they're expecting it to be much better for FY25 for the tractor sales. Festive season will play a big role in tractor growth as well. Similarly, for Escorts Kubota on the tractor front as well, they managed to see a 3% growth on a year-on-year basis. Companies highlighting that they expect this good monsoons to continue in terms of the volumes. That will be doing well in October as well. And overall, sales growth for the second half of the year. Similar commentary for M&M as well as Escorts, that second half will be much better in terms of a growth there. Bajaj Auto too is expecting this growth momentum to continue, especially the EV portfolio, which now accounts to around 40% of their domestic revenue. That's going to be interesting to watch out for. So overall, they managed to see a good set of numbers this time. 1.3 lakh units is what they managed to sell in the month of September.
All right, Vinny, just hang in there right now, because, you know, while you're giving us the auto sales scores right now, we're also getting scores coming in from the India-Bangladesh match, which is currently underway. Just before going into the break, Nigel, there was 4 wickets down, and now it's 5. Akashdeep gets another one. Vinny, do you have a comment?
I think Vinny's the good luck charm.
So I'm very happy with that. I'll keep standing here till we get more wickets there.
But are you tracking the game?
Not me, not tracking it as of now, but surely getting updates.
All right,
from here.
we'll let you track the auto sales for now while Nigel and I keep talking about the game itself. Nigel, Akashdeep, what a find he's been for India, you know, last 2 games doing extremely well.
And he's removed the danger man,
Yeah.
you know, because the opener from Bangladesh was looking in fine form, was at around 50 runs odd, and if we spend more time with the crease, it would prolong the agony for us. So I think I'm betting on India winning this game.
Well, you know what? If we spend any more time out here talking cricket, our director will get very angry. So let's go across to the Bajaj Auto. Okay. We won't get the Bajaj Auto management bites right now, but stay tuned to CNBC-TV18. We'll take a break on Chartbusters. Trading Hour comes up next. Get you update on the auto sales and also the commentary coming in from all the managements that we spoke to this morning.
La difesa sempre deve essere proporzionata all'attacco. Quando c'è qualcosa sproporzionato si fa vedere una tendenza dominatrice che va oltre la moralità. Un paese che con le forze fa queste cose, qualsiasi paese parlo, che fa queste cose di un modo così superlativo, sono azioni immorali. Anche nella guerra c'è una moralità da custodire. La guerra è immorale, ma le regole di guerra indicano qualche moralità.
Good morning. Welcome to Trading Hour. It's a Tuesday morning. I'm Reema Tendulkar. With me is Sonal Bhutra, and staring in mild cuts on the Nifty and the Sensex. The Nifty is below 25,800, down about 40 points. But at the session's high, it was more than 25,900 on the Nifty. Mid-caps too are seeing a mild, red tick, though the advanced decline ratio is in favor of the gaining side. IT is holding up well today.
It is, and there's a note coming in, so we'll discuss that as well in greater detail. But the good part is it's a truncated week, Reema. You know, tomorrow is a holiday. It's coming after a long time. So looking forward to that. But of course, we've seen some fall yesterday as well. That continues in some way today. We have seen a recovery from the lows again that has been sold into. There is some resistance at 26,250 to 26,475. That continues to be an important level. We've broken over from the support of 25,849. So where we go next will be very important to watch out for. As Reema said, Nifty IT is doing well. Bank Nifty is in the green, so that's slightly outperforming the benchmarks right now. We have the small cap index also, which is in focus right now. So while the mid caps are down 76 points, we do have the small cap index, which is in the green. So that's the kind of markets where we are in, where mid caps are not doing so well, but small caps are. So a lot of management commentary that we have gotten through the course of the day. So let's just do that. Let's begin the show with a CNBC-TV18 exclusive. MD and CEO of Kotak Mahindra Bank, Ashok Vaswani, says they are engaging with RBI almost every week in an effort to lift restriction. He also spoke in detail on the impact of the RBI restrictions on customer additions and a lot more. Listen in.
I think that is the big overhang today as far as the Kotak Mahindra Bank story is concerned, with the RBI imposing restrictions on account of deficiencies in the digital and IT infrastructure, not allowing you to onboard mobile as well as digital customers, as well as putting restrictions on your credit card business. Now, if you can share with us details on what you've been specifically able to do to demonstrate to the Reserve Bank that you are adequately or appropriately addressing those deficiencies, and where do you believe that you stand? I mean, there is of course an external audit that's also been sought, but where do you believe you stand in the remedial measures?
So we've taken this as an opportunity to really say how we'll really leapfrog and make our systems really resilient and relevant for the day, for the days to come. So I think we've made very, very good progress. Obviously, we've been in continuous touch with the RBI, sometimes even every week, updating them, getting their guidance, making sure we're on the right path. And I think we've made tremendous amounts of progress, and we'll continue to do it. Obviously the RBI is exceedingly important, but the customer, I've got to get it right by the customer. I got to stay resilient for the customer. I need the best customer experience for the customer. And, RBI has told me, you got to do it. So,
and I understand that some of this is confidential, some of this is of course up to the regulator to speak about as well. But from your perspective, and you said that you're engaging with the RBI sometimes even on a weekly basis, again, for the benefit of our viewers who are watching, what are the steps? If you can give us some specifics, the steps that you have taken, what has that meant in terms of incremental investments, for instance, as well? What has that meant in terms of big changes on the IT infrastructure side to address some of the deficiencies that have been pointed out? And whether there's been an acknowledgement by the Reserve Bank in any form of fashion, formally or informally, on any of those measures?
So, actually the process started about 2 years ago when we started ramping up our investments in technology. And we spend roughly 10% of our entire OPEX on technology. So that adds up to a very significant sum. And we've been kind of growing that to about 11%. Since the order, we've doubled up on resources. We've used, consultants and stuff like that. And we also, I think, went on record to say that the cost of the order would be something to the extent of about 450 crores on an annualized basis. And pretty much that number seems to be correct even now. But like I said, we've made tremendous amounts of progress. If you look at downtimes, they're down significantly. Customer experience has improved quite significantly. And when we come out of the gate, I think we'll come out of the gate exceedingly strong, both in terms of new products, but new customer experiences, much higher level of resilience, and really deliver great products and services for for our customers.
You know, I also want to understand from you what the implications or the impact is likely to be as far as customer addition is concerned. You know, for instance, FY23, 8.5 million customers, 8.8 million in FY24. A lion's share comes on board via the digital route. So what is the likely impact till these restrictions are lifted? And even post the restrictions being lifted, how confident do you feel of being able to better these numbers?
So that's actually, Shirin, very, very interesting question. As you correctly said, we get a lot of our customers digitally, right? Now, what have we done since the RBI has asked us not to onboard digitally? We've changed our processes and changed it from digital only to assisted kind of journeys, where a human being assists the customer to do the journey and complete the journey. So obviously we can't do as much as we were doing digitally, but we are running at roughly 30-35% of what we were doing pre the order. Once this is lifted, I'm very confident that we'll come back stronger, because even now, while the order exists, the amount of traffic we are seeing on our websites asking for digital products, obviously we can't fulfill, but the demand still exists. So when we get out, I'm hoping we come out even stronger. And we've used this period not only to improve our technology, but, for example, use it to create new journeys on the mobile app, which will allow a customer, instead of taking one product, to take 4 products. So when we come out, we should come out with a much, much stronger proposition and a far more fulfilling proposition for the customer and a profitable relationship for the bank.
Let me move now to talk about the banking environment in specific and the big concern for banks on the deposit side. And I want to understand from you how you're looking at this, whether you see this more as a structural issue and how you intend to mitigate what we're seeing on the deposit side, because deposits have actually declined for you for the first time in 16 quarters, while they're still up 16% year on year, down 0.3% quarter on quarter. That's the lowest in 6 quarters. How do you see this trend moving forward?
It's not unusual for deposits to drop off in the first quarter, because you normally end March on a pretty high. At least the way I look at it, you know, there's a lot of talk in India about, oh, everybody's going to the capital markets and therefore deposits are going to drain out. Frankly, I've worked in the US, I've worked in the UK, and deposits have pretty much stayed flat as a percentage of GDP and continued to grow all over the years, right? And there, obviously the participation in the capital markets is much, much, much higher than in India. So this notion that suddenly, you know, there's going to be a complete dearth of deposits and everybody's going to invest in the capital markets, I think it's overdone, right? And I think that, you know, look, as long as there's an economy, as long as there's expenditure, as long as there's businesses, deposits will continue to kind of grow. Is the customer becoming more sophisticated and savvy? Absolutely. And that's bound to happen, right? But I don't see this situation as suddenly deposits are going to suddenly disappear.
Interesting conversation, and you can catch the entire one tonight at 7:30 p.m. on CNBC-TV18 with Ashok Vaswani, MD, CEO of Kotak Mahindra Bank. Get into a break. On the other side, we'll talk commodities. Manisha Gupta joins in, and she's got her eye on gold.
Donald Trump again, and I think he should debate again. The American people have a right to hear us discuss the issues. And as you say here in Las Vegas, I'm all in. I'm all in. this will be a tight race until the very end. And let's level set. We are the underdog. We are the underdog, and we have some hard work ahead. But here's the thing. We like hard work. Hard work is good work. Hard work is good work. And earlier this year, we had a chance to pass the toughest bipartisan border security bill in decades. And Donald Trump tanked the bill because he thought that that bill, if passed, would have hurt him and he'd prefer to run on a problem instead of fixing a problem. That's not the kind of president we want.
Welcome back. You're still tuned into Trading Hour. Well, the markets have taken some breather, but what's doing well and continues to do well is gold, definitely. So let's talk about the commodity space. Manisha is joining in now. We are focusing on gold today, Manisha. As they say, it's sona move for gold.
Well, yes. It has been a great run-up for the gold prices for this year. And because we've seen a quarter go by, this actually has been the best quarter that the gold prices have put in. And this is in last 8 years. We did see an all-time high of $26.85 an ounce. And when you look at the kind of surge that the gold prices have seen, the rally began in 2023 in the month of October. That is when the gold prices were trading at 1,800. And from that to almost 2,700 is how we've seen the gold prices run up. If you look at this year itself, it has been on 37 days that the gold prices have hit an all-time high, which actually has been the highest ever in sense of its own records. The markets are looking at a longer-term bullishness continue in case of the gold prices. That is because the global debt and borrowing by governments is at a record of 315 trillion. The expectation also that you would be looking at further interest rate cuts coming in from the US Fed. There's a 55% probability that a 50 basis point rate cut is what you could be seeing in the month of November as well. That has been supportive. Also, China's additional stimulus measures leads to more liquidity into the markets, means more buying in gold. Broader escalation risks in the Middle East also have been adding to the premium here, and is the reason the latest UBS report now says that they will continue to be bullish in case of gold prices. They expect 2750 by the end of this year, and they've upped their target to 2900 by the third quarter of 2025. This is in line with various other reports from Citi and Bank of America as well, which have been talking about 2800 to 3000 of a possibility in 2025. So yet another very strong quarter, and this quarter now is about festival season buying, not just in India but the global markets as well, ahead of Christmas and holidays. So gold buying by the physical markets also is expected to be strong.
Thank you very much for that. There's no stopping this gold rush, is there, Manisha? We'll slip into a break. We'll come back and discuss the latest trends from the retail real estate sector. We'll invite Pushpa Bector from DLF Retail and Nishank Joshi from Nexus Select Trust. Stay tuned.
la difesa sempre deve essere proporzionata all'attacco. Quando c'è qualcosa sproporzionato si fa vedere una tendenza dominatrice che va oltre la moralità. Un paese che con le forze fa queste cose, qualsiasi paese parlo, che fa queste cose di un modo così superlativo, sono azioni immorali. Anche nella guerra c'è una moralità da custodire. La guerra è
Welcome back. You're still tuned into Trading Hour. It's time to talk about the retail real estate sector. A recent report from Nuvama says they believe consumption is a long-term structural growth story in India, and India is emerging as a hotspot for global retailers. And of course, we have the festive season coming up as well, with Navratri starting from Thursday itself. To discuss this and more, Pushpa Bector, Senior Executive Director and Business Head at DLF Retail, and Nishank Joshi, Chief Marketing Officer at Nexus Select Trust, is joining us now. Pushpa and Nishank, thank you so much for joining us today. And, I wanted to understand how Q2 has been in terms of footfalls, and with the festive season coming up, entire October will be about festivals, some of November as well, and December. So what are the footfalls looking like going forward? Have you already started seeing some surge here? Nishank, let me start with you. Yeah.
All right. Okay. Because we are listed, we can only talk about Q1. So we ended Q1 at 8%, and we've got a positive trend since then. So the numbers, both of footfalls and sales, have improved since then. So we are on an upward trend. We ended with the Apple products going live, and therefore we've got a good numbers getting into the festive season. As we get into the festive seasons, we've got our decors in place, we've got our ideas in place, we've got our concepts in place. But more importantly, our campaign with Ayushmann Khurrana as a brand ambassador now breaks in the next couple of weeks. So we are good to go for a very strong festive season. You're right, it'll go from Dussehra to Diwali all the way to the end of season sale and Christmas. So it's going to be an awesome 3 months for us. I think it's looking very positive now. Sales and footfalls both have increased to an extent where I think retailers are very positive now. That's the feedback that we're getting. The stocks are all piled up, so we are good to go. Retail is good to go for the next 3 months.
Do you want to give us a broad range of the kind of growth we can expect in the coming festive season compared to, say, last year?
I can't give you that number right now.
Okay. All right. Ms. Pushpa, thank you very much for joining in. So, malls is a very nice consumption, to assess the consumption play in India, both in Tier 1 metro cities and in Tier 2. So first, if you could just tell us how the landscape has changed, for DLF Retail. You all are present predominantly in the north, but how you've seen the landscape change in the last, 2 to 3 years, the way consumption is booming. And then if you could give us some picture on the near and now. What's the prep going into the festive season? What's the growth looking like, expectation?
Right. Good morning, everyone. So one thing I can tell you is that as far as the festive season is concerned, we are pretty bullish because we do think that, yes, we are predominantly present in the north, but north is also high consumption space, and it's always done well when it comes to festive season. We do think that, the trends, first quarter was a little muted, but after that, the trends have been positive. And yes, we do think that it's going to be a good festive season, attributing to 2 things. One is we ourselves have set up many new brands in our portfolio. Almost around 80 new brands have been there. So that creates new interest. The other aspect is that it's a very long wedding season that we are seeing. That also has a good play on shopping in malls. So these 2 elements will definitely propel a higher shopping intensity in our properties. And we are starting a shopping festival starting the first season. And I'm sure we're all geared.
Okay. Ms. Bector, I think there is some technical issue, so we'll just come back to you. Let me go across to Nishank. I just wanted to understand, is there a category of product which is seeing the most amount of demand? Does it change season-wise? Because at a point in time, we were talking about luxury goods doing really well. That was during COVID. Has that changed over years? What has the trend been like?
That's correct. It does keep on changing season to season. This time around, over the next 3 months, what you will see is electronics and gold being the focus. Fashion has been on the rise, but it's not picked up well enough, I would think. But we are really expecting gold and electronics to be the stars starting, say, somewhere around October. And then, of course, the wedding season kicks in, which is when the ethnic wear will start to come in. So these are the three big categories that I think are going to make a big difference over the next couple of months.
Can you tell us a little bit more about the entry of global brands in India? What are the numbers looking like? And is that going to be a big factor driving growth?
It will. So we've got the Apple flagship, which opened at Select City Walk, which great numbers. I mean, it was phenomenal. You had lines from 8 o'clock onwards. From 7 o'clock onwards over there. So it's done phenomenally well. We've got Foot Locker that will be opening now in the next couple of weeks. We've got a couple of more brands opening in Delhi itself, and then a few more across the portfolio. So, the market's really bullish, and I think the retail community at large is now looking at the next few months to really kickstart a really good festive season. I can't give you the numbers yet, obviously, but they are bullish, and I think the whole retail industry is looking forward to a really strong now Q3.
So, Nishank, tell us, what has the occupancy been like so far? Has there been any improvement, any new leases that you have entered into with retailers? And what's the pipeline? Because we are talking about the per capita consumption in India for malls being really low, and Nexus is primarily looking at that portfolio. What is the outlook going forward in terms of pipeline?
We are already around 95% plus, and our grade A malls are at 97% plus. So there are new leases being signed all the time, but we are already full. I mean, there's a list of people who are willing to walk into our malls, and we don't have space to give them. But the pipeline is strong, and we're already at 97%. So there's only that much play that we have. So.
So are you looking at expansion pan-India? What is the pipeline looking like there? Will it be by acquisitions? Will you be looking at ghost malls in in tier 3, tier 2 cities as well?
It's still a tier 2. It's still a tier 1 and tier 2 company. So we will continue to acquire there, and we've got a strong acquisition pipeline. In fact, we have signed around 3. Is it 3 now? It is, yeah. So we've signed around 3 LOIs, and so we are looking at a few of them coming.
So in the next, say, 3 years, Nishank, if you had to assess where Nexus will be in terms of size, in terms of the opportunity, do you want to lay out the big picture for us?
Nexus will continue to be the #1 operator over the next 5 years, is what I can say. I can't give you a number as to how big we will be. We are already at 10 million. I'm sorry, we have signed 5, not 3. So we already will be up to 23 malls by the end of 2025. 5 years, I don't know. I can't even give you a number.
Okay. All right, Nishank, we get that. Ms. Bector is back with us. We were talking about the wedding season doing really well, the festive season doing really well. I wanted to understand what kind of product portfolio is doing really well in your malls. Is it ultra luxury, luxury? And what about occupancy levels? Where have they been like in Q2? And is there an improvement expected or pipeline expansion expected?
Yes. So the occupancy levels have now in the range of around 96 to 97%. They will, whatever fit outs had to happen is concluding now. So at a portfolio level will be 96 to 97. As far as the the overall outlook of categories is concerned, of course, Uber Luxury has done well, but I would also say that the wedding shopping is across the board, premium shopping, premium malls also do really well. Winter merchandise, this year, we anticipate a long winter in North, and hence the winter merchandise the off-tick should be pretty good. So overall, I would say the category would be on fashion and beauty, which is anticipated to do rather well. So is the case with jewelry.
Okay. I just wanted to understand, how often do rental uptakes take place? How often do you revise them? And so far, what has been the rental uptick that we've seen in the industry so far for DLF itself? And when is the next one due?
Well, you know, that's an usual role of business. So every 3 years, there is a rental uptick. But, you know, and this is something that this particular year, we saw a lot of leases coming to an end, which is why we had an opportunity to get in newer brands. And the rental uptick has been rather good. We are clocking around 25% on an average as compared to the last rental. So it's been bucking our own estimates.
Okay, 25% higher. That's interesting. A very interesting discussion. And of course, we'll get to know more trends once the silent period is over, and also when we start getting in trends coming in from the festive season sales as well. Thank you so much, Nishank and Pushpa, for joining in today with your take on what's expected and what's been happening in the mall industry. We'll slip into a short break. When we come, we'll discuss market technicals with Mitesh Thakkar and discuss the top trading bets.
Le regole di guerra indicano qualche moralità. Qualsiasi paese che fa questi grossi
Welcome back. It's 25,750 on the Nifty. We're down close to about 65 odd points, but individual stocks in the mid-cap space continue to zoom. Angel One is, one stock which is up nearly about 7-8%. There is an increase in transaction charges. Jayashree team, McLeod Russell continue to see buying. Z Media, a stock that Vamakshi was telling us yesterday, has now rallied 90% in the last 1 month, and Take Solutions too, on large volumes, is taking off for the third consecutive day. Pull up a one-week chart of Take Solutions. But Mitesh is now with us for a quick technical check on the markets. Mitesh, afternoon slipped a little bit more, but again, not too much.
The only worry point for me is that we are below 25,800. Hope by the end of the day we can climb above that, and that should ensure that the immediate trend is not reversed, it's just a pullback. So we'll keep watching that. But on the stock side, I have a buy on Metropolis. That's a stock which is making a fresh high. So keep a stop below 2,200, maybe 2,195. Look for targets in excess of 2,300. And Memphis, I think that's a stock slightly turning negative. I would want to sell it if it breaks today's low, which is about 3,004. The stock is trading around 3,020 right now. So if it breaks 3,004, take a short position with a stop at 3040 and look for target of 2920.
All right. Thank you so much, Mitesh, for joining us as always with your technical picks. With that, let's move on and talk about some stock-specific movement. NMDC, that stock is under pressure amid a likely surge in prices. Nigel is joining us to tell us more on what's happening here. Nigel.
Well, that's right. It was expected, and sources tell us here on CNBC-TV18 that, in fact, NMDC has gone ahead and they've increased prices by 300 to 400 rupees per ton. That's effectively midnight. Now, keep in mind that from May till yesterday, the prices were down by around 1,000 to around 1,100 rupees per ton. So in that case, they're pulling back 30 to 40% of the price cuts that we saw earlier. The reason for this price hike is that global prices have gone through the roof. It's up close to around 25% from around $90 per ton all the way to around $110 per ton. So that's one factor. The second factor is seasonally, the second half of the year is a stronger period because steel production goes up, and if higher steel production comes about, then they need more amount of iron ore. So put that together, that's the reason why NMDC has hiked prices. Moving to Nalco. Now, Kotak has done a U-turn out there. They've changed their stance on the stock. They've upgraded the stock to add from sell earlier. They've also increased the target price to 235 from around 160 earlier. How does this come about? They've increased their EBITDA and EPS estimates for the next few years. That comes up for you on the screen. And also, they're giving it a higher multiple now. They're giving it a multiple of around 7 from around 5.5 times earlier. Let's highlight the 4 big factors that they are talking about. One is they've upgraded their estimates both on aluminium as well as on alumina. And on alumina, they're saying that the global situation itself is tight. So alumina could remain strong from here on. That's on the pricing aspect. On the cost aspect, they're saying they're getting captive coal from their mines in FY24, in FY25, and that's only going to increase from here on. So pricing, cost, and then what about volume growth? They're talking about from second half of FY27, the alumina refinery, the expanded capacity will come on stream, and that's what will help volume growth from year on as well. That project has been delayed, but now they're saying second half of FY27. So put all this together, Kotak has done a U-turn. Now they're positive on Nalco.
Thank you very much for that. Now moving on to Muthoot Finance, Manappuram Finance, Catholic Syrian Bank. These are all stocks under pressure. This is after the Reserve Bank of India has found several irregular practices being followed by the gold loan financiers. Abhishek joins in with the details on this. Abhishek.
Well, Rima, as you mentioned, RBI has found deficiencies in selected supervised entities with respect to gold financing. So comprehensive review has been advised for all, and a 3-month time period have been given to them. So on review and on-site examination for selected supervisory entities, RBI has found that there is prudential guideline as well as practices which are actually hurting the segment, or which are being followed unethically or illegally. So that is where RBI has pointed that there are several irregularity practices and major deficiencies which includes the likes of shortcoming in terms of use of third parties to source as well as appraise the loans, valuation of gold without the presence of the customer, and inadequate due diligence and lack of end use of monitoring of gold loans that's being given to customers. There is also lack of transparency during auctioning of golds ornaments and jewelry on default of the customers. So when a customer becomes NPA, the lending institute do tend to auction the gold, and that is where there are various transparency which are not being given to RBI. Weakness in monitoring the LTV, which is loan to value, typically 65 to 75% is the range followed by gold financiers, and there is incorrect application of risk weight, etc. So we have a note from Citi which says that the highest amount of gold loans amongst banks are of Federal Bank at 12.2%, Bank of Baroda at 4.6%, RBL and SBI at around 3.5 to 3.8%. In terms of NBFCs, Muthoot Finance has the highest share with 82.5%, Manappuram at 52.6%, IIFL Finance at 21.2%, and SBFC at around 16%. Back to you.
Okay, all right. So that is about gold financiers. Thank you, Abhishek, for joining in with all those important details. Let's take a short break now. Up next, we'll discuss the market fundamentals with Madan Gopal Ramu of Sundaram Alternate Assets. Stay tuned for that.
The last few days, China has outperformed the Indian market, but I think this is going to be temporary. There'll be a pullback. Nevertheless, it's a very, very positive situation, not only for China, but for all emerging markets. Why? Because, as you know, China represents such a big part of the index, of the emerging markets index. So you've seen China is now up tremendously, and that drags the emerging markets index as well, because India is such a big part of the index. Now, what happens? That helps all emerging markets, including India, because 50% of the money going into emerging markets is index money. So when the index goes up, a lot of people pile in, which is why you're going to see more and more investors coming to India as well as China. There's no question that India is on a growth trajectory and is doing very well economically. Now, the problem facing India, as SEBI has pointed out recently, is derivatives have become too big. There are too many people gambling on derivatives, and that could put a damper on the market. So we have to watch what measures SEBI is going to take in terms of the derivatives. When that happens, you'll probably see a downturn in the market, just temporary downturn, but you'll see some correction in India. Nevertheless, we are now on a long-term bull market for India, and I see the Sensex index going up to 100,000.
On the themes, I think power demand and electricity could be a slightly medium to longer term theme, and energy transition. And look at some of the data points. After 15 years, US is starting to see increase in demand for electricity, led by data centers, EVs, and so on and so forth. You will be surprised to know that CY19 to CY22, out of the top 10 air conditioning installation markets, 8 were out of Europe. Who would have thought that Europe will install ACs far more than any other country? And 8 cities out of the top 10 are from Europe because of new investing.
Welcome back. You're still tuned into Trading Hour on CNBC-TV18. For the markets, the mid-caps, they have improved substantially from the lows. The recovery is something that is leading to a 75-point gain on the mid-caps right now. It is closer to the day's high. Bank Nifty too has recovered. So it's a 45-point gain that we're seeing on the Bank Nifty as well. Pull up a Godrej Properties because that stock is in focus. The company just reported to the exchanges a while back that they will be raising 6,000 crore rupees. That's the kind of fundraise they are planning, and it could be via any mode. It could be equities, debt, and other segments as well. So we'll watch out for more details on this one. Company has been on an expansion spree, and they have spoken about needing a bigger chest to do that expansion as well. In terms of sectors, we have the Nifty IT, which is doing very well. The small cap space is continuing to do well. So the mid caps are catching up to that. And we have stocks like Kotak Mahindra Bank at the day's high. There's M&M, SBI, some of these IT names like HCL Tech and Wipro also, which are leading to the gains that we are seeing on the Nifty or the recovery that we are seeing on the Nifty currently from the lows. So it's a good time to get a fundamental check on the markets as well. Madan Gopal Ramu from Sundaram Alternate Assets joins us now to discuss market fundamentals and top sectoral bets as well. Mr. Ramu, good morning. Thank you so much for joining in. You say in your note that earnings is the biggest risk that the markets are looking at right now. Give us a sense of what are the earnings that you're expecting in FY25. Quarter one was weak, of course. We saw low single-digit growth in earnings across most of the sectors. What is the number for FY25?
Hi. I think we began the year with an expectation that the large caps will deliver a 15-16% sort of an earnings growth. Midway into it, we always believe that is going to be difficult. And in looking at what is happening in the major sectors in the Nifty, 10 to 12% growth looked possible. But end of Q1, we feel that there will be further compression in earnings growth. Probably in high single digit is where I think the Nifty is likely to end. We've also see a similar impact happening in mid and small cap. While the absolute growth might be higher than large caps, but compared to the expectations, even mid and small cap space are likely to disappoint. So this overall likely to put pressure on the valuation in certain segments of the market. And that's the view that we currently have on the earnings.
Hi, morning. This is Reema here. Wanted to get your thoughts on these wealth managers, brokers. Now they've had a phenomenal run. Stocks have doubled, tripled. But now the expectation is that, SEBI tightening the F&O regulations is coming. It could come very soon is what we've learned from our sources. And according to, so many notes that it could hurt earnings by 20, 25, 30%. Where do you stand on this entire, wealth management, brokerage kind of businesses? Do you think it's time to book profits?
I think the regulation-related impact is already priced in these stocks, in most of them. And with the recent rally that has happened in markets, I think generally in the first half, these stocks tend to underperform. In the second half, they pull back really strong, given the visibility that they have on the overall earnings growth that can happen for the full year. So that's what we probably might see in these stocks happening. This is more short term, but I agree with you that most of these stocks have given phenomenal rally in the last 2-3 years. These are high beta plays on the markets. When you turn negative on the markets, you cannot be holding these stocks. But I feel that Indian markets, particularly mid and small cap, continue to rally. And there could be some pullback on large caps with what is happening in China and all. We can discuss about it later. But I think we play in this, one of the idea, which is exchange. Exchanges is a long-term opportunity. And I think the kind of profitability exchanges can throw in the long term and the kind of conversion they do on every incremental revenue in terms of margin, it looks pretty attractive as a business. And today there is only one listed exchange company. So that we are positive from a long-term perspective. While the other market players, you can play them as an high beta, as a play on the market, but that's more 1 year view. And you need to review your positions end of every 6 months to see whether you're on the right track.
Okay. Wanted to understand your take. There are sectors like energy transition, NBFCs and consumer discretionary that you like. We got that update coming in on the RBI talking about gold financiers, some of the issues that they have there. What from the NBFC space do you like more? And the energy transition theme, there are a lot of facets to that. Which one is that you are bullish on?
Yeah, thank you. First, on NBFC side, I think we have always been bullish on NBFC from a structural play. Retail credit in India is still underpenetrated, and there is a long way to go. And there are sectors like affordable housing, used vehicle, and small ticket labs. These are areas where smaller NBFCs are growing, and they're doing a phenomenal job. There are 2-3 stocks that we are invested in. They are seeing a growth upwards of 30% plus. If you look at during COVID, their NPA numbers are also been very benign and very comfortable. And if you can select some of these companies and the founders who are running the show in a much stable manner and also playing this growth opportunity, I think there are a lot of money to be made in those areas. We are not generally very positive on gold as well as salaried housing loans within the NBFCs, primarily because these are areas where banks are very active. And when banks are very active, I think you are left with the most risky segment of the customers. And also your pricing ability is also pretty, it will be constrained given the competition from banks. So given these reasons, we have been not very active on the gold side as well as on the housing loan, particularly on the salaried side. But we like affordable housing, used vehicle, and small ticket lab, MSME lending, these kind of areas. Where I still feel banks are not very active, and it requires a lot of offline presence, which protects them from even the fintechs. So these are the spaces that we are interested in. On the energy transition space, it's a pretty interesting thing that is happening, not just in India, even globally. If you look at India, India's energy demand is growing, and simultaneously we want to meet our climate change targets as well. But always it has been unaffordable. And now, given the battery prices where they are, the lithium-ion battery prices where they are, and even the solar modules prices where they are, you can actually try to reach this climate targets and also meet energy demand at a very affordable level without any government subsidy. And this is definitely a structural trend. And given what the commentary from technology experts in globally, the prices are further likely to go down. So you can actually add a lot of these new energy technologies and be a large part of the energy mix in India. That's a story that can play over the next 5 to 10 years, I think. Within that, we like companies which are electric vehicle battery manufacturing, chemical manufacturing. We also like companies which are, see, one more thing that is happening is government is protecting the domestic manufacturing in these areas. If you let it open, I think Chinese can literally kill the space. But given the government protection for domestic manufacturing and these policies being consistent, there is a reasonable amount of money to be made in these areas. So we are positive on one, the solar being an active part of the power sector energy mix, and on the mobility side, electric vehicle penetration growing up in India in a significant manner. You can play them either on the either the developer in the power side or the OEMs in the auto side. But more so, we find value in the second leg, an auto ank, which is more focused on the electric vehicle component supply. Also on the power side, equipment suppliers in this space, they look much more attractive, and they generally perform well in the early part of the cycle. So that's where our focus is.
You know, we were chatting with Bajaj Auto earlier, and he said that their green energy portfolio, which is EV, two-wheelers, three-wheelers, CNG, etc., now constitutes 40% of their domestic sales. So that's seen a big jump. Just a quick word. In the last conversation, you said that you added on a metal play. I think it was an aluminium play, which was a tactical move. Now, that's played out really well, given the stimulus from China, the rally that we've seen in metal stock. So running out of time, what happens to that tactical play on, a company like, say, Hindalco? Do you ride it, or it's time to book profits?
No, I think there is one more leg to play here. I think given what is happening in China, if you are going to be a large cap player in India, you will be worried about the recent performers, particularly the defensive sectors like FMCG and healthcare. Where you will move the money, you will have to move the money where the beneficiaries from China's uptick that can happen. So metals likely to be a favorable position there. So that's something can have one more leg of move is what we feel.
Okay, all right. So that will be an interesting theme to watch out for. Thank you so much for joining in today with all your thoughts and the outlook on the markets as well. Before we move on, let's talk about some good news for our viewers. India's business news leaders now click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store.
So I think there are 4 important points: global warming, data center, which is AI, electric vehicles plus bitcoins and cryptos, and the constraint on transmission and ESG, which is leading to the entire energy transition and increase in demand for power. I think this could be played through various things: distribution, transmission, or generation, and the ancillaries to that. So I think it's a mega trend. Valuations could be something which is prohibitive right now, but keep a close watch on this trend over the next 5-10 years. Valuations are one standard deviation above overall market, and in certain pockets it's crazy. Look at the SME part of the market; it's in a different frenzy altogether. 65 times the index is up over the last 5 years. So I think what I would suggest to most of your viewers and the investors in the market, this is the time to go back to basics of investing. Make sure that the quality of the company you are investing is not compromised, and make sure that the portfolio is resilient enough that whenever there is a drawdown, the portfolio stands tall. So these are the few things which is under your control, which you can do.
Welcome back. Markets very quiet, but one of the big developments over the last 24 hours was that SEBI board meeting which took place, and the press release was only announced much later in the night. We were all waiting for what comes out. Shivani is now joining you with some more details and the key highlights. Shivani.
Well, yes, a slew of measures were announced late last evening by the market regulator after the board meeting. Many of these announcements were expected as well. SEBI announced that the stockbrokers must implement a UPI block mechanism or 3-in-1 trading by February 2025. Another important thing for the market is that the regulator has expanded the T+0 settlement cycle to the top 500 market cap stocks. Another important thing that was expected is that SEBI has announced a faster process for rights issues, now completing within 23 working days. Promoters can renounce their rights to specific investors, enhancing flexibility. One of the things that everyone was watching out for, SEBI has also launched a new asset class bridging the gap between mutual funds and portfolio management services, the PMS, aimed at tackling unregistered schemes and providing investors with flexible regulated options. The minimum investment is set at 10 lakh rupees and the safeguards include no leverage and capped derivative exposure. On the mutual fund side, the new MF Lite framework has also been announced. The new norms ease compliance for passive funds, allowing asset managers to opt for relaxed regulations or hive off passive schemes. The regulator has expanded the definition of connected persons under the insider trading regulations as well, now including firms and individuals sharing households with connected persons that were defined earlier. This is one of the things that is seeing mixed reactions from the experts. Interestingly, no announcements on as expected on the F&O segment as of now. Back to you.
Shivani, thank you so much for joining in with all those important details. By the way, substantial recovery on Nifty from the lows. It is in the green right now, and Bank Nifty is the one which is supporting, and support coming in from IT as well. So we'll keep tracking market moves for you. For now, it's a wrap on Trading Hours. Stay tuned. Halftime report will come up next.
What is the Ashoka differentiator?
Where when we first dreamt of Ashoka, we had no idea that students from 40 countries would be applying to our university. Now our aspiration is, why shouldn't it be one of the best in the world?
We are the best option for anyone wanting to do high quality scholarly academic work in India.
You firmly believed in was that this must be an institute that's also inclusive.
We are perceived as being elite. I think that's largely because we do get very good students and some of them from the very best schools. So I do think we're serving the country in one way, which is we're preventing the dollars from going outside. Individuals, R.K. Damani, Jhunjhunwala, Rakesh Jhunjhunwala, many others have contributed. 200 founders have contributed towards building this institution because they believe it's an important team.
Stocks trade ranged after a sell-off on Monday following Powell's indication of gradual cuts and a rise in tension in the Middle East, even as China eyes a recovery ahead. IT and capital goods are prominent gainers, even as metals and realty track.
Being a top private bank is Kotak Mahindra's rightful position, says CEO Ashok Vaswani, who eyes significant market share gains following the successful implementation of RBI-directed corrective actions. He expects the bank's network to expand to 3,250 to about 35 branches in the next 3 to 4 years.
After a heady September that has seen Bajaj Auto emerge as the number 2 in the EV two-wheeler segment, the company is now confident of resting the top spot given the strong momentum and its new product pipeline.
Reserve Bank of India has spotted deficiencies in adherence to prudential norms and in business practices of several gold loan providers. The regulator has given lenders 3 months to set things in order. Analysts see limited impact for large gold financiers.
And market regulator SEBI introduces a new product to bridge the MF-PMS gap, eases rules for investment advisors, investor nominations and debt issuances, allows market trades using UPI, gives mutual funds a light option but widens the definition of connected persons in insider trading, a concern for many.
You're watching us here on Halftime Report. I'm Manglam Malu. With me, as always, Ekta Batra. It's an interesting day of trade so far. As you can see at the top of our screens, all the major indices are back in the green, but not after being in the red for most part of today's trading session. So it's been a fairly wobbly market. As you know, the intraday chart of the Nifty would tell you that we started well in the green. At one point, we were high by almost 80 odd points as well. Thereafter, we sold off. For a brief period, we were lower in today's trading session, and thereafter, we saw a bit of a recovery, and now making an attempt once again to stay in the green. What's actually doing better is the Nifty Bank, which is hovering around levels of 53,000, and the Nifty Bank will be the most important index to watch out for today as well, because along with the Nifty Financial Services, we have the Nifty Bank Expiry 2 playing out today, largely because tomorrow is a trading holiday. The mid-caps doing fair better than the frontline indices. We have nearly 2 stocks advancing for one which is declining. So the lines, while coming close to each other at one point in time, have now moved back again with the green much above the red one.
Okay, all right. Yes, Manglam, overall, as of now, you can qualify it as being probably a little bit of a quiet session for us. The markets are consolidating after that broad-based selling that we saw yesterday. Just keep an eye out on the macros. We have the IIMA survey, which is indicating data with regards to inflation going ahead. So do watch out for that. But separately, we had the core sector data for the month of August, which contracted 1.8% for the first time in 42 months. We have auto sales in focus. Till now, M&M Auto, Bajaj Auto, Escorts have been above estimates. And what stands out is probably the advance decline ratio in our market, which is still on the advancing side. So let's see whether we manage to sustain that or not. Also, the internals for some stocks are still looking good. So, for example, Balrampur Chini, Sri Renuka are at the best levels that we've seen in a year, along with even Tata Communication as well as Metropolis. So that seems to be the key point, that there are some stocks which are managing to gain. Macros continue to be in focus, and obviously the global space. But let's kick off the show with the CNBC-TV18 exclusive. The MD and CEO of Kotak Mahindra Bank, Ashok Vaswani, says growth and transformation of the bank is the mandate which is given to him. He also reiterates that the bank is regularly engaging with the Reserve Bank of India in an effort to lift restrictions as soon as possible.
Kotak is a great brand. Kotak is a great platform. There's no reason why Kotak shouldn't be within the top 3 private sector banks. And I'm talking not only of the bank, I'm talking about our subs. Where our subs are within the top 5, why we can't be within the top 3, or just full stop, be within the top 5, right? Growth and transforming for scale is exactly what this mandate is about. India has the best digital public infrastructure compared to any other place in the world. I've worked in every other place in the world. I've never seen anything like this, right? Now, obviously that has led to the demand for digital services having gone up dramatically. And it's about the bank systems having to keep up pace with that. So we've been spending the last couple of months really focused on how we grow and make our systems foolproof. So we've taken this as an opportunity to really say how we'll really leapfrog and make our systems really resilient and relevant for the days to come. So I think we've made very, very good progress. Obviously, we've been in continuous touch with the RBI, sometimes even every week, updating them, getting their guidance, making sure we're on the right path. And I think we've made tremendous amounts of progress. It's not unusual for deposits to drop off in the first quarter because you normally end March on a pretty high. Frankly, I've worked in the US, I've worked in the UK, and deposits have pretty much stayed flat as a percentage of GDP and continued to grow all over the years, right? And there, obviously the participation in the capital markets is much, much, much higher than in India. So this notion that suddenly, there's going to be a complete dearth of deposits and everybody's going to invest in the capital markets,
Overdone?
I think it's overdone, right? And I think that, look, as long as there's an economy, as long as there's expenditure, as long as there's businesses, deposits will continue to kind of grow. Is the customer becoming more sophisticated and savvy? Absolutely. And that's bound to happen, right? But I don't see this situation as suddenly deposits are going to suddenly disappear.
Interesting, insightful commentary coming in out there from Ashok Vaswani, the MD CEO of Kotak Mahindra Bank. Remember, you can catch the entire conversation tonight at 7:30 p.m. only on CNBC TV18. Right, let's get back to the markets right now. The Nifty is giving up some of the gains that we saw from the lows, still holding mildly in the green, but just about so. It's the first of the month and auto stocks are in focus on the back of September sales data coming in from, all the automakers. We've had a bunch released so far. So to give us or get us up to speed, we have Vinny joining in to tell us what she made of the numbers so far and what the trends are.
Good afternoon. So in terms of trends that we are talking about, so far so good, at least it seems like in the numbers that have come in. M&M Auto overall has managed to see a good set of numbers for the September auto sales, above what the street was estimating, while M&M Tractor is just in line. So the tractor segment is just starting to see a recovery because rainfalls have been better. So yes, there is hope that second half of FY25 will be better. That's what the management of M&M even told CNBC TV18, as well as Escorts Kubota. When you look at their numbers that came in for September, they saw growth of 3%, which surely did beat the street estimates, but they also too highlighted a similar trend that second half is going to be better. For tractor segment, we will be expecting good numbers in terms of volumes coming in for the second half of the year. Two-wheeler segment, we have Bajaj Auto that reported its numbers, good set of numbers in terms of the sales for the September month. They saw a growth of 11% on a year-on-year basis, while a 34% growth even on a month-on-month basis. So yes, we have seen the growth momentum continue for two-wheelers, and the management of Bajaj Auto also spoke about the 6 to 8% underlying growth that will be continuing for the motorcycle segment in the month of October. Let's not forget, for the auto segment in a whole, the festive season is something that everyone is watching out for and expecting these volumes to be much better. So yes, October, November is what we're keeping an eye out on in terms of better volumes going forward.
Okay, all right, Vinny. Thanks very much for that. Some news on Jubilant Food, where there is a tax demand on account of certain transfer pricing adjustments. And we'll try to get the amount. The company is going to appeal the tax demand order before the Income Tax Appellate Tribunal. It's got a final assessment order for FY17, with regards to a tax demand, which is around 71 odd crores. The stock, as you can see, is under pressure on the back of that news, down around 3% But let's...
We'll just have to watch out for a couple of things, whether there is any settlement coming by out here or not, or does the company have to go ahead and pay it? Because 71 crore by itself is a small amount on an absolute basis. But if you look at the EPS of the company, right, it's roughly about 20% of the company's profit. So if it does go ahead and have to pay that 71 odd crore rupees, then will that be taken off the EPS? Does the company have provisioning for that or not, is the big question that we'll need answer to. And add to that, if you look at the stock over the last 3 months or so, it's already seen a rally of almost 30-40% from the lows. So on the back of a rally that we've seen in the stock already, some weakness that we're seeing in the market, and add to that a 71 crore tax demand, which amounts to roughly 17 to 20% of their EPS, has resulted in the stock declining. So it will be very interesting to see what pans out in this.
Okay, all right. So this is probably a story to track. Jubilant FoodWorks currently at around 661 odd rupees, down around 3% But moving on, and in fact going back to the auto space, earlier today we did catch up with the management of Bajaj Auto and M&M. Listen in to what they had to say on their sales numbers.
Steady improvement in Nigeria and also, of course, in exports. October to December is a slightly better period in Nigeria. And that contributes to a steady upward growth trajectory for exports as a whole. As we've been saying, that month on month, we expect to see about a 10% improvement in exports. That's what we've been clocking. And I think that hopefully should continue.
First of all, I mean, we are seeing very strong momentum in the market. And clearly, this is on the back of some very good rainfall. Of the 36 agri-climatic zones that we have in the country, 33 zones have got either normal or above normal rainfall. And even in terms of, if you see the state stratification, for only the states of Bihar and Punjab do we see little bit deficiency in the rainfall, but broadly all the agri states also have very good rainfall. In terms of revising the guidance, no, we will still maintain at 5% level because we want to see through the festive season and then maybe take a call at the end of Diwali. That would be our view. But most of the heavy lifting will happen in H2 of this year, and that would give us an overall 5% growth rate.
All right, that's the management of Mahindra and Mahindra. We're giving you a roundup of all things auto. But you know what? If you're traveling and if you're in the car, etc., you can get all of these updates on your phone itself. And that's the good news that has come in for you viewers. India Business Leader, News Leader is now just a click away. We're introducing to you CNBC-TV18's all-new app. You've got to get instant access to all the breaking news, in-depth financial articles and financial world updates coming in on your fingertips. In fact, you can download the app on your phone itself from either the App Store or the Google Play Store and get all the news and updates that you see on the channel on the go in real time.
So we see Ashoka's mission to really be able to serve the country in solving these problems with the cadre of young people that we are feeding into the workplace.
If you want to maximize EBITDA, you'll be a teaching shop. You'll ignore, why would you run a PhD program? It's pure cost, no revenue. Right?
So how do you look at ROI then as far as Ashoka is concerned?
It's impact. We eventually will term out, and alumni, once they have matured, will take our place. You know, we have no owner. There's no one family that backs this place.
The myth is that, if you study history or philosophy or political science or English literature, where will you get a job?
I'm a classic example of that. I studied philosophy and guess where I am. So
We have students who've turned down Berkeley, who've turned down Duke, Urbana-Champaign, London School of Economics to come to Ashoka.
this takes me back to a conversation that I remember having with Mr. Murthy about starting Infosys. And I said, like 7 of you, of course, he was the first among equals. But I said, how did you get a decision made? Because, and especially we are known as argumentative Indians for a particular reason. What was that like? And he told me, he said, look, it was very simple. We had a sort of unwritten rule that in God we trust, everybody else brings data to the table. What was it like for you?
So we started with a smaller group, as Pramath was saying, Sanjeev, Pramath, myself, only a couple of others. It was a small group. And I think we spent a lot of time. So even as a precursor, we used to meet one Saturday a month at my old office, and we would have conversations. And this happened for a couple of years. So I think that helps with alignment. And then ultimately we said, we want to build a liberal arts and sciences, an interdisciplinary university. So everybody was aligned. This was going to be
And some people did get off the ship.
Yeah, because some people wanted something else. So we were very clear that Indian higher ed had become too specialized, that we needed a new institution that really provided breadth and depth, that was interdisciplinary and holistic, and that gave students choice. So we agreed on the principles. We agreed on some of the disciplines we would cover and what we wouldn't cover. And we also said that we have to hire the best in the world to come, and the pedagogy has to be exciting. We'll primarily be undergraduate to start with.
Right.
And then over time, we'll build out a very strong PhD program. We won't have a very big master's program. So I think we spent a lot of time, so we were aligned on what the broader purpose is, the vision, broadly what the strategy is. And then we were able to bring in many other people. So we also had a governance model where we said, even if you put in a lot of money, you still have one vote. And you operate through...
How did that conversation go?
Well, I think a lot of it depends on, Sanjeev and I were initially the two largest contributors. And we'd said, we are going to do this. So it just became the norm. And we just went to everybody. When actually there was someone who wanted to put a lot of money in, wanted more than one vote, we turned that person down. So it's just a principle you stick to as you build it out. But we never realized when we started that we could end up becoming the largest, we think, collective philanthropy project in India.
Right.
We've raised about 3,500 crores, Shireen, in pure philanthropic money. We've had people like HDFC Group to Axis Bank to the Bajaj Group support Ashoka at scale. Individuals, R.K. Damani, Mr.
Welcome back. Well, for the markets, just want to point out that while it might be quiet on the frontline indices and the indices in general, even the mid-cap index, there are specific stocks which are in focus on account of news. So maybe we can just pull up Sun Pharma. They've in fact announced that they will be tying up with a company for licensing for a specialty product, Fibromin, which is an immunotherapy drug. So they have the rights to commercialize Fibromin globally. So that's the reason why that stock is in focus. We also have Zydus, which is in focus. That is because they've received an establishment inspection report along with a voluntary action indicated status for their manufacturing facility in Ahmedabad. So that's the reason that stock is seeing a little bit of a marginal gain at this point in time. But nonetheless, the other one which is really moving is Tech Mahindra. It's one of the top gainers on the Nifty. And this is following what is a bullish report come in from CLSA. Nimesh is here with the details on what the brokerage is saying. Nimesh.
That's right, Ekta. The stock is buzzing in trade on the back of a big upgrade coming in from CLSA. Just before the earnings season, there's an upgrade on Tech Mahindra to outperform from hold, and CLSA has raised the target price to 1749. Now, they believe that the EBIT margin expansion is pretty much underway, but the next milestone would be the order book, and that's something to try going forward. However, the broad-based growth is only going to come in FY26. The growth will come from three large verticals, which is financial services, healthcare, as well as manufacturing. They will have the maximum amount of growth for Tech Mahindra going forward. Now, EBIT margin target of 15% by FY27, that's the stated ambition of the company. Looks like it's pretty much achievable according to the Citi note, and they believe that the recent ramp up in EBIT margin can provide further scope for re-rating. So, on back of all this, a big upgrade to an outperform on Tech Mahindra now, and they've raised the target price to 1749 versus 1650 earlier.
Take that point, Nimesh. Thanks a lot for that. You've been a good luck charm for not only Tech Mahindra, which is the top Nifty gainer, but also Team India, where, Jasprit Bumrah has just gone ahead and taken the last wicket of Bangladesh, setting us up a target of just about 96 to win this test match. What a game this has turned out to be. 2.5 days of rains, and now we're staring at a result which is an India win.
Well, and in fact, this will also be significant from a point of view that for the World WTC, we'll have another points to add, right? And that's going to be significant. I think that's the reason why we played so aggressively in the first inning.
Take that point, and what a game it was. Thank you, Nimesh, for joining in, telling us about Tech M and Test M also. With that, let's talk about another stock which is buzzing around. That's Angel One. A broking firm, the broking firm, Angel One that is, has revised brokerage charges for both cash and equity delivery transactions. This after there were revisions of charges coming in from the exchanges itself. So no loss of margins out here. In fact, the fact that they're able to, pass on through these margins is something that the street is excited about. Up 5% on that stock. Vamakshi joins us with more on this. Vamakshi.
Well, absolutely, Mangalam. That's right. Angel One has revised its brokerage for cash and equity delivery transactions. The brokerage charges that will be levied are at flat 20 per order or 0.1% plus GST, whichever is lower per executed order. The minimum brokerage of around 2 rupees will be levied. Keep in mind that Angel One earlier did not have any brokerage for cash delivery transactions, and overall it was offering the lowest brokerage rates and lower other charges as well as compared to some of the other discount brokers. Now this revision in charge comes after NSE and BSE both revised their transaction charges with effect from 1st of October. NSE and BSE have now moved away from the slab-wise fee structure earlier and have now moved on to true-to-label charges, which is a flat transaction structure. Angel One earlier in July told us that on account of the shift to the new fee structure, they are expecting an impact of almost 8% to come in on their revenue. But this 20 rupee per order of the brokerage that they're going to charge could help them mitigate some of the impact that could come from loss of revenue from this particular source. But it will be important to watch out for the impact that could come in on the volumes generated. So overall, positive for Angel One. They're trying to mitigate the impact coming in from the revision in transaction fees.
Okay, all right, Vamakshi, thanks very much for that. Angel One, the 52-week high stands at around 3,900 odd rupees. So let's see whether it makes its way closer towards that level, currently at around 2,687. Just want to point out that from the same theme, we have IIFL Securities, which has jumped around 7% today. So that stock has gained around 152% this year and is seeing a good amount of traction in today's trading session. We'll take a short break, but up next, we'll discuss technicals. Sachidanand Uttekar will join in with his calls.
Junjunwala, many others have contributed. 200 founders have contributed towards building this institution because they believe it's an important project for the country, that India needs a new institution. That's a new form of education for India.
The valuations are berserk over there. I mean, again, great companies, but and again, I usually don't talk about stocks, but just to put some sense. And again, don't get me wrong, I'm not disputing valuations or anything, but just to give the Infosys example. Let's say our favorite stock this year was, say, Zomato. It's a $30 billion market cap. Let's say we expect the market normally to give you a 15% CAGR for 10 years, which is 4 times. So it should be a $120 billion market cap in 10 years. Let's say it's a 30p by then because we are a fairly large company. So it needs a $4 billion PAT, profit after tax.
So when we say melt up, I just want to sort of finish that point. It usually we are talking about like a frenzied move in the very short term, but that's not what you mean. You think
I mean it makes a major long-term top, which is not a great thing. So, I mean, it's great that we are going up on a wall of worries in a way that every time we meet, we are worried about, is this the end? Is this market going to fall? Will the investor flow stop?
Correct.
Will people run away? markets don't climax at periods like that. And this seems to be more like the 90s bull market, where small caps were doing phenomenally well. And what tipped it eventually, of course, one was the Asian crisis, which happened outside our control. And B, it just got overwhelmed with supply. And that's really what capitalism should do, that prevent what I call that melt up where the entire market goes up 10x in a decade. And then you don't see that prices for, maybe next 10 or 20 years. So I'm hoping we don't get a melt up and supply response takes care of it. And supply is coming, but it's still what I call a quadrant 3 or quadrant 4 level supply. The big guys haven't yet come. And in the bigger ones, if I take the top 10 companies, no one is supplied. Having said that, the owners of those companies, whether it's BAT selling down ITC or Singtel selling down Bharti, that's happened. But it's not like the Reliances or the Tatas or someone has come with massive issuances, which I think is around the corner. It should come.
I mean, bankers we speak to tell that over the next 12 to 18 months, about $25 billion worth of IPOs should happen. But that is, I'm not sure how much of the...
So, Prashant, 25 also, I'm saying, is a small number now. It's a $5 trillion market cap. So if you don't do 50 billion, is 1%. So issuance is, the government ought to be doing 25 billion. The larger groups easily can take 25 to 50 billion. And this is combination of primary and, of course, QIPs and so on. We've seen promoter selling, we've seen PE selling, we've seen MNC strategic selling, and it's gone from across the world, right? If GE of US has sold, Whirlpool has sold, BAT has sold, Sumitomo from Japan has sold, Singtel has sold, and now Hyundai is approaching the market. So all these chaps are getting it right. But we still haven't come and raised the money.
And that will happen according to you?
I think it's inevitable. I mean, that's what capitalism is, right? That demand for paper will create the supply.
And we're a long way off from that climax or whatever.
I hope I'm not proven wrong next week, but I think this has legs to go.
This has legs to go.
Welcome back. You're watching us here on Halftime Report. The indices are all flattening out right now. We have the Nifty Mid-Cap Index, Nifty Bank flattening between green and red. So good time to talk about the F&O space, largely because we also have the dual expiries today, Fin Nifty and Nifty Bank. Nifty has been dragged lower by a couple of these heavyweights. So if you look at the contribution chart, you'd see Reliance being the top dragger on the Nifty. On the way down, though, important to track the 20-day exponential moving averages on both the Nifty Bank as well as the Nifty, which may prove to be good supports. The Nifty Bank actually went very close to the 20-day exponential moving average today. From there, it's seen a bit of a recovery. For the Nifty itself, the 25,900 call as well as the 25,750 put have both been active. So 25,900 call telling you that levels as we move towards 26,000, there may be some supply coming in. 25,750 put telling you that levels closer to 25,700 thereabouts, we will see supply. We will see support, and that's exactly the range that we're looking at. So on the dual expiry, the Fin Nifty and Nifty Bank expiry today, for the Nifty Bank, 53,000 call has the maximum amount of open interest along with 52,800 put. So this 200-point band is what the street is hoping for the Nifty Bank to trade within today. And for the Nifty Financial Services, it's an even narrower band, 24,600 call and 24,500 put. Both of them extremely active. Where are we? 24,478. So here is where the support for the Nifty Financial Services is likely to come in. One stock I'm watching out for is Birlasoft, may enter F&O band. Remember, yesterday 4 stocks went into F&O band, and today Birlasoft is one of the likely contenders to enter too.
Okay, all right. Thanks very much for that, Mangalam. Well, we have Sachidanand Uthekar joining in to discuss the technicals of the market now. Sachidanand, hi, welcome to the show. Well, quiet day on the indices. Maybe it's pre-holiday and after, consolidation after that strong sell-off that we saw yesterday. What's your call, both stocks as well as index?
Good afternoon, Ekta. Good afternoon, Mangalam. I think clearly the focus is on Nifty Bank right now, and already Mangalam has already shared the data points. But if you look at from a price perspective, the Nifty Bank is holding well above that 5-week exponential moving average support, which is placed at around 52,790 kind of a range. And if you also look at the 20-day exponential moving average is also placed somewhere close to that. So we don't see the Nifty Bank, sliding lower from here on. So probably there could be a recovery in the second half. From a trading perspective, we may see a swing today itself towards 53,400 on the higher side, and that's why we are recommending building long positions here. Even if you look at the Nifty as well, for the last 4 weeks, the Nifty has been progressing well in a rising channel formation. The channel pattern support is somewhere placed close to 25,750 thereabout. This is where the current placement is, and that's why we are also recommending some support and some stability near this particular level. We are looking at a quick recovery towards 25,910 levels in a day or so, and a further rally towards 26,030 from an expiry perspective. So we are bullish when it comes to both the indices.
Okay, and stocks?
Well, on the stocks front, LTI-MIT is something which we have recommended to our clients. Now, if you look at the daily chart structure, the stock has displayed a good support base near its 20-day exponential moving average, which is placed somewhere close to around 60 to 20. The data is indicating a short squeeze. It has already spent a good amount of time within the band of 6100 to 6300. What we are looking at is a kind of a triangle formation on its 60-minute scale, which is about to mature. And that's why we are looking at some very strong momentum play unfolding here. 6460 is the probable target for this particular stock. The stop loss can be placed at 6,200 on the lower side on a closing basis. The other stock which is on our radar is ABB. The structure has been doing very well. For the last 9 weeks, the stock was consolidating within a particular range. Now, on the daily scale, it has already displayed a bullish flag formation, which is again a continuation pattern indicating a price target somewhere close to around 84.75. And that's why we are recommending building long positions here, keeping a trading stop loss somewhere close to around 82.20.
All right, Sachi, thanks a lot for that. Meanwhile, we have some data coming in from Ashok Leyland. Total sales at 17,233 units, largely in line, mildly below the CNBC-TV18 poll of 17,433 units as well. The total sales are down 10% year on year, nothing that the street wasn't expecting. So as a result of which, the stock hasn't moved much. In fact, it's up around 1.5%. We also got some numbers coming in from Eicher Motors for Volvo, and that's for the CV sales. They declined, but for Eicher Motors as a stock, the important data point to watch out for will be the Royal Enfield sales. So we'll keep an eye out on these numbers as they do come by. But
let's move on. 5.7%. The total CV sales are up 5.7% to 7,600 odd units. So that's not done too badly, but like you mentioned, Royal Enfield will be the key thing to watch out for.
Would be important to watch out for. But let's talk about an important news piece that came by on Saturday. India allowed the exports of non-basmati white rice exports as inventories in the world's biggest exporter of the grain surged, and farmers are now set to harvest a new crop in the current weeks. How does that impact the listed players? Well, we do have Akshay Gupta, who's the head bulk exports at KRBL, now joining in. Thanks a lot, Akshay, for joining in. The big question is, one, what proportion of your exports come in from non-basmati? And now that, the ban has been lifted, the export duty has been reduced, what would it mean in terms of you being able to capitalize on this opportunity? How could the incremental volumes pan out from here?
Right. So, yes, for us, actually, 95% of our exports are mainly for basmati rice. So it's only 5% exports that we do of non-basmati in our own brands, and that is regional varieties such as Sona Masuri, Poni boiled, which is to the Indian diaspora living abroad. So that is what we do in non-basmati rice. But given that the ban is lifted now, there are obviously some opportunistic businesses that keep coming in for bulk trade to countries like West Africa, China, Philippines, Indonesia. So we are obviously looking for those businesses to come up. And if there's a good lucrative opportunities there, we will grab those opportunities.
Could you quantify the size of opportunity here? Because you said these are opportunities that may come by. They're not substantial, but I'm sure they're tactical. Every once in a while you'll get them, right?
Right. So just to give a perspective, last time, about 2 years back, before the ban was there, we did about 100,000 tons of broken rice to China, and that was a completely opportunistic business. So it was valued about 350 crores. So a business about 100, 200, 300 crores can be done if if pricing is good and if we feel that we are getting good margins, then only we, delve into those businesses.
Okay, so Akshay, preliminary, any kind of opportunities you see could be a possibility at this point?
Immediately, our branded regional rice sales, which we do to countries like Europe, USA, and the Middle East, which is mainly to the Indian diaspora living abroad. So that would account for like 5% of our overall exports. And then bulk business could be about 100, 200 CR, but given the opportunity. I mean, that can not be commented now, but yeah, given the opportunity, maybe after a couple of months, we could do that business as well.
Okay, all right. So there could be a possibility of a windfall opportunity which might come up, but as of now, you don't have clarity on that.
Right.
Okay, all right. The other thing is that the MEP on Basmati was removed in mid-September. What are your average realizations? We understand it's above the MEP in any case. And what kind of opportunity is it presenting to you all?
So MEP, as we mentioned last time also when we had an interaction, MEP does not have a direct impact on our regular export sales because we are mainly into the branded segment and our average price is above $1,200. So it doesn't affect us. But now that the MEP is removed, again in that space also we get an opportunity to do bulk basmati business such as tenders to certain Middle East countries where they do tenders for food security. So we can delve into those businesses as well. Again, so the lower segment is mainly a business where we see opportunity. If we see a good margin coming in, then only we do those businesses. So it's hit or miss business.
Final question then before we let you go, Akshay. Your first quarter exports were down 54%, close to around 250 crores is what you did. This also was due to some distribution challenges in Saudi. Wanted to understand if those challenges are behind you and what kind of export run rate are you likely to see over the next few quarters?
So the entire 54% was not because of Saudi. So there was some businesses done to Iran as well, which we might resume given the MEP is lifted. So I think we can cover up some of those exports. And then the Saudi part, it's still undergoing. It's still not resolved. It might take another 3 to 4 months for us to get back on track with that.
So this year, how much exports are you targeting?
I cannot give you a number, but I think we will see a good increase compared to last year. I think we'll cover some ground there.
Okay, all right, Akshay, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that stock is up around 0.5% at this point in time. They are expecting that lift of export bans on non-basmati exports, not basmati rice, will eventually help the company, but they can't quantify the opportunity at this point in time. We'll take a short break. We'll get you more on the markets. A lot of stocks in focus on the other side.
Use capital goods, real estate, infrastructure. That's essentially been the leader of the bull market. But people, defense, etc. Right? That part, it looks like we're starting to rotate. People are starting to rotate out of that,
which is inevitable.
Inevitable. You think that's done, or is just like a pause and refresh case
again, in terms of market cycles, when you see the leaders of every cycle, then they go to sleep for a decade. So the leadership of 2000 to 2007, which you were earlier alluding to, was indeed commodities and infrastructure, power, real estate.
Right.
And then the excesses which happened in that period made them complete pariahs. So 4 years ago, we were on a show and Ramesh and I remember we would talk about PSUs and everyone was like sniggering like, what's wrong with these chaps? But because the correction had been so steep that it's eventually an investor's job is about valuation. Like I said, the greatest Infosys may not give you the return and the what so-called poorest PSU may give you the best return. So it was a mean reversion trade which happened, and of course all the right policy things happened for infrastructure and defense and railways and so on. So you go from being what I call terrible to bad is a rate of change, but you went from terrible to being good.
Yeah.
So that rate of change is so dramatic that's what the markets have discounted.
And now maybe to great.
And now you're imagining it to be great. Some of them may make it, but most of them won't. So I would be very, very cautious in those kinds of places. And typically these are not high return areas. By definition, if you make 25% IRR in an infrastructure business, the cost to the consumer, which is the average public, is going to be too high. So your money made is really on leverage, and therefore the return on equity comes in that business. So, and people are shy of doing leverage after again the last cycle. And the flip of it, to just complete, the leadership of the last cycle was all the high quality businesses in the last decade, which were all getting re-rated. Asian Paints, Page Industries, Kotak Bank,
consumers,
HDFC,
retail.
even, and including banks, because banks became 30% of the index. And you're seeing that getting corrected, that Kotak, HDFC haven't performed for the last 5 years. Again, great companies, but it's the excess of that which is now getting reverted back. And now they've become so hated that when will HDFC move? And there are memes on HDFC doing the round the way it was for ITC. And then you saw the way when ITC moved, it just doubled before anyone realized it.
You think...
so things like that tend to happen. I can't forecast what will happen in...
But you're very bullish on the financialization theme.
I am very much.
The magic one that everybody is talking about at this point in time is AI and what AI can do, and specifically generative AI. How do you see that linking back to the efforts on the healthcare side, the innovations that you're working on? I mean, how transformative is AI likely to be, or are we on the cusp of seeing that kind of transformation?
Usually when you get new technology, it's applied in the rich world for those who are well off. And what we'd like to do this time with AI is make sure, both in terms of discovering new interventions for nutrition or vaccines or drugs, and helping give people health advice, in voice and their native language, that we actually bring these AI advances to those most in need. I mean, after all, where's the greatest shortage of doctors? It's in developing countries. And so the foundation is leading the way by giving grants to various people and pushing this forward. Even for a topic as complex as nutrition, the AIs are going to help us understand things faster than we would without it.
If you could do a startup all over again and focus on AI, what would the niche be that you would like to address?
Well, if you could go back to my school days even, and then I was saying, hey, how do we make software as smart as human beings? And I was constantly thinking about it. I underestimated how...
Welcome back. Well, for the markets, it's quite quiet, but just want to point out Mankind, which is one stock in focus. It's up around 0.3%, but there's a development which has taken place where the company has executed a business transfer agreement. They've transferred their over-the-counter business to a wholly owned subsidiary, which is Mankind Consumer Products. Remember that this basically includes all of their consumer brands such as Manforce, Health OK, Prega News, Acne Star, and FY24 revenue was around 700 odd crores for this particular business. They say it's a broader strategy to enhance focus on the consumer business. Well, some more details on stocks specifically. Century Textiles is in focus on account of some news. Birla Estates has sold 95% of inventory for one of their projects in just 24 hours of a launch. So that's the real estate boom that we're referring to. But nonetheless, the SEBI at its board meet yesterday announced a slew of measures. Shivani has all of the details. She joins in with more.
Well, yes, a slew of measures were announced late last evening by the market regulator after the board meeting. Many of these announcements were expected as well. SEBI announced that the stockbrokers must implement a UPI block mechanism or 3-in-1 trading by February 2025. Another important thing for the market is that the regulator has expanded the T+0 settlement cycle to the top 500 market cap stocks. Another important thing that was expected is that SEBI has announced a faster process for rights issues, now completing within 23 working days. Promoters can renounce their rights to specific investors, enhancing flexibility. One of the things that everyone was watching out for, SEBI has also launched a new asset class bridging the gap between mutual funds and portfolio management services, the PMS, aimed at tackling unregistered schemes and providing investors with flexible regulated options. The minimum investment is set at 10 lakh rupees and the safeguards include no leverage and capped derivative exposure. On the mutual fund side, the new MF Lite framework has also been announced. The new norms ease compliance for passive funds, allowing asset managers to opt for relaxed regulations or hive off passive schemes. The regulator has expanded the definition of connected persons under the insider trading regulations as well, now including firms and individuals sharing households with connected persons that were defined earlier. This is one of the things that is seeing mixed reactions from the experts. Interestingly, no announcements on as expected on the F&O segment as of now. Back to you.
All right, Shivani, thanks a lot for that. Let's talk about the Indian markets and the view ahead as well. We had an expert, Sunil Kaul, APAC equity strategist at Goldman Sachs, joined us yesterday saying that there could be continuation of a tactical rally in China. And on India, he did say that they have a target of 27,500 on the Nifty going forward. Flows could ebb in India. But that's not because of China. Listen in.
There could still be a bit of tactical rally continuing in China. Positioning from what we are hearing both from long onlys but also from the hedge funds, long short managers, is that things have kind of gone from positioning in the bottom half of the decile to like 14-15% in terms of the overall positioning, but there is still some more room for that to improve. So I would say I think you could still see next couple of weeks China momentum continue. The critical thing would be to see whether there is any improvement in the higher frequency data for the month of September, which comes out in the middle of October. Sense is that India probably still stays resilient overall. You might see a bit of weaker fall in flows, which is not just because of China. You also have US elections coming up. You have state elections in India. So there's lots going on, because of which you could see kind of tepid foreign buying in general. Our view on the overall sort of India positioning side of things has been that overall foreign positioning is still decently light in India. We still feel confident that you could see around 14% earnings growth over the next sort of 4 to 6 years, which sort of should drive markets higher, even with some multiple derating from current levels. So you could still see decent sort of early double-digit returns in the market on a sustained basis. We still have a 27,500 target on Nifty, and we are overweight the market in the context of the region.
Okay, all right. So that's some opinion, but the stock in focus is Nalco, which is surging in trade today on the back of positive commentary from Kotak. Nigel has more on this.
Well, that's right. Kotak has done a U-turn of sorts because they have upgraded the stock to buy from around sell, and they've gone ahead and they upgraded the stock price to around 235, the target price, from around 160 odd earlier. Now, a couple of reasons are played out. They've gone ahead and increased their EBITDA estimates for the next few fiscals, and they've also giving it a higher multiple. Now they're giving it a multiple of around 7. Earlier, they were giving it a multiple of around 5.5 times. The few factors that they have highlighted. One is they have gone and upgraded their estimates for both aluminium as well as on alumina. Now, on alumina, they've noted that globally there's a bit of a deficit that's playing out, which is playing in favor of Nalco. They also highlight on the cost side that they're getting a fair bit of their coal from captive sources. And because of that, they've saved cost in the past fiscal, they'll save this year. And from here on, they'll continue to see cost savings. So that's good news for them. And finally, the street has always been concerned about the expansion plans. And the alumina refinery expansion has been delayed for very, very long. Now they're factoring in higher volumes coming in from the second half of FY27. So they have upgraded their estimates on the price outlook. They have talking about the cost savings, and they're also talking about the expansion. Put all this together, Kotak is positive on Nalco, which has set the stock up and about.
All right, Nigel, thanks a lot for that. Up almost 7% today. Let's focus on the sugar space now. Manisha Gupta has caught up with Balrampur Chini's Avantika Saraugi on the sidelines of India Sugar and Bioenergy Conference. Spoke about the trends in sugar industry, developments in bioethanol, and the recent government initiatives that came by as well. Let's hear out an excerpt of that conversation.
I think the minister in yesterday's address covered all our pain points, whether it was MSP, whether it was ethanol pricing, whether it was exports at the right time. I think policy is aligned for nation building as well as industry building, I would say, and we are very hopeful for a good year and many more years to come.
As you were telling us that 30% of your mix is right now coming in from bioethanol. How are you looking to increase that? Are you looking to increase that? And also, how is bioplastics making an inroads?
Well, the capacity we have right now is 1050 KL. For now, we are focusing our capex on the bioplastic project, which is 2,000 plus crores. So in this coming 2 years, I don't think we'll do any significant capex on ethanol. But after the bioplastic project is completed, then we might look at it again, depending on where we stand. The bioplastic project, now coming to that, will be commissioned in 2026 and could have a revenue potential of around 1,700-1,800 crores. And that would probably put us at more than 50% mix of green products in maybe year 27-28, FY 27-28.
How big is an industry in sense of bioplastics, and what would your share be to begin with, and what kind of investments are you making in that?
So we are a drop in the ocean. India uses about 10 million tons of plastic every year. Out of this, upwards of 4 million is imported, and around 5 million is actually single-use plastics. So the government has put in a ban on 19 items of the single-use plastics, and that is actually what our product is very good for. So the headroom, I would say, even if we just talk about replacing maybe half of the single-use plastics, is around 2.5 million tons, while we have announced a capacity of only 75,000 tons. So the headroom is absolutely insane. Plus, if we talk about India being a biomass-rich country, which it is, we have much more biomass than we can valorize, really. So it could become a global hub and a very good export opportunity coming in the future. So today, bioplastic markets are about 1% of total plastic markets. This is global. India, as you know, is almost nothing. So we hope to if we want to go towards net zero, we will have to start setting some bio targets for every sector. And we hope if we can even grow to 5% in the coming few years, it would be nice.
So one final question, and while of course this is coming back to bioethanol and prices therein, which the government would increase in the next month or so, what pricing would you say will work best for your profitability?
I mean, the highest pricing will work best, of course. But if we talk about what we think will come, nobody can really put a figure to that today. I think they are cognizant of whatever has happened, all the cost of productions. They have the best professionals, calculating, and they're taking inputs across industry, various institutes and everything. So whatever they come to should hopefully be healthy enough for the industry to grow efficiently and comfortably, considering the amount of investments that have gone in over the last 5 years.
Okay, all right. Well, that's the word coming in on the sugar space. Well, for the markets, we're absolutely flat at this point. The mid-cap index just about consolidating. The advanced decline ratio is still holding on the advancing side, so that's the positive which stands out. In terms of stocks gaining from the Nifty space, we have TechM, which is really ruling the roost, so it's up around 3-odd%. M&M, UPL, Infosys, all of them following suit in today's trade. From the broader markets, a couple of stocks that stand out. We spoke about Nalco, we mentioned IIFL Securities, but stocks such as RPG Life, which is up around 5-odd% at this point in time. Indegene, which is a recent listing, is doing well today. It's gained around 25% this month itself and is up around 5-odd% today. Glenmark Life too is having a good session. It's up around 67% this year. Paytm up around 4-odd% today as well. So a lot of varied stocks seeing some amount of traction on the upside. We'll take a short break, come back with more. Stay tuned.
but here we are on the cusp of that. And so now the lens I apply is the lens of the foundation. If I was somebody young, sure, I'd compete with, OpenAI and all these people. But, now I'm in the stage of saying, how do I help other people work in AI apply it to those most in need?
As far as India is concerned, the role and relevance and the significance of India, especially as far as the foundation is concerned, and what you're hoping to do on the innovation side.
So India's the country the foundation does the most in. Other than the US, that's our largest group. We have a great team there. We work a lot with the national government and many of the state governments. And not only do we see in areas like nutrition or using ultrasound to detect a difficult pregnancy, we're doing a lot of studies with our partners there, which will have a benefit for India. But also, because the digital infrastructure in India is so strong, we can try things out there and take them to other countries. The digital infrastructure itself is a great example where the leadership has laid that foundation, and now both India and Gates Foundation are going to Africa and other places and saying, hey, you should do the same thing.
Was there a specific learning from this trip to India for you?
Well, it was pretty amazing in Odisha to see how the digital approach was connecting with farmers, that they had categorized which farmers were in which location, what were they growing. And so when they would see crop disease outbreak, they could notify them. If they saw weather coming, they could notify those farmers. If the market prices were changing, they could help guide the farmers. And so the digital revolution, bringing that into that agricultural sector, that was the first time I saw that at work. And it's being scaled up in India. Now we'll take it to the rest of the world.
News which just came out, a government-to-government deal between US and India to set up a semiconductor fab unit in the country.
Right.
There are elements of technology transfer, etc. That's the cutting edge semiconductor and sort of plans to localize production. Right. I just wanted your thoughts.
I think it's great. I would love to, India's quote a non-aligned nation, and I don't think we should be asking to align, but I think it's great that we're reaching out to each other, helping each other, investing in each other, and I would love to see far more of that. And this has two elements. One is the national security part, which of course all countries have an interest in. And the second is just, better economic relations.
Welcome back. Even as the frontline indices are moving between red and green, more red than green right now, we have a couple of these mid caps which are doing extremely well. So from the broader markets, we have Naveen Fluorine. The intraday chart comes up for you. The stock's been, tearing away on the way up right now at the high point with a gain of almost 4.5%. And another company that's doing well is Granules India as well. So Granules too has recovered about 3.5% from the lows and is standing at the high point of today's trading session, telling you that despite the consolidation in the markets, a lot of these individual stocks buzzing around. Paradeep Phosphates, for instance, from the broader markets too, come up for you right now, sitting at near double-digit gains as well, following the gains that we're seeing in a lot of these chemical spaces as well. So that stock up and about. Take a short break, come back. We have Business Lunch taking all the market action ahead.
The last 2-3 years, we've seen the rise of the so-called industrial policy across the world. Yeah. National security is being prioritized, as you said. Do you see this as part of that, in the context of that? Yeah.
So industrial policy, I'm a little cautious about. I think to combat some of these things and to do things in your country's own interest, which are hard to do economically, you're going to need some economic policy, industrial policy, like the United States has, for rare earths and things like that, and lithium. Every country is different. So the national security needs of India are going to be more around energy. I think for everybody, it's going to be semiconductor chips.
So I do think that's industrial policy. I would caution industrial policy when it's used for regulations, bureaucracy, politics, votes, social, and it doesn't have, the twin of permitting. It's not going to work. So you got to be a little cautious when you use it. But yeah, we're going to have some. And like I said, I think it's very important that America and India have a great economic relationship.
Would you agree, though, that in the former part of what you described, industrial policy is kind of taking the lead? Businesses and who you align with, who you want to do business with, building supply chains. A lot of that is now, it seemingly is led by that. I mean, what governments really want to do.
Well, no, it's two different. Governments have always negotiated economic arrangements, stuff like that. If you look at the United States, the industrial policy is a very teeny part of the economy. So it isn't like it's taking over the economy. Right. I think in other parts of the world, it's obviously a much bigger part of the economy. So, but yeah, nations, because of national security and because of what some people might consider unfair competition, there will be forms of industrial policy. If I was a government, I'd be very, very careful. It should be very targeted, very specific. It shouldn't be to protect local industry. It shouldn't be to just create jobs. It should be for a very specific reason. But you're going to see it, and hopefully it's well done.
Let's talk about the big event from last week, which is interest rates coming down, the Fed cutting by 50 basis points. Do you think it was a bit excessive, given the fact that GDP is expected to grow at 3%, stock markets are at all-time highs? I mean, there's no issue with credit spreads, etc. Indicators are all pretty good, and you get a 50 basis point cut. What do you make of it?
I think it's a lot more ink than it deserves. I think they raised rates to 5 very quickly. They were a little late, which they acknowledged. They raised it to 5. The economy is slowing down. Inflation is coming down. And relative to inflation, even if inflation is 3%, the 5 is maybe a little bit too high. So they made a big step to get it close to what they think it might be. They've got plenty of room to go down, and hopefully we'll continue to exhibit growth with inflation coming down. I'm a little more skeptical than other people about that, but it is happening, and they're just reflecting reality. Yeah.
You've been cautious in the past about prospects and said, well, one has to be prepared for things going wrong. Are you a little more positive now? I mean, this is not a cut when you're facing a recession or things are looking weak. It's like a happy cut. So, I mean, are you a little more...
So my caution is all geopolitics, which may determine the state of the economy. Okay. But it's really the geopolitics that these things, they're getting worse, they're not getting better. There's chance for accidents in energy supply. God knows other countries get involved. You have a lot of war taking place right now. You have American warships being attacked almost every day in the Red Seas. That's my biggest question. The economy fluctuates. I don't worry that much about the fluctuation of the economy. And obviously the Federal Reserve will try to do its job to moderate the vicissitudes of the economy. But we are spending a lot of money. And in my view, that spending the money causes growth. It also causes inflation. And whether it all moderates, I think it's true for countries around the world. We got to really think through how much debt countries can put on before it causes a real problem. So.
Stocks trade in a range after a sell-off on Monday following Powell's indication of gradual cuts in interest rates and a rise in tensions in the Middle East, even as China eyes a recovery ahead. IT and capital goods are prominent gainers, even as metals and realty stocks drag.
Being a top 3 private bank is Kotak Mahindra's rightful position, says CEO Ashok Vaswani, who eyes significant market share gains following the successful implementation of RBI-directed corrective actions. He expects the bank's network to expand to 3,250 to 3,500 branches in the next 3 to 4 years.
After a heady September that has seen Bajaj Auto emerge as the number 2 in the EV two-wheeler segment, the company is now confident of wresting the top spot given the strong momentum and its new product pipeline.
The Reserve Bank of India has spotted deficiencies in the adherence to prudential norms and in business participants of the several gold loan providers. The regulator has given lenders 3 months to set things in order. Analysts see limited impact for large gold financiers.
Market regulator SEBI introduces a new product to bridge the mutual fund PMS gap, eases rules for investment advisors, investor nominations and debt issuances, allows market trades using UPI, gives mutual funds a light option, but widens the definition of connected persons in insider trading, a concern for many.
Hello, good afternoon. You're watching Business Lunch on CNBC TV18. I'm Vinny Motiwala. With me is Hormaz Patake as well. Hormaz, very good afternoon to you as well, but not a great afternoon coming in, right? We saw that the Nifty actually came up in the green at one point of time again. Managed to see a slight bit of a recovery, but again in the red. Not much of an exciting day today, at least coming in on the Nifty as well as the Sensex today. Back in the red again, as you can see on the screen as well. Only mid-cap is managing to hold on to some bit of a green today, again back in action. But not much excitement there.
Heading into a holiday, I guess that is what the sentiment is on the street.
Are you also in the holiday mode then?
Who isn't? And that too, especially when it's a midweek holiday. So yes, the markets too seem to be in a little bit of a holiday mode. But yes, the Nifty is having a bit of a choppy session this morning. And you need to understand the fact that it's also the Nifty Bank and the Nifty Financial Services expiry both taking place in today's session itself, and that is why the Nifty now holding on to some very key levels now at around 25,750 is that very important support level on the downside that needs to be watched out for on the Nifty. It has rebounded from those levels and again now has slipped back towards those levels on the index. Now the Nifty Bank has seen a very painful last couple of sessions. Now from the highs that it made on Thursday, the index is down almost 1500 points from those levels, and today as of now completely at the flat line, and that is the index that you need to watch out for along with the financial services index in the final last couple of hours of the trading session before we head into the midweek holiday. And it is because of that holiday that is why the Nifty Bank expiry has also been pushed to today's session. What is doing well though is IT and some positive brokerage commentary coming in for these IT companies ahead of the earnings season that will be kickstarted by TCS on the 10th of October. So we'll keep an eye out on the IT names. The Nifty IT index slightly off the highs of the day, but holding on to gains of 0.7%. The broader markets, as Vinny just mentioned, are doing well, particularly the small cap index up 0.6% now. So broader markets doing fairly well, but plenty of stock specific action.
Absolutely, plenty of stock specific action. Let's not forget that, you know, we do have a lot of pharma updates that have come in the recent times as well. But auto, that's the one we're keeping an eye out on today. As of now, Nifty Auto is not doing much. You know, look at Nifty Auto, almost flattish in trade. But we did have the numbers that came in from some of these auto companies. Starting with the day today, we did have M&M that reported their numbers. So yes, M&M Auto, that was above what we were expecting at CNBC TV18. The tractor sales, that was a slight bit of a miss that came in from M&M's numbers. So yes, the management also said that the tractor sales in the second half of the year, that's expected to do well. And Shraddh, which is not an auspicious period normally when we do not see a lot of sales, that suddenly has started seeing a bit of a momentum pick up in terms of momentum. 10 to 15% pickup versus last year in that month of Shraddh, the 15 days of Shraddh. Also the sales have improved. So surely they are big on the festive season. Monsoon has been good, so that will be supporting tractor sales. Similar commentary that came in from Escorts Kubota as well. Good numbers in terms of September sales from Escort Kubota. And they too highlighted that the second half of the year will be better for them as well. So tractors, clearly the trend that we're expecting, H2 FY25, expected to be better. Let's talk about Bajaj Auto. They managed to beat the street estimate as well. Their numbers came in at around 1.32 lakh units is what they managed to sell in the month of September versus 1.18 lakhs in the last year, same time September period. They also gave in good commentary when we spoke to the management as well. 6 to 8% underlying growth in motorcycle sales is what they're expecting in the month of October. Plus good commentary in terms of the EV business, because all the EV side sales, whether two-wheeler, three-wheeler, or even the CNG side, the green portfolio of theirs, that's expected to be around the 40% of their revenue, domestic revenue, comes in from this. So yes, keeping an eye out on that. In the recent numbers, we also had Ashok Leyland and Eicher's VECV segment that came out with their sales in line numbers. Not much of an excitement there. But yes, keeping an eye out on auto sales numbers. A whole host of companies are still left to report their September sales. As of now, so far so good, seems like it, Hormaz.
Indeed, and let's also listen into what the managements had to say with regards to their sales numbers and the road ahead as well. Listening.
First of all, I mean, we are seeing very strong momentum in the market, and clearly this is on the back of some very good rainfall. Of the 36 agri-climatic zones that we have in the country, 33 zones have got either normal or above normal rainfall. And even in terms of, if you see the state stratification, for only the states of Bihar and Punjab do we see little bit deficiency in the rainfall, but broadly all the agri states also have very good rainfall. In terms of revising the guidance, no, we will still maintain at 5% level because we want to see through the festive season and then maybe take a call at the end of Diwali. That would be our view. But most of the heavy lifting will happen in H2 of this year, and that would give us an overall 5% growth rate.
Steady improvement in Nigeria and also, of course, in exports. October to December is a slightly better period in Nigeria. And that contributes to a steady upward growth trajectory for exports as a whole. As we have been saying, that month on month, we expect to see about a 10% improvement in exports. That's what we've been clocking. And I think that hopefully should continue.
Auto sales, the focus of the day. But moving on to a CNBC-TV18 exclusive, the Managing Director and CEO of Kotak Mahindra Bank, Ashok Vaswani, says that they are engaging with the Reserve Bank of India almost every week in an effort to lift the restrictions, and reiterated that slowing deposit rates are not a cause for worry. He also aims to take the bank's business to leadership positions in the next 5 years. Listen into a slice of that conversation.
India has the best digital public infrastructure compared to any other place in the world. I've worked in every other place in the world. I've never seen anything like this, right? Now, obviously, that has led to the demand for digital services having gone up dramatically. And it's about the bank systems having to keep up pace with that. So we've been spending the last couple of months really focused on how we grow and make our systems foolproof. So we've taken this as an opportunity to really say how we'll really leapfrog and make our systems really resilient and relevant for the days to come. So I think we've made very, very good progress. Obviously, we've been in continuous touch with the RBI, sometimes even every week, updating them, getting their guidance, making sure we're on the right path. And I think we've made tremendous amounts of progress. Kotak is a great brand. Kotak is a great platform. There's no reason why Kotak shouldn't be within the top 3 private sector banks. And I'm talking not only of the bank, I'm talking about our subs. Where our subs are within the top 5, why we can't be within the top 3, or just full stop, be within the top 5, right? Growth and transforming for scale is exactly what this mandate is about.
You can catch the full conversation tonight at 7:30 p.m. on CNBC TV18. So do stay tuned in for that.
Well, on to some gold financing stocks now, and they've been the ones in focus this afternoon, both Manappuram and Muthoot, and they are under pressure after the Reserve Bank of India has found several irregular practices being followed by gold loan financiers. Abhishek is joining in with all the details. Abhishek, tell us more.
Well, it's a surprise factor that, a secured product like gold financing has come under RBI radar with reference to deficiencies that have been identified in select supervised entities or players that are there in the gold financing space. So comprehensive review has been advised for all, which is a period of 3 months which has been given to them. On a review and on-site examination of select supervisory entities, adherence of prudential guidelines as well as practices with regard to loans against jewelry as well as gold ornaments, RBI has pointed out to several irregular practices. Some of them are shortcomings in the use of third parties for sourcing and appraisal of loans. Valuation of loans or gold is being done without the presence of customer. Inadequate due diligence and lack of end use of monitoring of the gold loans that have been handed out to customers. Inadequate, also transparency during auctioning of gold ornaments and jewelry on default of customer is an area of issue. Weakness in monitoring the LTV. Now, LTV is loan to value ratio, which is typically in the range of 65% to 75%. There also weaknesses have been seen, and incorrect application of risk weights, etc. have been found by RBI. So RBI has given these players 3 months to comply with the norms and get their act in place. Now, Citi has written a note wherein they have mentioned that gold loan share of lenders are, in terms of banks, Federal Bank 12.2%, Bank of Baroda 4.6%, RBL and SBI at around 3.5 to 3.8%. In terms of NBFCs, Muthoot Finance has a large share, 82.5% of the book is in gold financing, Manappuram about 52.6%, IIFL Finance about 21.2%, and SBFC amongst the top players being in NBFC space amongst the gold financers. Back to you.
Thank you so much for that update there, Abhishek. Keep an eye out on those all those gold financiers today. But on that note, let's just slip into a very short break. After the break, we'll be putting the spotlight on India's core sector output that has dipped in the month of August. So stay tuned.
First of all, I mean, we are seeing very strong momentum in the market, and clearly this is on the back of some very good rainfall. Of the 36 agri-climatic zones that we have in the country, 33 zones have got either normal or above normal rainfall. And even in terms of, if you see the state stratification, for only the states of Bihar and Punjab do we see little bit deficiency in the rainfall, but broadly all the agri states also have very good rainfall. In terms of revising the guidance, no, we will still maintain at 5% level because we want to see through the festive season and then maybe take a call at the end of Diwali. That would be our view. But most of the heavy lifting will happen in H2 of this year, and that would give us an overall 5% growth rate. September has been a slow month for us in exports, and there are two factors to it. One is that in our neighboring countries, you know, there are some geopolitical challenges being played. These are all very big markets for brand Mahindra and Swaraj. And even in the US market, we are seeing that 11 quarters of continuous degrowth in US tractor industry. Now that is, we know the factors that is on back of very high interest rate cycle, and people were waiting for Fed to start cutting. And now that has happened, I think the transmission will take 3-4 months time. And even in our US, which is our second largest market after India, the sentiment will revive. So that will again give us growth getting into our Q4. But I think for next 3-4 months, the exports might be a little slow.
We like to stick to the fundamentals, and we won't draw first blood. But I mean, if there is a gunfight, we'll not go to it with a knife. So, one does end up participating. But having said all that, it just serves to advance the customer, the sales, but the customer expects it because that is the whole atmosphere during the festive. One participates in it. But once the dust settles down, it's back to good product, proposition, and customer care.
Let me address that constituency that you just spoke of, which is, of course, one of the most crucial constituencies, which is the regulator. And I think that is the big overhang today as far as the Kotak Mahindra Bank story is concerned, with the RBI imposing restrictions on account of deficiencies in the digital and IT infrastructure, not allowing you to onboard mobile as well as digital customers, as well as putting restrictions on your credit card business. Now, if you can share with us details on what you've been specifically able to do to demonstrate to the Reserve Bank that you are adequately or appropriately addressing those deficiencies, and where do you believe that you stand? I mean, there is, of course, an external audit that's also been sought, but where do you believe you stand in the remedial measures?
So, Shirin, first things to start, where we started with is, look, India has the best digital public infrastructure compared to any other place in the world. I've worked in every other place in the world. I've never seen anything like this, right? Now, obviously, that has led to the demand for digital services having gone up dramatically. And it's about the bank systems having to keep up.
Welcome back. Now, India's core sector did badly in August with output declining by 1.8%. Now, the government fiscal data shows that the government capex too did not pick up. The RBI has also released the current account data for the June quarter. Lata is here to put all of that data into perspective.
As always, end of a quarter, end of a half year, there is a bunch of data. So let's analyze some of them. The core sector data is for August. It's a data that comes very late. Now, this is the first time in many years, I think since COVID years, that there is actually a contraction in those 8 core sectors. Almost 5 of them have shown contraction. That's coal, crude oil, natural gas, actually refinery products, cement, electricity. 6 of them contracted by anything between 3 and 8%. The positives were actually only steel and fertilizers. The possible explanation is that the August of 2023 did not see very heavy rains. So these 8 core sector industries did well, whereas August of 24 was a month of very heavy rains, all the La Nina effect, and that may have accounted for the serious difference August to August. The other thing that hasn't done too well is government capex. But before I come to that, the fiscal data showed that tax collections overall, GTR, gross tax revenues, were up by 11.7%, which is like more or less in keeping with the budget estimate and the nominal GDP. But there has been a fall in income tax and corporate tax collections in the month of August. We have to wait and watch. August is not a big month for tax collections. As we know, advance taxes are paid in September. But the bigger point of worry is government capex is down 30% year on year, August over August. This is a bit surprising. I can understand April, August capex being lower by 30%. But that is because April, May, June, not much capex happened. The government was in election mode. But you would have expected it to catch up after July and August. August also is 20% down year on year. That gives you a bit of a worry whether the government will at all finish its capex budget for the full year. Both these are related to growth, both showing poor form. And that is why the September PMI number is worrying me. That's come at an 8-month low of 56.5. 56.5 per se is good. It's expansionary mode, but still it's an 8-month low. Are we slowing in the second quarter would be a good question to ask. The final set of data is the current account deficit data. Nothing much to complain or rejoice. The deficit has come in at 1.1% of GDP. In the fourth quarter, it was a surplus. But surplus is not necessarily good. It means savings are going out of the country. It's good to have a minor deficit. Last year, it was 1%. This time, it is 1.1%. Both of them are not causes to worry. Actually, the trade deficit increased a little more. It rose by about 15%. Normally, it gets bridged by the services exports. This time, the services exports didn't rise so much. Software exports did well, but non-software exports, the GCCs and stuff like that, they haven't grown so much. They've actually been flat Q1 to Q1. In the capital account, actually capital flows were not so good. And we all know that. The FPI flows, FII flows in April, May, June were negative. So that explains the fact that capital flows on the whole were not very strong. So the balance of payment surplus actually was just $5 billion, whereas last year, same time, that is Q1, it was $24 billion. But we have a lot of time to make up.
Sure, surely keeping an eye out on that. But, TVS Motors, that came out with its numbers, seems largely in line with what we're watching out for. Though electric vehicles has managed to see a good growth right now. We'll be back with that. But on this note, we'll take a very short break. Don't go anywhere. On the other side, we'll get you the latest as the third phase of polling gets underway in Jammu and Kashmir.
First of all, we are seeing very strong momentum in the market, and clearly this is on the back of some very good rainfall. Of the 36 agri-climatic zones that we have in the country, 33 zones have got either normal or above normal rainfall. And even in terms of, if you see the state stratification, for only the states of Bihar and Punjab do we see little bit deficiency in the rainfall, but broadly all the agri states also have very good rainfall. In terms of revising the guidance, no, we will still maintain at 5% level because we want to see through the festive season and then maybe take a call at the end of Diwali. That would be our view. But most of the heavy lifting will happen in H2 of this year, and that would give us an overall 5% growth rate. September has been a slow month for us in exports, and there are two factors to it. One is that In our neighboring countries, there are some geopolitical challenges being played. These are all very big markets for brand Mahindra and Swaraj. And even in the US market, we are seeing that 11 quarters of continuous degrowth in US tractor industry. Now that is, we know the factors that is on back of very high interest rate cycle, and people were waiting for Fed to start cutting. And now that has happened, I think the transmission will take 3-4 months time. And even in our US, which is our second largest market after India, the sentiment will revive. So that will again give us growth getting into our Q4. But I think for next 3-4 months, the exports might be a little slow.
We like to stick to the fundamentals, and we won't draw first blood. But I mean, if there is a gunfight, we'll not go to it with a knife. So, one does end up participating. But having said all that, it just serves to advance the customer, the sales, but the customer expects it because that is the whole atmosphere during the festive. One participates in it. But once the dust settles down, it's back to good product, proposition, and customer care.
Let me address that constituency that you just spoke of, which is, of course, one of the most crucial constituencies, which is the regulator. And I think that is the big overhang today as far as the Kotak Mahindra Bank story is concerned, with the RBI imposing restrictions on account of deficiencies in the digital and IT infrastructure, not allowing you to onboard mobile as well as digital customers, as well as putting restrictions on your credit card business. Now, if you can share with us details on what you've been specifically able to do to demonstrate to the Reserve Bank that you are adequately or appropriately addressing those deficiencies, and where do you believe that you stand? I mean, there is, of course, an external audit that's also been sought, but where do you believe you stand in the remedial measures?
So, Shirin, first things to start, where we started with is, look, India has the best digital public infrastructure compared to any other place in the world. I've worked in every other place in the world. I've never seen anything like this, right? Now, obviously, that has led to the demand for digital services having gone up dramatically. And it's about the bank systems having to keep up.
Welcome back. You're watching Business Lunch on CNBC-TV18. Let's move on. And the third and final phase of polling is underway across 40 constituencies in Jammu and Kashmir. Election Commission data shows that 28.12% voters turn out till 11 a.m. 24 of the 40 constituencies are in Jammu region, where the BJP expects to do well. The remaining 16 seats are in the Kashmir region, where the Congress and the National Conference are in an alliance. The People's Democratic Party are the major contenders in the polls. The first since the abrogation of Article 370 in August 2019. The counting of the votes for all constituencies will be on 8th of October.
And with that, it's a wrap on this edition of Business Lunch. From Vinny, myself, and the entire team that put this show together, thank you so much for watching. Midcap Radar comes up next.
So we've been spending the last couple of months really focused on how we grow and make our systems foolproof. And like in every crisis, there's an opportunity. So we've taken this as an opportunity to really say how we'll really leapfrog and make our systems really resilient and relevant for the day, for the days to come. So I think we've made very, very good progress. Obviously, we've been in continuous touch with the RBI, sometimes even every week, updating them, getting their guidance, making sure we're on the right path. And I think we've made tremendous amounts of progress, and we'll continue to do it. You know, obviously the RBI is exceedingly important, but the customer, I've got to get it right by the customer.
Yeah.
I got to stay resilient for the customer. I need the best customer experience for the customer. And, you know, yeah, RBI has told me you got to do it. So
Good afternoon. Welcome to Mid-Cap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Well, afternoon, Vivek. The story today is, of course, that recovery that we've seen on the mid-caps for sure. From the lows of the day, it has recovered. And now in the green, advance decline ratio in favor of the advances. There's recovery otherwise as well. But what we've seen in mid-caps is something which we should talk about.
Right, absolutely right. Quite a sharp recovery, from the day's low. You actually opened quite weak, but after that, the breadth of the market has done really well. Some of the stocks, that was down and out have actually seen quite a bit of buying emerging from the lower levels. Quite a lot lined up on the show. Let's start off with the top headlines. Stocks trade range in a volatile trading session following Powell's indication of gradual cuts and a rise in tension in West Asia, even as China eyes a recovery ahead. IT and PSU banks are prominent gainers, even as pharma and realty drag.
Muthoot and Manappuram Finance under pressure after RBI spots deficiency in adherence to prudential norms and in business practices of gold loan providers. The regulator has given lenders 3 months to set things in order. Analysts don't see limited impact for large gold financiers.
Nalco surges in trade after Kotak upgrades the rating on the stock to an add from sell. Cites attractive risk reward and the ongoing supply tightness in the alumina market as the reason for positive commentary.
Angel One revises brokerage charges effective today, also introducing a flat brokerage charge of 20 rupees per executed order for cash and equity delivery transactions. Stock is up over 4%.
Interglobe Aviation surges after ATF price cut to 87 rupees per kg from 93,480 rupees per kg earlier. This is the second month where you have seen an ATF cut by all marketing companies.
Okay, all right. Those are the top headlines that we are tracking for you for the Nifty. It's been quite volatile, to be very honest. Right now, we are in the red and it's been very choppy. But do note there has been a recovery from the lows that we have seen on the Nifty in last couple of minutes yet again. Mid-caps, they are the stars for sure. 190 points higher on the mid-cap index as we speak. That's a massive recovery that from the lows that we are talking about. This index is at the day's high, and the advanced decline ratio, the line should come up for you on the screen. We have around 2,400 stocks on the BSE which are advancing versus declining stocks of around 1,700, and we have seen the advanced decline ratio continues to be in the favor of advances as well. The PSU banking index, the auto index, that continues to do well. Small caps are also contributing today. The bank Nifty though, quite choppy.
Bank Nifty quite choppy, under pressure. One segment of the market that actually opened lower but has seen quite a bit of buying emerge is actually the metal pack. So if you look at names, we actually highlighted Nalco at the start of the show in terms of one of the stocks that are doing quite well. But even if you look at a name like NMDC, where there have been price hike undertaken, you actually see quite a bit of buying emerge from the lower levels. NMDC too is doing quite well. But a whole host of other stocks is what Hormaz has on his radar. He's standing by the wall to take us through the mid caps that are moving around in the session.
Well, it does look like the benchmark indices have slipped into holiday mode already, but the small caps still want to be part of the action, and that is showing up in the broader markets. The mid caps and the small cap indices are outperforming in today's session. So we will start off with the gainers today within the broader markets, and PB Fintech and Paytm are topping this list. Both are at the highest point of the day. PB Fintech is now up 5%. Another positive brokerage commentary came in today on the stock. It has been in focus over the last couple of weeks over its capital allocation policies. Paytm too now above 700, 5% higher there as well. What is also having a very good day is Polycab at the highest point of the day, another 5% today, and Wellspun Living up 6% in today's session. All these brokerage related names have been in focus as well. BSE, MCX, NSE, all of them revising their transaction charges. All of them are off the highs of the day, still holding on to gains of around 2.5 to 5%. A lot of brokerage commentary came in this morning as well, and that with regards to the gold financing names, and they are bearing the brunt of that in today's session. Manappuram off the lows, but still down 2%, while Muthoot has now slumped to the lows of the day, 3.5% lower. But Nalco, after that upgrade from Kotak, is going from strength to strength, 8% higher in today's trading session. Stocks that are doing well on the back of very strong volumes, and BASF is now up 10% at the day's high, as is KFintech. Blue Dart, after the price increase, is up 6%. And Atul is having a good day within the specialty chemical names. And lastly, some stocks that are not having a very good session despite the broader markets doing well. Westlife Food World at the day's low now, 4.5% lower, as is Intellect Design. Phoenix Mills and Motilal Oswal is seeing some bit of profit booking from higher levels. Back to you guys.
A lot of stocks in the broader markets which remain in focus. Thank you so much for joining us. As always, Hormaz. Atul Auto, by the way, reports its total sales up 26% in the month of September. Let's welcome Shrikant Chauhan of Kotak Security for a technical check on the market. Shrikant, good afternoon. Thank you so much for joining in. Tell us what's the next level to watch out for on the Nifty, and how are you looking at Bank Nifty currently?
Good afternoon, Sonal. Good afternoon, Vivek. See, like for Nifty, it is like it was around 26,400, 500 levels. From there, all the way it is corrected back to the important support levels of 25,700. And now it is consolidating around the same. I am of the view that today, in case if we see the market is crossing the level of 25,850, then we can expect further more upside during the day. Otherwise, we are going to consolidate, and in the worst case scenario, we may even see the levels of 25,500. That's the overall view. So because it's a expiry day for Bank Nifty, we can see some activity in the second half, but for that we need to cross the level of 25,850. And for the Bank Nifty, I think there also 53,050 is the level above which only we can expect bullishness.
Okay, Shrikant, what are your top individual picks for the day?
Yeah, Vivek, I think these commodities are like really doing well, and whatever the momentum that we are seeing right now, it is specifically into commodities and in private banks. But because of banks' weekly expiry, I think all these private banks are under pressure, but commodities, definitely they are going to do well. In that, we like Nalco, but currently it is very close to its first immediate resistance of 235, 236. So there we need to be careful. And that's the reason it is better if we go for a few other stocks. In that, we like Hindustan Zinc, which is currently trading around some 520, 525. There also, I'm seeing the pattern of rounding bottom sort of formation after hitting the important support levels. From here, again, Hindustan Zinc can reach the levels of 560, 575. That's the overall view. So here, we like Hindustan Zinc. It's about at current levels. And from the other, few other stocks, we like PB Fintech, Policy Bazaar. And there also the stock has taken excellent support close to 1600, 1650. And from there it is rebounding. I think based on its technical formation, the stock can again reach the levels of 1950 or 2000. So PB Fintech, Policy Bazaar is also a buy at current levels.
All right. Thank you so much, Srikanth, for joining in with those technical bets. We'll slip into a short break. When we come back, we'll get you more on the markets, put focus on India Glycols, Angel One, Nalco. All these stocks are buzzing in trade today.
investing.
Welcome back to Mid Cap Radar. Quite a few stocks, from the broader end of the markets that are seeing quite a bit of an up move today. First up, two stocks from the media space. So if you look at names like HT Media, Z Media, especially if you look at Z Media, the stock has done really well in the last week or so. The stock has seen a significant up move. Today also perched at the upper circuit of 10%. HT Media too is doing quite well. Another stock, linked to the capital market theme has been KFin Technologies. This stock too today has seen a very strong up move. The volumes too are quite strong here. The stock up almost 9% in the session today. And three stocks, from the agrochem space, that are doing quite well in the session today. Number one is BASF India, BASF India. That stock is doing quite well. Chambal Fertilizers and Deepak Fertilizers too, after a while seeing some buying emerge as far as the agrochem space is concerned. But Sonal, you've been tracking one stock, India Glycols, the stock's doing quite well. The company has announced a capacity expansion. Please tell us more.
Capacity expansion across segments, right? That is what the company has announced. So first is the 100 kiloliter per day of capacity expansion in grain-based distillery. All of them happening in their Uttarakhand facility. This takes the total capacity to 500 kiloliters per day. The second one is that their biofuel fuel ethanol plant, which converts ethanol to biofuel. That is again at Uttarakhand, Kashipur. That's where they're adding around 180 kiloliters per day. Thirdly, they're also adding 2,500 tons of chemicals capacity, chemical products. It's a commodity chemical space that we are looking at. So these three things is something that is propelling the stock higher because that would bring in additional revenues as well for the company. So India Glycols up by around 8% in trade today. But let's move on and talk about Nalco. It is surging in trade on the back of positive commentary coming in from Kotak. Nigel is here to tell us more. Nigel, what is Kotak saying about Nalco?
Well, that's right. Kotak has gone ahead and upgraded Nalco. They had a sell rating earlier, now they have a buy rating. Earlier, they had a target price of around 160. Now they have a target price of 235. Now, a couple of factors is what they've tweaked. One is on the earning estimates. They've upgraded it for the next 3 years. So that's point number one. The other factor that plays out when you go ahead and increase your target price is when you increase the multiple. Earlier, they were giving a multiple of around 5.5 times. Now they're giving around 7 times. And there are 4 big reasons why, Kotak is positive on Nalco. Point number one, they've upgraded their estimates both on alumina as well as on aluminium. Point number two, they are taking into account the alumina short supply globally, and that's what will help support prices from here on. So that's on the pricing side. The next factor is on the cost side. They're getting some part of their coal requirement from captive sources. That's what happened in FY24. That's what will happen in FY25. And going ahead, they're expecting these coal blocks to ramp up, so they'll save on costs. And point number 3 is volumes. That's been a bit of a problem pocket for them because volume growth hasn't been coming about. But they are factoring in from the second half of FY27 that alumina refinery, the expansion will come on stream and it'll help the volumes as well. So all these 3 factors, better pricing, lower cost and operating leverage will play out. So that's why Kotak is positive on the stock. Back to you.
Thanks so much, Nigel, for explaining the up move as far as Nalco is concerned. The next stock on our radar is Angel One. The stock is buzzing in trade as the brokerage firm has revised brokerage charges for cash as well as equity delivery transactions. Vamakshi tells us more.
Well, absolutely, Vivek. The stock is surging in trade. In fact, even yesterday, the stock was up, and that is because Angel One has revised the brokerage for cash and equity delivery transactions, and this will be effective from 1st of November 2024. The brokerage charges that will be levied are at flat rupees 20 or 0.1% plus GST, whichever is lower this is per executed order. The minimum brokerage will be at almost rupees 2. Angel One, keep in mind that earlier on they did not have any brokerage for the cash delivery transactions. In fact, the company was offering the lowest brokerage rates as well as lowest other charges as compared to some of its other discount broker peers. Now, this revision in the brokerage has come in after NSE and BSE both revised their transaction charges with effect from October 1st. Both of these exchanges have moved away from the slab-wise structure wherein the brokerages would earn some amount, pocket some amount, basis the difference between what they would charge the client and what they would be able to pay to the exchanges. Now, NSE has now moved on to the flat-free structure, and overall this impact could have been 8% on Angel One is what the management has highlighted to us back in July. This revision in brokerage charges could be a measure to mitigate that impact, and therefore it bodes well for Angel One. But overall, we will be watching out for the volumes that could be impacted on account of higher brokerages. So given those factors, Angel One on our radar.
All right, Angel One in focus. We've been seeing that this is something that was expected, of course, as Vamakshi has been pointing out. Let's do one thing. Let's slip into a short break. When we come back, we'll get you more on the markets and a lot of stock-specific action and management commentary on the other side. Stay tuned.
Donald Trump again, and I think he should debate again. The American people have a right to hear us discuss the issues. And as you say here in Las Vegas, I'm all in. I'm all in. We know this will be a tight race until the very end. And let's level set. We are the underdog. We are the underdog, and we have some hard work ahead. But here's the thing. We like hard work. Hard work is good work. Hard work is good work. And earlier this year, we had a chance to pass the toughest bipartisan border security bill in decades. And Donald Trump tanked the bill because he thought that that bill, if passed, would have hurt him and he'd prefer to run on a problem instead of fixing a problem. That's not the kind of president we want.
Invest.
Welcome back. You're still tuned into Midcap Radar on CNBC TV18. Well, Max Estates, that stock is in focus. Their Gurugram project witnessed pre-sales booking value of 4,100 crore rupees within 30 days of the launch. Rishi Raj, the CEO of the company, told CNBC TV18 that they are expecting pre-sales of around 5,500 to 5,600 crore rupees in FY25. He also added that the company plans to add at least 3 million square foot every year to their development pipeline. Listen in.
We are revising 100% booking value guidance to 4,800 crore to be done in FY25. So this is in summary the response to Estate 360. We have some units remaining. That's why the total 100% booking value guidance is now 4,800 crore, of which 4,100 crore has already been booked. This year, the total guidance is 4,800 crore from this project, and we expect to now launch Tower 4 in Estate 128, which will add to another 800 crores of booking value. So total booking value will be in the range of 5,500 to 5,600 crores. Our guidance to the market is that we will continue to add at least 3 million square foot every year to our development pipeline. And that's where the focus is going to be. which will help us increase our booking value from where we are and grow that booking value in coming years.
An important commentary coming in there from Max Espate. Now moving on, Northern Arc Capital's MD and CEO tells CNBC-TV18 that they have been growing over 30% in the last 3 years and expect to hold the growth rate at these levels. Also tells that they are looking at higher productivity going ahead. Do listen in.
We've been consistently growing at over 30% year on year for the last 3 years. Our Q1 growth is broadly in the same line. Growth on a YOY basis is over 32%, and I think we should be able to hold a similar kind of a growth number. We did tweak the model beginning of the year to ensure we have a higher amount of good book provisionings. So that's almost 60 basis point. What you see as a credit cost last year of 120 basis point has gone to 170 basis point. That includes a higher amount of good book provisioning given the stress we are seeing and to ensure there is an overlay sufficient for us. So that's taken us to 170 basis point. The jaws are actually expanding. If you look at it, your income is growing faster than expenses, and expenses broadly should stabilize. And we should aim to get higher productivity gains as we look forward.
Well, that was the recently listed Northern Arc Capital speaking to us earlier today. Well, yesterday the SEBI at its board meet announced a slew of measures. Shivani Bajaj has the details.
Well, yes, a slew of measures were announced late last evening by the market regulator after the board meeting. Many of these announcements were expected as well. SEBI announced that the stockbrokers must implement a UPI block mechanism or 3-in-1 trading by February 2025. Another important thing for the market is that the regulator has expanded the T+0 settlement cycle to the top 500 market cap stocks. Another important thing that was expected is that SEBI has announced a faster process for rights issues, now completing within 23 working days. Promoters can renounce their rights to specific investors, enhancing flexibility. One of the things that everyone was watching out for, SEBI has also launched a new asset class bridging the gap between mutual funds and portfolio management services, the PMS, aimed at tackling unregistered schemes and providing investors with flexible regulated options. The minimum investment is set at 10 lakh rupees and the safeguards include no leverage and cap derivative exposure. On the mutual fund side, the new MF Lite framework has also been announced. The new norms ease compliance for passive funds, allowing asset managers to opt for relaxed regulations or hive off passive schemes. The regulator has expanded the definition of connected persons under the insider trading regulations as well, now including firms and individuals sharing households with connected persons that were defined earlier. This is one of the things that is seeing mixed reactions from the experts. Interestingly, no announcements on as expected on the FNO segment as of now. Back to you.
Thanks so much for that, Shivani. Well, just taking a look at the markets, the Nifty and the Bank Nifty back in the negative territory, flattish, but still under the main or the midpoint line. While you're talking about the mid-cap and smaller, small cap indices, they're actually doing slightly better. The small cap index today outperforming the benchmark indices. But with that, it's all the time we have on this edition of Mid-Cap Radar Mutual Fund Corner when we return.
La difesa sempre deve essere proporzionata all'attacco. Quando c'è qualcosa sproporzionato si fa vedere una tendenza dominatrice che va oltre la moralità. Un paese che con le forze fa queste cose, qualsiasi paese parlo, che fa queste cose di un modo così superlativo, sono azioni immorali. Anche nella guerra c'è una moralità da custodire. La guerra è immorale, ma le regole di guerra indicano qualche moralità.
This takes me back to a conversation that I remember having with Mr. Murthy about starting Infosys. And I said, like 7 of you, of course, he was the first among equals. But I said, how did you get a decision made? Because, and especially we are known as argumentative Indians for a particular reason. What was that like? And he told me, he said, look, it was very simple. We had a sort of unwritten rule that in God we trust, everybody else brings data to the table. What was it like for you?
So we started with a smaller group, as Pramath was saying, Sanjeev, Pramath, myself, only a team.
Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio. And today for our viewers, we'll decode, and it is more importantly for parents as well watching the show, about NPS Vatsalya. This was recently launched by the government, and we are trying to understand on the show if that makes sense for investing for a kid's future, or should they go with the regular route of mutual funds, the differentiation between the two, the return profile, and what makes more sense. To discuss this, I have with me Mrin Agrawal, financial educator and director at FinSafe India. Mrin, good afternoon. Thank you so much for joining in as always. NPS is one scheme. We have spoken about it a lot more than NPS Vatsalya, of course, because it's recently introduced. So let's start with the basics. What are some of the most important features of NPS Vatsalya that one should keep in mind? How is it different from normal NPS? And some basics here.
Good afternoon, Sonal, and as always, it's a pleasure to be here today. So NPS Vatsalya, the main difference is that this is a scheme for minors. So NPS, you can start from the age of 18, but NPS Vatsalya can be started below 18, any age, even as soon as a child is born, you can start NPS Vatsalya. It is, of course, a long-term savings scheme, minimum being 1,000 rupees per year. And like NPS, you have various investment options that you can go for. So you have the active choice where you can go up to 75% in equities, or if you want to choose bonds, you can do 100% bonds. If you're not sure what percentage split to do between debt and equity, you can look at doing the auto choice, and within the auto choice you have conservative, moderate and aggressive, the default option being the moderate option, which basically has a 50% exposure to equity, right? So this is about the investment options. Now, very importantly, how does the withdrawal work in the long term, right? So at the age of 18, you have two options, right? One, you transition this into a regular NPS account. Now, what is a regular NPS account? It goes on till the age of 60. And at the age of 60, you can withdraw 60% as a lump sum or over a period of time, and 40% goes into an annuity. So either you transition this into a regular NPS account once the child becomes an adult, or the other option that you have is that you can withdraw 20% of the accumulated corpus as a lump sum, and the balance 80% needs to be moved into an annuity scheme, which is going to give a regular income in the form of pension through life, right? So this is what you can do at the age of 18. Now, apart from this, if there is a requirement before 18 for money, let's say towards education, for example, then you are allowed to withdraw up to 25% of the contribution and not the corpus. Okay, but you can withdraw it only after 3 years, and you can do maximum 3 such withdrawals. So net, the main difference between NPS Vatsalya and NPS is really that this is a scheme where you can open the account for children, save for them till the age of 18, and then really decide whether you want to move to the full NPS or you want to do a withdrawal.
Okay, so that is the primer, just to understand what the basics are about NPS Vatsalya. The next question, of course, is should all parents go in for it?
So I think you have to be very clear about how you want to use this scheme, given that there is a restriction on the withdrawal, and you cannot get the 100% amount back at the age of 18. So a parent should really decide what they want to use the scheme for. If it is for funding child education, I think the scheme is going to fall short. But if, for example, a parent wants that we want to set up something for the child where they are going to get regular income through life. There could be cases, where, you have mentally challenged children, for example, and even otherwise as well, if you want that the child should get a regular income through life, then you can look at a scheme like this. I feel it's a bit much for parents to be thinking about retirement for the children. But yes, if these are some of the things that you have in mind, like, you want the child to get a regular income, then you can certainly look at the scheme, but be mindful, or you might just want to wait for some time till the tax treatment on NPS Vatsalya is known, because I think the circular is yet to be issued on that front.
Okay, you're right. It's sometimes quite early, right? If your kid is 5, maybe you're thinking of your own retirement, not really the kid's retirement at that point. But when it comes to investing for kids, what makes more sense, NPS Vatsalya or mutual funds? What are the major differences between the two when it comes to returns?
So given that we don't know the taxation on NPS Vatsalya, but even if we keep in mind the taxation that's there on regular NPS, for example, right, I would still say that mutual funds are a better option because, one, equity mutual funds specifically held above a year are only taxed at 12.5%. Also, mutual funds are extremely flexible where the withdrawal is concerned. So post the exit load, of course, you can exit the mutual fund whenever you want to. Again, when you look at returns, for example, I think returns are going to be pretty similar. So when I looked at the NPS portfolios, you would find them to have a good amount of large cap stocks and some amount of mid cap. So I think the returns are going to be pretty much in line with like a large and a mid cap fund, for example. So again, I think, when you're making this choice of NPS Vatsalya versus mutual funds, it's not about the returns, it's more about the usage of the funds, like how do you want to utilize the corpus that is really being built and what is more important to you. Just to give you an example, for example, if a parent is investing 10,000 rupees and let's say the child is 5 years old, and the parent is investing 10,000 rupees for the next 13 years, thinking that I will use this for education, right? Now, let us assume that they have done an equity fund and we've assumed a 12% return on this investment. So in the next 13 years, by the time the child turns 18, the value of the investment will be somewhere around 38 lakhs, right? Now, with a mutual fund, you can withdraw that entire amount and utilize it for the education. But in NPS, since only 20% of that amount is going to be accessible, it really means that you'll only have 7.5 lakhs for withdrawal, right? So what I would say is that, again, I would just reiterate, it's not about the returns. It's really about how do you want to utilize the corpus that is being built.
Okay, that makes sense. If you want that money at the age of 18, you would just get 20% of it. But if you want most of it for education, because that's when the higher education costs really come up, you would go for mutual funds because the entire corpus would be available for you. That's about overall aspect of mutual funds versus NPS Vatsalya. Say for a girl child, should a parent go for both NPS Vatsalya and Sukanya Samriddhi scheme and also some portion with mutual funds? How would that math work out?
Okay, so when you look at Sukanya Samriddhi on its own, it's a great investment, right? 7.65% tax-free, risk-free return. Now, just to take a step back to understand the working of Sukanya Samriddhi, right? So you can open the account till the time the child is 10 years old, and it matures 21 years from the date of opening, not at the age of 21. So a lot of people get confused about this point. Now, in Sukanya Samriddhi, at the age of 18, you can only withdraw 50% of the accumulated corpus, right? So, one, I would always say that Sukanya Samriddhi is meant for more conservative investors who want a fixed return, right? Again, it depends upon what is the goal that you're funding for. So let's take education and marriage separately. So for example, again, let's assume the same goal where the child is 5 years of age and the goal amount is, let's say, 50 lakhs. When we take into account inflation, the value of this goal is going to be 1 crore by the time the child turns 18, right? Now, in order to reach this goal, and if we assume the same 12% return, the investor needs to be investing 28,000 rupees per month. Now, let us say the investor decides that I don't want to put this entire 28,000 towards equities. I want to maybe do 50-50, right? So obviously what's going to happen is that the returns are going to be lesser because you're going to average between the 12% and the 7.65%, which is roughly about 9.8%. And so the overall corpus that you're going to end up with is about 70 lakhs.
We have more questions. Okay. Okay, all right. So that is what it would look like if we go for mutual funds and Sukanya Samriddhi scheme together, or otherwise individually as well. Mrin, we have some more questions on this, so let's take a quick break for now. But on the other side, we'll continue our discussion with Min Agrawal of FinSafe India on how NPS Vatsalya is as an investment option.
Group. And I think we spent a lot of time. So even as a precursor, we used to meet one Saturday a month at my old office, and we would have conversations. And this happened for a couple of years. So I think that helps with alignment. And then ultimately we said, we want to build a liberal arts and sciences, an interdisciplinary university. So everybody was aligned. This was going to be
and some people did get off the ship.
Yeah, because some people wanted something else. So we were very clear that Indian higher ed had become too specialized, that we needed a new institution that really provided breadth and depth, that was interdisciplinary and holistic, and that gave students choice. So we agreed on the principles. We agreed on some of the disciplines we would cover and what we wouldn't cover. And we also said that we have to hire the best in the world to come, and the pedagogy has to be exciting. We'll primarily be undergraduate to start with.
Right.
And then over time, we'll build out a very strong PhD program. We won't have a very big master's program. So I think we spent a lot of time. So we were aligned on what the broader purpose is, the vision, broadly what the strategy is. And then we were able to bring in many other people. So we also had a governance model where we said, even if you put in a lot of money, you still have one vote. And you operate through...
How did that conversation go?
Well, I think a lot of it depends on, Sanjeev and I were initially the two largest contributors. And we'd said, we're going to do this. So it just became the norm. And we just went to everybody. When actually there was someone who wanted to put a lot of money in, wanted more than one vote, we turned that person down. So it's just a principle you stick to as you build it out. But we never realized when we started that we could end up becoming the largest we think collective philanthropy project
That's
in India.
right.
We've raised about 3,500 crores, Shireen, in pure philanthropic money. We've had people like HDFC Group to Axis Bank to the Bajaj Group support Ashoka at scale. Individuals, R.K. Damani, Mr. Jhunjhunwala, Rakesh Jhunjhunwala, many others have contributed. 200 founders have contributed towards building this institution because they believe it's an important project for the country, that India needs a new institution. That's a new form of education for India.
What is the Ashoka differentiator?
Where when we...
Welcome back. You're still tuned into MF Corner. We still have with us Miran Agrawal of FinSafe India. We're discussing NPS Vatsalya. How is that an investment option versus mutual funds? We discussed the difference between the two. But if someone has to go and put PPF in the picture as well, how does it compare with that, Miran?
Yeah, I don't think PPF is really an option, given that it's 7.1%. See, the return on its own is a great return, considering that it's tax-free. But again, the fact remains that when we are trying to beat the 7% inflation, then you need instruments that can beat the inflation well.
Okay, that makes sense. So, the next leg of question would be, does it make sense to plan for kids' retirement so early? I don't think you agree with that. But is it not better to invest in solution-oriented mutual funds which focus just on a particular problem or a particular goal?
So when you look at the solution-oriented mutual funds, what they essentially do is that they come with a 5-year lock-in, and they're specifically meant to help you save for a particular financial goal. One of the concerns that I have with the category is, of course, there are different funds which have different allocation to equity and debt within the category. So some of them are run like balance funds. Some of them work like 75% equity, 25% debt. So even then, but when you look at an overall category average, what I find is that there is some underperformance even when compared to a simple balanced fund, right? So what I feel is that, for somebody who wants to save for the child, whatever the goal might be, and if you are actually considering mutual funds, just the regular schemes that are there, like for example, a Nifty 50 equity index fund or a flexi cap fund would be a good option. Again, because what I typically find is that people find it very difficult to figure out which scheme to go for, because each one of them comes with a different allocation to debt and equity, right? So I think, the easier thing is just to buy a simple Nifty 50 index fund in the child's name and just keep it for the long term.
Okay, that makes sense. Miran, always a pleasure speaking with you. Thank you so much for joining in today with your take on this particular topic, which is very topical as well. So hope to be speaking to you very soon.
Thank you.
Okay, that's all that we have on this topic. But after the break, we'll discuss the pros and cons of investing in property for rental income, compare it with mutual funds. Preeti Rathi Gupta from Lakshmi will be joining now. So please stay tuned for that conversation.
We had no idea that students from 40 countries would be applying to our university. Now our aspiration is, why shouldn't it be one of the best in the world?
We are the best option for anyone wanting to do high-quality scholarly academic work in India.
You firmly believed in was that this must be an institute that's also inclusive.
We are perceived as being elite. I think that's largely because we do get very good students, and some of them from the very best schools. So I do think we're serving the country in one way, which is we're preventing the dollars from going outside. Individuals, R.K. Damani, Jhunjhunwala, Rakesh Jhunjhunwala, many others have contributed. 200 founders have contributed towards building this institution because they believe it's an important project for the country.
So we see Ashoka's mission to really be able to serve the country in solving these problems with the cadre of young people that we are feeding into the workplace.
If you want to maximize EBITDA, you'll be a teaching shop. You'll ignore, why would you run a PhD program? It's pure cost, no revenue. right?
So how do you look at ROI then as far as Ashoka is concerned?
Its impact. We eventually will term out, and alumni, once they have matured, will take our place. We have no owner. There's no one family that backs this place.
The myth is that, if you study history or philosophy or political science or English literature, where will you get a job?
I'm a classic example of that. I studied philosophy and guess where I am. So
We have students who've turned down Berkeley, who've turned down Duke, Urbana-Champaign, London School of Economics to come to Ashoka.
Welcome back. You're still tuned into MF Corner. Let's shift focus to a different topic, but definitely an interesting one. If mutual funds returns are better than rental income or the other way around, and how do these two asset classes compare? To discuss this, we have with us Preeti Rathi Gupta, the founder of Lakshmi. Preeti, good afternoon. Such a pleasure to have you with us on MF Corner today. And there's always the rent versus buy question, but right now we are going to talk about the mutual fund versus investing in property with rental income. Let's just start with the basics first. What, according to you, is a better bet? What are the pros and cons of both investment avenues?
Hi, Sonal. Always a pleasure to be on a show with you. And this is a particularly interesting topic because when we talk particularly to women, I think the whole question of, property for retirement, property with a rental income, is that a more preferred option than mutual funds, which is even today a fairly less known option of investing as when you speak to women. But great question. And I think, I will just come back to one thing. It's very hard to sort of say whether mutual funds or a property with rental income, because you need to take into account a lot of things like, what is your financial goal? How are you looking at liquidity? What is your risk appetite, returns that you may be looking at? And then when it comes to property, also taking into account what are your maintenance costs going to be? And finally, your taxation, right? So I think keeping into mind all of these and what your personal aim for this investment is a very important, thing to keep in mind. I think personally, from my experience, and I think, if you just look at returns over the past 20 years, I think it always makes sense to put money into equities for the long term, because one, it has always given you inflation-beating returns as opposed to, real estate. And then I think the ability, the flexibility to invest in it, redeem whenever you want to redeem, the liquidity part of it, I think low ticket size, you can start investing with a very small amount. I know today REITs exist, but even within that, today in a mutual fund, you can invest with as little as 100 rupees for a retirement goal. So you can actually begin very, very early into it. And I think essentially, mutual funds are professional fund management. So keeping in mind the fact that you have experts who are taking that decisions versus, the only thing that you need to be aware of when you put money into mutual funds is the market volatility. It is market linked, which is true also for real estate. But the volatility in mutual fund in equities are obviously far higher. And I think the other piece is that you don't have, a lot of people feel uncomfortable that I don't have a tangible asset, if I have a property, at least I have something that I can, touch, right? So people feel, okay, this is not tangible enough. And of course, there are certain costs like expense ratio or exit load that you need to keep into account, but real estate, that is far, far higher, right? And with real estate, I think all those things work, that it is tangible. You can aim for a regular fixed income, but you have to keep into mind that, while you look at the dual benefit of rental income and property appreciation, there are cycles when you may not, when the rent may not, you may have a period when there is no rental income, where you've not been able to let out the property. And of course, property, real estate, as we've seen, goes through very long cycles of the bear phase that we saw over the last 15 years.
Oh, yes. And now we are seeing that up move. But as you said, we've seen a bear cycle as well going on for a long time for the real estate space. But really, since you said it's the physical aspect of holding an asset, which we Indians really like, does this change in terms of age group, the asset class you should be investing in, equity mutual funds versus rental income? Do you see that pattern changing?
I think that pattern definitely is changing. I remember, Sonal, earlier, the minute you started earning, you were told by the family, please go and buy a house, right? Or you would start thinking of property as your sort of investment haven. I think when we see the younger generations, when we look at the Gen Z millennials, firstly, their attachment to property is really not that high. So for them, I think even, rent themselves living on rent is a better option because it gives them the flexibility to move as per their convenience. Also, I think it works in their benefit because the younger you are, the earlier you can start investing into equities, you can start with small amounts. So I think they are sort of understanding that power of compounding, which they then can benefit from if they start young. But I think to your point, what we are also seeing is now increasingly, I think people, when we speak to, even people in the age group of their 50s and 60s, are actually still preferring to now for their retirement goals, put in money into a mutual fund and then move it to an SWP because they feel that is far more lucrative for them in terms of their retirement expenses or retirement needs.
That is the regular income that you get from mutual funds via systematic withdrawal plan. That makes sense. Preeti, what has the return differential been on commercial property rentals versus mutual funds? If both are invested, say, for a long term, you're not looking at regular income there. What does the math suggest here?
So, Sonal, I think if you look at typically what has been the return on, commercial real estate over the past maybe 20 years, you'll see it in the range of 6 to 7%. And we're not, I'm accounting for the last 20 years. I'm not just saying the last 2 years, because ideally, if it's a long term, you need to take into account what it could be over, the CAGR over the next maybe 20 years. And then if you look at rental income, I think at most you can look at like a 8% yield on that property. So if you take into account that, typically you see that even with the best yields on rent as well as the best returns, you would get a post-tax return of somewhere around 8.5% on real estate versus even today a 13 or 14% on mutual funds. And if you actually take into account tax and mutual funds, you have the benefit, of course, of even going into a certain amount of tax-free, maybe 1.5 lakhs, which you can take as a tax-free deduction. Even then, I think mutual funds definitely makes for a far better use case for a long-term investment, because you still post-tax will manage to get a 12.5% return as compared to maybe a 6 or 6.5, 7% on real estate.
Makes sense. And it's the post-tax return that we definitely have to look at, right? That eats away a lot of the earnings that we get. But Preeti, thank you so much for joining in today. It was a very interesting discussion. Thank you for joining in with your insights and your thoughts.
Pleasure. Thank you. Thank you so much.
Okay, all right. That's all we have of the show today. But stay tuned for Closing Bell to take you through the last hour of trade. Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1.
The Taiwanese index too is up 0.9% this morning, but the rebound is coming in from the Nikkei.
I think we've made very, very good progress. Obviously, we've been in continuous touch with the RBI.
We've seen low growth, but we have not seen a minus 1.8 in a long time.
The 20-day moving averages, both on the Nifty and the Bank Nifty, are the important support levels now.
Just before the earnings season, CLS has to upgrade the stock to an outperform from hold.
25,820 is where the Nifty is starting at, 25,850 now. The Sensex is starting at about 84,425.
We won't draw France first blood, but I mean, if there is a gunfight, we'll not go to it with a knife.
We are seeing very strong momentum in the market, and clearly this is on the back of some very good rainfall.
Mild cuts on the Nifty and the Sensex. The Nifty is below 25,800.
RBI has found that there is prudential guideline as well as practices which are actually, hurting this segment.
Slew of measures were announced late last evening by the market regulator.
So that recovery that we've seen on the mid caps for sure. From the lows of the day, it has recovered and now in the green.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that is the day so far, and markets are biding time, I guess, for the F&O regulations from SEBI more than anything else.
We'll say for 1 hour to go for the midweek holiday.
I would say looking forward to the holiday. It's like, this is like bracing for the...
That's bracing for impact. This is looking forward to the holiday, yeah.
So this is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal Studios. As always, I'm Prashant. With me, my colleagues Surabhi and Rima here, and Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Good afternoon.
Hi, afternoon. Very, very quiet.
Everyone is just biding time, as I said.
I think Nigel's smile tells me he's more than F&O. I think he's looking forward to the holiday. F&O also, but we'll deal with that when it comes. Nigel?
No, actually, I'm celebrating my son's birthday party tomorrow, so I'm very excited for that. Actually, I'm going to be a good boy. It's not going to be a crazy party, but always good to have a midweek holiday, right? So looking forward to it. And India just beat Bangladesh, in a shortened test match. So quite excited. That just took place around 15 minutes ago. So pumped up. Hopefully the markets do a bit of a bounce in the last 60 minutes as well.
Absolutely. And but last, I think from the moment that we walked in 10 minutes back, we've actually seen a slight slide. Yeah. We're down about from being flat, we're down about 40 points or so. Absolutely flat. But now 50 down at almost at the day's low of 25,763. And as I said, we said this in the morning. We reported based on sources that F&O circular, in terms of curbs, restrictions, whatever you want to call it, after the draft proposals came through in the month of July. We don't know what of it will be in the final one when it comes out. Let's see. It's also, of course, a market holiday, so a bit quiet because of that. Bank Nifty flat. Small caps are doing better. The last I checked, 0.75% of the small cap index. And mid caps not doing very much. Advanced decline is positive, not in a very large way. And the IT services index, that is like a complete flip-flop. Down 1, up 1. Today it's up 0.9% on your screen now. So that'll be first off the block in terms of earnings. Don't correlate this to what earnings may look like because earnings, generally the indication is it's going to be slow and sluggish. Rima?
Indeed, we'll talk more about it. A lot of preview notes are also kicking in, but just a quick word on individual stocks which are moving around. On top of the charts, as Prashant pointed out, it's Tech Mahindra, so that's up 2.7, 2.8%. There is a CLSA upgrade. But outside of that, Infosys, Wipro also showcasing a gain of nearly 1%. M&M is higher. Kotak Mahindra Bank on the bank's plan to become one of the top 3 private sector profitable banks. So Kotak Mahindra Bank is up and about in trade. State Bank of India also up. On the way down, IndusInd Bank under pressure, Tata Motors, Asian Paints, ONGC, Titan, Bajaj Auto, HUL. So these are some of the stocks with notable losses. Tata Motors, September sales, by the way, out.
Yeah, CV sales down 23%. CVs has been a bit of a non-starter. Really, we haven't seen any bright sparks. Ashok Leyland sales were, I think, in line with numbers. Tata Motors, the CV side is still looking at a year-on-year drop. Domestic sales, I think, are also down 15%. So those are not the best of numbers from Tata Motors. If you just look at the immediate trends, and the stock is reacting quite sharply to that as we see. So that's a year-on-year drop that we're talking about, 15% in domestic sales. Speaking of drop, by the way, just look at what's happening to oil prices. There's a 2% dip that's coming through. I'm talking about global oil prices. And now Brent is quoting at 70. We saw big moves last week. Remember that huge move on some of the oil marketing and refining companies. Not seeing too much of that right now. HPCL is up about 1%. IOC is quite flat. Let's bring up BPCL. BPCL is actually down 1%. So not much, but yeah, that's pretty big. I mean, Brent is now down to 70, even as all the conflict rages on in West Asia. The whole worry is that perhaps China and US, one of the biggest consumers, they won't consume as much, and there's enough and more oil going around in the market. So that's something to keep an eye out on as well. The cuts on some of the gold financier stocks, they have actually deepened, and we highlighted that in the morning as well because of the kind of advisory, the nature of concerns that the Reserve Bank is raising. It's not directed at any particular company just yet, but they are watching the space very, very carefully, and the reactions are playing out on the stocks. IIFL Finance continues to be a bit of an outlier, still up about 1% or so. Relatively speaking, once again, Nigel, we're seeing some outperformance in the mid-cap side of the market again today.
Yeah, that's right, and portfolios will be feeling quite good because of that, right? And just one more factor, if you look at the markets, we're down 30-40 points. Normally, you'll have the VIX that should either be flattish or should be mildly higher. But the VIX as well has cooled off. And normally, the VIX cooling off with the markets down, it's normally not a sign of worry. You expect a bit of a bounce back. So we'll have to see how this plays out. We're down 50 points or thereabouts. In an ideal situation, the VIX should be a little bit higher, but that as well has cooled off. Maybe, in fact, it's a shortened week. Maybe the IVs are cooling off as well on both the sides. How do you position yourself though in the final hour of trade? Mitesh Thakkar is with us. Hi Mitesh, good afternoon. Good to see you win. The Nifty Bank is holding its ground. It's got a drubbing in the last few sessions. It's down 1,500 points. That plays out the weekly expiry today along with the Nifty Financial Services Index. Your view on the Nifty Bank first.
So, Nigel, I think the Bank Nifty and the index both, they have some negative event in the sense that technically the hourly and the 2-hourly charts, the indicators are starting to cross down. And the Bank Nifty per se, I think, is at a very critical support level of around 52,700, 5800 zone. We did have an intraday low of 52,817. So I think if this level breaks, then I'll be slightly worried. Similarly, the Nifty is also, trading below 25,800, which is my pivot level, an important area. And below that, we could see some more decline. So the profit booking could be slightly more severe. Therefore, we are avoiding the index. A good way to trade the index would be if you have long positions, buy a put spread to hedge it out, or just totally avoid it and trade with stock-specific biases.
What about individual stocks, Mitesh? Anything that catches your attention?
I have one buy and one sell. I think on the buying side is Coforge. So I would recommend buying with a stop below 7,000 for targets of 73.50. And Muthoot Finance, it's given some kind of a breakdown. So sell there with a stop at about 1989 or 1990 and look for targets of 1880.
Okay. All right. Got that. Mitesh, thanks very much for joining in. We'll come back to you for some more ideas in a bit. Well, one of the key stories, of course, we've been tracking today is the monthly auto sales report card. We have Vinny joining in. Vinny, we just saw those Tata Motors numbers. They're not looking too great. But tell us about the overall performance. Who's hitting the mark and who's not?
So yes, among the four-wheelers, let's start with that since Tata Motors just came out with its numbers. So talking about M&M, the auto segment, that did quite well, above estimates. They managed to see a growth also of 16% on a year-on-year basis, month-on-month basis. Also, they managed to see a good growth. We also had Ashok Leyland as well as Eicher VECV, which reported their September sales numbers. They were in line with what the street was expecting. So Ashok Leyland, bit of a decline in terms of on a year-on-year basis, 5% decline, but month-on-month basis, they've managed to see a strong growth in terms of momentum. They've seen a 29% growth on a month-on-month basis, and VECV on a month-on-month basis also has seen a double-digit growth. So surely strong momentum seems to be picking up in all these companies. But Tata Motors, that's coming at a bit of a miss that we're seeing this time around, a large miss in terms of what we had versus the estimates. So what Tata Motors reported is 69,694 units. Total sales is what I'm talking about. And our expectations was that somewhere around 80,000. Now the management also came in with a commentary saying that slow consumer demand as well as seasonal factors was something that impacted the sales of the company going in this month. But going forward, festive season is there, so they're expecting a pickup in demand. Let's move on, talk about the two-wheeler names, Bajaj Auto as well as TVS Motors. They managed to report good numbers, both above the estimates. Two-wheeler sales, mainly good monsoon is something that is supporting the sales, as well as festive demand is expected to see a bit of a pickup. We spoke to the management of Bajaj Auto earlier in the morning. They also said that they expect this growth to continue even in the month of October, as well as their EV side or the green portfolio that now accounts to 40% of their domestic revenue. So that's an interesting factor coming in there. TVS Motors also similar strong growth trends both on a year-on-year basis as well as on a month-on-month basis. Lastly, the tractor side, farm equipment. So M&M tractors, that also managed to see an inline number this time in September, while Escorts also managed to see a decent number. The trend coming in from both these companies is that the second half of FY25 for tractors and farm equipment is expected to be better.
First of all, we are seeing very strong momentum in the market, and clearly this is on the back of some very good rainfall. Of the 36 agri-climatic zones that we have in the country, 33 zones have got either normal or above normal rainfall. And even in terms of, if you see the state stratification, for only the states of Bihar and Punjab do we see little bit deficiency in the rainfall, but broadly all the agri states also have very good rainfall. In terms of revising the guidance, no, we will still maintain at 5% level because we want to see through the festive season and then maybe take a call at the end of Diwali. That would be our view. But most of the heavy lifting will happen in H2 of this year, and that would give us an overall 5% growth rate.
Steady improvement in Nigeria and also, of course, in exports. October to December is a slightly better period in Nigeria. And that contributes to a steady upward growth trajectory for exports as a whole. As we have been saying, that month on month, we expect to see about a 10% improvement in exports. That's what we've been clocking. And I think that hopefully should continue.
Okay, all right. So that was a bit of the management commentary that we picked up today. Deepak Chinoy from Capital Mind is joining in. Deepak, hi, good to have you on as always. So autos first, I actually want to talk to you about Tata Motors. Now, whoever has been riding the good times with a Bajaj Auto is probably not worried at all. Two-wheelers are doing well. The commentary is good. Now we're in festive season. But passenger vehicles, what is the sense? And Tata Motors, after being the best performer last year, stock has gone into a bit of a funk and then they'll go through a demerger. CVs are still not picking up. What would your advice be to someone who perhaps is owning it at higher levels or has been in the stock for a while?
So, of course, Surabhi, I can't give you advice. I can't give advice on a stock, but I think one of the things about Tata Motors is I haven't seen the worldwide numbers, the JLR sales. We haven't. I'm looking at the numbers, in fact, on the screen while you were talking about it. I think it seems to be an outlier in the sense of M&M numbers haven't been quite as bad, and maybe the CV numbers in Tata Motors are more indicative of the market because they have a larger share. But relatively speaking, that's a small part of its overall business. I would say, the stock itself is not. There's hardly been any momentum in it for a while. But it's one of the few things that if you look at, say, the revival in China that seems to be happening now, they're probably one of the only companies in India that might end up benefiting from that revival if things go well, because of the JLR, kind of establishment that allows it to kind of benefit from a China rise. Beyond that, the numbers in India don't look very exciting. But to be fair, other than the two-wheelers, the numbers in India aren't very exciting. They're decent, but not very exciting overall in the passenger vehicles area. So perhaps it's going to take Diwali for some of that to change. And I thought, two-wheelers would come good with agricultural, with more rainfall and with the elections. And that seems to have happened, but, four-wheelers haven't picked up really meaningfully.
Deepak, hi, afternoon. Wanted to get your thoughts on IT. But before that, just putting out what some of the brokerages have said this morning when they come out with their Q2 expectations. So CLSA finds the risk-reward unattractive after the 14% increase in Nifty IT in the quarter gone by, because we haven't seen any material changes to the EPS estimates. They say that expectations have run far beyond fundamentals after the recent steep rally. They haven't seen any broad-based pickup in discretionary demand, either on account of the Fed cuts or softening of the US bond yields. There is still macro uncertainty which prevails surrounding US elections and geopolitics, and therefore the risk reward is unattractive, especially after the 14-15% increase seen in the stock prices in the last one quarter. But Morgan Stanley, on the other hand, believes that even though there is no material improvement in the fundamentals, managements may continue to sound cautious. They believe that valuation multiples hold up in the early stages of a recovery cycle. Purely when it comes to Q2, their expectation is Q2 revenue growth will be similar to or better than Q1 in most of the companies. The BFS, that's Banking Financial Services recovery in the United States, continues to hold up. Hiring trends are improving, though near-term management commentary remains cautious. There is pushback from owning IT stocks because of the way stocks have performed in the last 3 months. Investor positioning is already overweight. Valuations are high. But according to them, the valuation multiples hold up in the early stages of a recovery cycle. So Deepak, come in on IT now and how the positioning is and what would you do?
This is interesting, Rima, because we're in a phase where the US is going to go through an election later this year. The outcome of that election is probably going to change a lot of metrics for at least some of the companies, whether it is in the healthcare industry or whether it is in a bunch of other, even BFSI to that extent. Though I think BFSI is more or less going to be more fixated about how the trajectory of interest rate cuts will be, which seems to still indicate another 50 basis cut towards the end of this year. And I feel here that any new contracts will only kind of be discussed after elections and after maybe another round of rate cuts, because the intensity of the rate cut has been much higher than perhaps you would have thought about earlier, simply because there are fears that the economy is slowing down. That perhaps pushes decision making to a little bit later when there's more certainty around post elections, how the government is going to take things. There are a number of other issues that, the US is of course the biggest market, but you see Europe, if you see Japan, you see most of the world, the kind of contractions that we are seeing worldwide. I do think there's going to be near-term stress, but to that extent, these companies are unlevered. They have available cash for acquisitions if it has to come to that, and there is an ability to take an increased market share when it comes to outsourcing, even through the AI route, because once AI gets stabilized, you're still going to need people to do a bunch of the things that they say that AI can do, but somebody has to drive it eventually. So I think the next year or the year after that will probably be more defining for IT. This is probably a time to think of building positions. It may not be a great time for results this quarter.
Okay, all right. Deepak, I wanted your view on the gold finances. But first, let's get in Abhishek. Muthoot and Manappuram, they are under pressure as the RBI has found several irregular practices being followed by these financiers. Abhishek joins us to help us out with all of those details. Abhishek?
Well, RBI has, found some, selected supervisory entities wherein deficiencies are being noted by RBI. So, a comprehensive review has been advised for all lenders in the gold financing space, and review and on-site examination was done by RBI for selected supervisory entities with respect to prudential guidelines as well as practices with regard to loan against ornaments as well as jewelry. So, RBI found some irregularities as mentioned, ahead. Shortcomings in use of third parties for sourcing and appraisal of loans, valuation of gold without the presence of customer which are being done, inadequate due diligence and lack of, end use of monitoring of gold loans. Also the fact that there is lack of transparency during auctioning of gold as and when the, customer defaults. Weakness in monitoring the LTV, that is loan to value. Typically 65 to 75% is the loan to value, followed by lenders over here, and incorrect application of risk weights, etc. So we have Citi's note wherein they have given a detail with respect to gold financing forming a percentage of the overall portfolio. In terms of banks, Federal Bank is the highest at 12.2%, Bank of Baroda at 4.6%, RBL as well as SBI at around 3.5 to 3.8%. In terms of NBFCs, Muthoot Finance has about 82.5% of the portfolio in gold financing activities. When consider Manappuram, they have about 52.5%. IIFL Finance has a little more than 21%, and SBFC has about 16% of the portfolio in gold financing activity. Back to you.
All right, Abhishek, thanks a lot for that. Deepak, I wanted your view on these gold financiers. They've had a good run. You have the tailwind that you've seen in terms of higher gold prices. But this side of news flow, well, the street doesn't like it too much. What would you do?
Well, I think it's because of the news, Nigel. I think the things that they mention, and I know that this probably repeating it, but I'm just saying things like, for instance, I'm giving a large number of loans to the same PAN number. There's a differential application of risk weights, that you're not able to recover the value of gold in case of a default according to the weight when you measured the gold. So that means there's a lapse in the valuation process. These things are serious, and I think at some level has to be addressed, because gold loans are usually taken by relatively poorer sections of society. However, some parts, I would say, RBI may have been overzealous in, for instance, saying that the end use is not monitored. When a poor person comes to you and takes like a 20,000 or 30,000 rupee loan, how are you supposed to monitor the end use? Whether he buys pencils or medicines with it, does it really matter because he's given gold as collateral? I would say that is not really a little bit of an unfair kind of an ask in that context, but maybe there is something more specific in the directions that are given to specific players. But I would say in general that regardless of this warning, I don't think RBI is going to come back and say stop lending against gold, because it will affect the lowest strata of society in terms of economic strata, income earning strata. And then therefore, while these things are maybe temporary reactions, I still think there is a significant growth story ahead for gold-based secured loans, especially because RBI has come really hard on unsecured loans recently, and they don't want unsecured loans to grow meaningfully, at least for banks or NBFCs. So I would say, despite a reaction in the medium term, unless RBI changes its view on unsecured loans, I would say gold financiers still have a reasonably good future. One thing you have to be careful about is IIFL Finance has just got its license to come back to gold loans. So they will muddy the market for some of the established players like Muthoot and Manappuram, who had been taking market share for them in the last 6 months.
All right, fair enough. So that's view on gold loans. Deepak, and thank you for joining us. By the way, I do hope you'll join us on Thursday morning, because we are expecting the final rules on SEBI's F&O measures should be out over the next, I think, 24 hours or so. So we'll see. I would love to get your thoughts. Thank you. Have a good holiday tomorrow, and speak to you soon. We'll take a break. We're back, and we'll have Pashupati Advani join in to talk more markets on the other side. Stay tuned.
foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18, weeknights at 7 p.m.
First of all, I mean, we are seeing very strong momentum in the market, and clearly this is on the back of some very good rainfall. Of the 36 agri-climatic zones that we have in the country, 33 zones have got either normal or above normal rainfall. And even in terms of, if you see the state stratification, for only the states of Bihar and Punjab do we see little bit deficiency in the rainfall, but broadly all the agri states also have very good rainfall. In terms of revising the guidance, no, we will still maintain at 5% level because we want to see through the festive season and then maybe take a call at the end of Diwali. That would be our view. But most of the heavy lifting will happen in H2 of this year, and that would give.
Welcome back. Pashupati Advani is now with us from Global Foray. Pashupati, good to have you with us here. Thanks for your time. Let's just start with the brief bit on the market itself, Pashupati, because lots of heated debate and discussion about whether, we are at a point where this, one is, of course, we're thoda thanda today, that's it. And maybe the market picks right back up when we return day after. But generally, for the last many weeks, lots of serious long-term investors, Pankaj Tibrewal, for example, was with us yesterday, been making the point that maybe, it's kind of too hot to handle, and you need a cooling off period. So just wanted your thoughts there, Pashupati. Add to that maybe in the next 24 hours, we'll have the SEBI rules on F&O curbs, which perhaps more than anything else, what it does is reduces market volumes, as a lot of exchanges are fearing. So just wanted your thoughts.
So one thing is very clear. If you hadn't noticed, there's an election in the US in November. And I think
I thought you were talking about our election next week. This week, sorry. This week. Just state election, sorry.
No, so the big election, the Americans have always had this phobia of $3 gas at the pumps. So, definitely I don't see crude going up before the elections. So that is good for India. And I hope our oil companies and oil marketing companies are taking advantage of it to buy cheap crude. Because if global crude is 70, imagine how cheap Russian crude will be. And, I think that arbitrage is gone. But the answer is, please buy 9X and Brent crude as much as possible, so that because we are still a huge importer. That's First of all, that's very good for our balance of payments. Second of all, we've also got this thing of on the flip side, exports, where exports are not doing as well. The IT thing, according to me, is slowing down. We are not going to be able to pivot as fast as AI is pivoting for us. So, our IT companies are basically going to lose some market share. And also with the issue with the visas and difficulties in making people travel, I think that's also going to hurt that sector. So those two, the oil sector and the IT sector, are big sectors. The other sectors that are big, obviously, are the banks, the banking sector. In that, the private banks seem to be doing okay. The state-run banks are having some pressures, because I think that there's some pressure to, take some more loan loss, etc. And but hopefully, with rates coming down, their bond portfolios will go up, so they'll net be okay. But I think that the market therefore is worried. Plus, as you said, we're going to get some laws about SEBI and how they're going to restrict the number of players in futures. I mean, the reality is that retail has lost supposedly about $100 billion, and a lot of that has been taken out by FIIs. So basically, we're just giving our foreign exchange, and it's going from retail out. So I think the government wants to stop that. Now, if it means that we have a slight correction in the market, so be it, because I think in the longer term, it's better to not lose the money and have some of the smaller retail not be in this fracas. I mean, we're hearing all sorts of rumors, but let's see what happens. And then, of course, the other challenge is that the SEBI chairman is also under some pressure. So credibility, et cetera, in her case. So whether she's going to make the decision, whether she's going to be replaced, these are all sort of market buzzes. So those are my thoughts. And as a result of which the market is behaving, I would say, skittishly. And the other big challenge is that Japan looks like it's going to raise rates. The Japan carry trade, which was basically fueling all the liquidity globally, is disappearing really quickly. And that's also putting pressure on asset prices globally. Prashant?
Pashupati, hi, afternoon. You missed out on China to give us your thoughts on the kind of sizzling rally, stimulus fuel sizzling rally that we've seen. Today, of course, shut on account of Golden Week, today onwards. But till yesterday. So where do you stand on that, and how does it change things for India and investing in India?
So a friend of mine who's actually of Chinese extraction, but he's a portfolio manager outside based in Singapore, says that I have not increased my exposure to China. I'm very happy with my 2.5% exposure. He says, I really don't understand what's going on there. And, it is affecting us. But the reality is, when are they going to give us visas to travel? I mean, it's becoming almost impossible to go to China, and it's also equally impossible for them to come here. So I think that we've got other sort of sub battles going on with China that's actually making us ignore China in a big way and benefit from the fact that money is coming from other countries to us rather than into China. Seema?
Pashupati, hi, Surabhi here. So yeah, there's so much going on, right? Oil is falling, and then China. And by the way, there's a Eurozone inflation number that just played out for the first time in 3 years. Finally, the Eurozone inflation number is, I think, at 1.8%. It's fallen below the ECB's target. So with oil prices cooling off the way they are, I think inflation is no longer that big a concern. So there's a lot, I think, on the international arena, there's just a lot that we're dealing with right now. But that brings us back here home. We've seen a bit of a change in the texture of the market rally, right? Some of it came back to large caps. We started seeing some participation in financials. What would your advice be now till the end of the year, given that we have elections, we have central banks doing all kinds of things, and there's oil? What should the portfolio strategy or the stance be? What would you be doing, and where would you invest new money?
So I actually believe that one should be buying into oil companies on dips, simply because I don't think this 65, 70 oil is going to stick around for too long. I think after November 4th, it'll jump up. So the chances, if you get a dip in oil, it's great. And now the oil companies are kind of merged with oil marketing companies. So I think that will also be there. I'm not seeing any lowering of prices at the pumps, which is a little bit disconcerting. And it actually means that that's good for the OMCs, because it means the OMCs are going to keep the money, keep the profit, and enjoy themselves. And so I think that's good. So that's kind of like a no-brainer. The other thing is that government is still pushing out infrastructure spend. So any company that's benefiting from that needs to be there, whether it's the raw material, which is cement and steel, or whether it's the actual infra companies. Those need to be bought, the ones that have businesses. Again, I would say buy on dips because they're all, quote unquote, in world terminology, really overvalued. But again, this is a market where there's going to be some shifting, and there has been some shifting to FMCG, which has gone quiet. And also, I also like the pharma sector, which I didn't mention when I sent you my notes earlier today.
Hi, Mr. Advani. Good afternoon. Good to see you in. Since the world is in a bit of a tizzy on a flux, let's look inward. And one sector that's underperformed is cement. But as we know, second half of the year is better. You have got the timing right quite a few times in terms of cement. Now you have input costs that are down, prices hopefully move up, and demand as well catches up. And even yesterday and today, you're noticing that most of these cement counters, they're not rallying big time, but they're not falling. Even yesterday, they were in the green. What's your view? What's your approach to the cement space? And which stocks do you like? If you could share a couple of numbers with us.
No, so I think there is two things happening in cement. First of all, the demand is there. Infrastructure demand is there. We're at the end of the monsoons, at least in Western India. And, people are going to get back to business, back to finishing buildings, back to finishing roads. And I'll say this facetiously, back to filling potholes in Bombay. So I think that will happen reasonably quickly. And I think that's going to help the whole sector. I actually think that the sweet spot is mid-cap cement because there's going to be even more consolidation. There's 4 or 5 players, and the Adani group is the biggest. The Birla group is also in the space. Dalmia Bharat is also there. So all the other players are getting marginalized, and I think will be bought because they're trading cheaper as a multiple compared to those 3 groups. So even if they do stock mergers, that's fine as well. So, I think that's where we're going to go. So the sweet spots are going to be into the second tier cement companies. And I don't know, exactly which. And again, we've got Adani selling down some of his cement stocks, which are going to FIIs. So I think that means that, there is some demand from FIIs for cement. And as a long-term play, you look at India, you look at cement, it's part of the growth story. So why not? So, I'm not particularly concerned. And as you are, Nigel, that it's hanging in there.
Okay. By the way, Orient Cement, the last I checked, was seeing a big move, but it's been beaten down quite a bit. It's back above the 300 rupee levels. There was that sort of, it was a quote-unquote deal stock, but of course no deal has materialized so far. And it sold off from 360, 370 levels all the way down under 300, back above it, 7.5%. And the other one is Policy Bazaar, which is jumping 6.5%. So again, from the recent high was 1970 and the recent low is 1550. So from 1550, it's back at about 1720. So we'll see if this sustains or not. But Nigel, I think you wanted to come in on Orient.
Yeah, not on Orient. Actually, Orient, risk reward seems to be favorable at around 280. That's what's been happening over the recent past. It goes to 280, 285 and then sees a bit of a bounce. The other one I'm talking about is the structural steel tubes business that has come out just now. APL Apollo Tubes, they have delivered, I think, a double-digit 12% growth in terms of their volumes for the past quarter. So that's quite good, and that's the largest player in the business, so that stock moves up. But the other one is JTL Industries. Plenty of promise out there. It's coming on a lower base. It has valuation comfort as well, and that stock has spiked up as well because on that small base, they have grown by close to around 26% odd. So both these two stocks, in the last 30 minutes, both of them have come out with their quarterly sales numbers, and at least for now, both of them are rallying. But JTL has that valuation comfort. We'll have to see whether or not the promoter entity converts those warrants that they took at around 270 rupees. That's the biggest trigger for that particular counter. But we'll thank Mr. Advani for joining in and giving us his take on the markets as well as on a whole host of sectors. For the time being, we slip into that snappy break, come back. Nimesh is waiting for us on the other side. He'll tell us what's going on in D-Street Chatter.
5% growth rate. September has been a slow month for us in exports, and there are two factors to it. One is that in our neighboring countries, there are some geopolitical challenges being played. These are all very big markets for brand Mahindra and Swaraj. And even in the US market, we are seeing that 11 quarters of continuous degrowth in US tractor industry. Now that is, we know the factors, that is on back of very high interest rate cycle, and people were waiting for Fed to start cutting. And now that has happened, I think the transmission will take 3-4 months time. And even in our US, which is our second largest market after India, the sentiment will revive. So that will again give us growth getting into our Q4. But I think for next 3-4 months, the exports might be a little slow.
We like to stick to the fundamentals, and we won't draw first blood. But I mean, if there is a gunfight, we'll not go to it with a knife. So, one does end up participating. But having said all that, it just serves to advance the customer, the sales. But the customer expects it, because that is the whole atmosphere during the festive. One participates in it. But once the dust settles down, it's back to good product, proposition, and customer care.
Let me address that constituency that you just spoke of, which is, of course, one of the most crucial constituencies, which is the regulator. And I think that is the big overhang today as far as the Kotak Mahindra Bank story is concerned, with the RBI imposing restrictions on account of deficiencies in the digital and IT infrastructure, not allowing you to onboard mobile as well as digital customers, as well as putting restrictions on your credit card business. Now, if you can share with us details on what you've been specifically able to do to demonstrate to the Reserve Bank that you are adequately or appropriately addressing those deficiencies, and where do you believe that you stand? I mean, there is, of course, an external audit that's also been sought, but where do you believe you stand in the remedial measures?
So, Shirin, first things to start, where we started with is, look, India has the best digital public infrastructure compared to any other place in the world. I've worked in every other place in the world. I've never seen anything like this, right? Now, obviously, that has led to the demand for digital services having gone up dramatically. And it's about the bank systems having to keep up pace with that. So, we've been spending the last couple of months really focused on how we grow and make our systems foolproof. And like in every crisis, there's an opportunity. So, we've taken this.
Welcome back. Well, flat as can be with a mild negative bias is what we are seeing, but your portfolio is feeling good because the mid-cap index is now up more than 200 points. Good time to get in Nimesh to tell us what he's picking up. Nimesh, truncated week, so happy. But what are you picking up in terms of flows and market action?
Well, flows-wise, it's going to be a muted day, right? Yeah. Because I understand a lot of domestic mutual funds are not very active. We have an off tomorrow. China is shut for this week. So even from a global perspective, we're not going to see this big global trade-off, which is going to happen. So from a flow perspective, it's quite muted. But again, it's been a range-bound day of trade. You rightly pointed out, portfolios are doing good. And that was the case yesterday as well. A vertical fall in Nifty yesterday, but the breadth was quite positive, right? Even that's been the trend today as well. I guess the sector of the day is clearly, again, metals. That's been the sector of the entire last series, and that momentum continues. And now we are seeing a bit of chase from the domestic and from larger HNIs as well into the metal names. So that's the sector which is well bid. I guess, what to watch out for. One, of course, once the China reopens next week, whether there is a global reallocation trade, that is something to watch out for. CLSA put out a note today morning saying there are few stocks in the large cap which are vulnerable to sell off if that trade has to happen, right? So that's something to track in terms of large cap. We saw yesterday was the first signs of it. 9,000 crores of selling was purely in back of risk of from India to China. So that's something to track. I guess earnings are going to be quite important, which will start maybe from next week. But I guess the other thing to track would be the geopolitical risk as to how that pans out. Despite so much of noise, the crude is now again fallen back to 70. So that's positive at the margin for India. So that is something to track. But I guess the bigger things to watch would be earnings. And if, as and when China reopens next week, whether there is a bit of a shift from India to China in terms of flows.
Okay, all right. So trade setup as well as all the cues that we need to track. But what about individual stocks, Nimesh?
Well, a lot of mid-cap stocks are buzzing in trade. The first name is Sadbhav Engineering. we don't talk too much about the stock. It's been kind of a forgotten stock. Suddenly, we've seen a bit of up move in that name. Again, locked at 5% upper circuit. The volumes are on the higher side. I understand domestic mutual fund, the only institutional holder that's been a seller of late, but some informed investors are buying as well into Sadbhav Engineering. The second name is SRF. Surprisingly, despite some long-only funds buying into the stock, this is the only name which is relatively underperformed in the chemical basket today. Davin is buzzing in trade, so is Tata Chemicals. A lot of chemical stocks are buzzing, but SRF is under pressure. But there are buy flows and some long-only funds are active buyers there. The third name is SpiceJet. For second day running, big move on that name and on large volumes as well. Couple of reasons the stock is buzzing. One, I understand there is a clean-out trade from some hedge funds who bought into the QIP. And one of the P investor who got warrants at a much lower price, even that particular entity seems to have sold out. And in the last couple of days, some large HNI investors have been active buyers and hence a big up move in that name as well. They've got the money now. Execution is going to be the key to watch as far as SpiceJet is concerned. And the last is a couple of large cap names where there is delivery-based selling, Sun Pharma and TCS. TCS stands out because while the entire IT has done well today, TCS is seeing a lot of delivery-based selling, and same is the case with Sun Pharma as well.
Thank you very much for that interesting list as always. Mitesh is now back with us for a few BTST calls. Mitesh?
Yeah. So Polycab is a BTST. Keep a stop below 72.90 and a target of 73.60 for tomorrow can be looked at. I think that's one. And the other one which I have on my list is Navin Fluorine. That's the stock, and I think we're just talking about the chemical pack. I think the chemical pack, I think this is doing very well as well. So Navin Fluorine is a BTST with a stop at 35.85 for targets of 36.70.
All right. Thanks very much, Mitesh, for that. Mitesh, just a quick word on PB Fintech, if you will, if you want to weigh in. Is there a trade here?
See, I think, the stock, if you look at the last few weeks, has rallied and now is giving a pullback. It's coming closer to support level, so I would want to buy it. Last week, the low was 15.45 and the level which I was looking was around 15.20, so it didn't touch those levels. But I think in case you get it closer to 15.50, 15.60 zone, I think that's the level to accumulate for a medium-term perspective.
The other one is Angel One. Look at Angel One. It was up, and I was wondering in the morning, it was up 8% even a couple of hours into today's session, and it's basically given up all those gains. And I was looking at the people were saying, we're looking at the price, maybe what's coming in terms of those F&O rules, etc., is not going to be as high. But they're probably reading too much into the price action, as clearly what we're seeing now is a big drop off, and it is actually now just up about 1.5% or so. So it's a big one from the day's highest point, and that's the F&O name, by the way. Now, Nalco is surging in trade, and this is on the back of positive commentary from Kotak, I think, which has upgraded their rating on the name. Nigel, take it away.
Well, that's right. Kotak has done a bit of a U-turn. They had a sell rating, now they have a buy rating. They've increased their target price as well from around 160 to around 235 odd. Normally, when the price goes up, there are a couple of factors that play out. Yes, they increase their earnings estimates for the next few years, 25, 26, 27. And also, they're giving it a higher multiple. So both the levels are in place, and that's why that price moves up. Let's run you through the top factors then. Why they're positive on the stock from here on. They have upgraded their estimates on both aluminium as well as alumina for the coming years, point number one. Point number two, they're taking note of the alumina deficit that we're seeing globally, which will support pricing from here on. So that's on the pricing aspect. Next, let's look at the cost aspect. And they started getting a higher amount of their coal from captive sources. FY24, we saw some part of it. FY25 will be even better, and FY26 even better from here on. So pricing's in order. Cost as well will get minimized. And the third factor is volume growth. That's something that's not coming about, right? But now, in fact, they have an expansion that's coming on stream. And Kotak is factoring in for the second half of FY27 that volumes will pick up from their expanded alumina capacity. So put all this together, Kotak is quite impressed with Nalco, and the bulls, they're grabbing that stock in today's trading session.
Thank you very much for that. And the market is very impressed with Kotak Mahindra Bank. In fact, that is the big CNBC-TV18 exclusive and one of the big newsmakers of the day when the MD and CEO of Kotak Mahindra Bank, Ashok Vaswani, said to CNBC-TV18 that growth and transformation of the bank is the mandate given to him. He also reiterated that the bank is regularly engaging with the RBI in an effort to lift the restrictions as soon as possible. Listen in.
Kotak is a great brand. Kotak is a great platform. There's no reason why Kotak shouldn't be within the top 3 private sector banks. And I'm talking not only of the bank, I'm talking about our subs. Where our subs are within the top 5, why we can't be within the top 3, or just full stop, be within the top 5, right? Growth and transforming for scale is exactly what this mandate is about. India has the best digital public infrastructure compared to any other place in the world. I've worked in every other place in the world. I've never seen anything like this, right? Now, obviously that has led to the demand for digital services having gone up dramatically. And it's about the bank systems having to keep up pace with that. So we've been spending the last couple of months really focused on how we grow and make our systems foolproof. So we've taken this as an opportunity to really say how we'll really leapfrog and make our systems really resilient and relevant for the days to come. So I think we've made very, very good progress. Obviously, we've been in continuous touch with the RBI, sometimes even every week, updating them, getting their guidance, making sure we're on the right path. And I think we've made tremendous amounts of progress. Really say how we'll really leapfrog and make our systems really resilient and relevant for the days to come. So I think we've made very, very good progress. Obviously, we've been in continuous touch with the RBI, sometimes even every week, updating them, getting their guidance, making sure we're on the right path. And I think we've made tremendous amounts of progress, and we'll continue to do it. You know, obviously the RBI is exceedingly important, but the customer, I've got to get it right by the customer.
Yeah.
I got to stay resilient for the customer. I need the best customer experience for the customer. And, you know, yeah, RBI has told me you got to do it. So.
Investing.
Welcome back. A bit of a pullback is what we're seeing towards the end of trade. The Nifty is almost moved back into the green. TCS is the one that's fighting back for the bulls. The IT pack on the whole. New entrant Trent as well is doing quite well. Infosys, that's a heavier weight as well. That's pulling back. But let's get a view on the markets from here on. And how about the chart shaping up? Well, Jay Bala from cashthekiosk.com joins in. Hi, Jay. You believe that the markets could be looking to correct a little bit, maybe to the election day lows? Is that something you're working with? And also, Reliance Industries' underperformance is something that's giving you more conviction. Explain that to us.
Yeah, that's right, Nigel. See, there are two possibilities for the markets at the moment. The momentum is saying that one more higher high is, it can accommodate one more higher high. But whereas the time cycles that started from the March 2023 low, it says the high the market saw on the 27th of September, that could be a start of a significant correction. The bull market isn't ending, but it could be a deep correction that corrects the move that started from March 2023. But still, we are not yet fully convinced. We are waiting for the support levels for the Nifty at about 25,333 to 25,285 to get taken out before we are fully convinced. If you look at the US markets, it's probably even that's got on the a squiggle high to come through, and we'll see the sustainability of that. But we just want to be a little more cautious. You just want to start tidying up your portfolio at this point of time. Maybe start raising cash and careful with your new longs at this point of time.
Jay, hi, afternoon. Do you just want to expand on that? Because I think you did mention that the move could look at the post-election lows again. So I'm not sure, because the June 4 low was 21,880 thereabouts. So are you saying that could also be on the table, or what are the immediate next levels for the Nifty on the downside to watch?
Yeah, fair enough. Yeah, that's the level I'm looking at. But we just don't want to preempt the market. We want the markets to first trade below 25,333 and 25,285, and then only then we'll start considering this. But this is just a heads up for the market and the market players that once that gets taken out, we might want to start looking at the June 4th low. But as the price structure is saying that there could be one more higher high coming through above the 26,244 or unchanged that we saw a couple of days ago. But the time is resisting it, and the underperformance of Reliance, like I pointed out, Nigel, I ran my Python code for from 2000, and the 2021 top, the 2015 top, the 2010 top, and 2004 top, they've all presaged with Reliance Industries lagging behind when the Nifty is clocking fresh 52-week highs. So this is just a signal at the point of time. It's not yet fully a committed signal. We want the markets to trade below supports, and intermediate levels before 21,280 is about first 25,300 and change, and then it's 22,600 and change.
Reliance is still about 9% away from its recent highs, when the frontline indices are pretty much knocking on those doors. But tell us a little bit more about Reliance Industries, because you're saying the underperformance of Reliance Industries is a signal that a correction is coming. So what's the chart telling you? How much lower does Reliance go? Is it going to be a long period of underperformance?
I would say it's a long period of an underperformance. Yet the evidence don't point to that as of now. But it could be a significant correction. But if the markets were to drop below 2869 for Reliance, and it's already showing potential for about the June 4th low, that's about 2,700 and change. I pointed this out in August when I said Reliance has come down in 5 steps. Usually 5-step move is accompanied by another decline or a larger decline. So the nearest supports for Reliance are about 2,700, but I'm seeing this as a corrective move in a larger decline. Sorry, in the larger uptrend.
Just very quickly, we have 2 minutes before closing bell. Jay, the way commodities are moving, can't quite wrap my head around this. Oil has fallen 9-10% in September in 1 month. It's down some 16-17% in the quarter. Oil falling the way it is, gold rising, which is obviously a typical safe haven. Equities are also going up. I mean, I don't know, does it add up? Have you seen such big divergent moves across these asset classes, commodities and equities, in the recent past?
It happens, Surbi, and it happened in 2008 too. But if you recall our conversation in April 2024, I had said coffee is likely to replicate the move of cocoa and likely to be the next coffee, likely to be next cocoa. And coffee has gone up 50% from the Robusta coffee. If you look at the US Arabica coffee, that's gone up 35%. And if you look at today's price action in the Indian market, it's saying tea stocks are getting into action, and some of the tea stocks have very interesting breakouts. And probably the message from the markets is that maybe if coffee is expensive, we're looking for tea, or maybe tea is also going to get expensive. I don't know the message, but tea stocks look pretty interesting. And this kind of divergent move usually occurs near one of the ending portions of the move. So that's another reason for you to be cautious. And gold might be ready to also pull back depending on the strength in the dollar. Dollar is likely to rally somewhere close to 102. The USD JPY is likely to rally more, somewhere close to 151.
And oil very quickly, Brent, next target?
Oil, as I said, on the 20th of August, oil is headed towards $55 per barrel. But, the first, a break below the September low of 68, a small bounce, that's below $75, and then it resume its move towards $55.
Okay, well, and absolutely, it's going to be great news for a big oil importer like India. But what it does sort of sentiment out there in terms of risk assets, etc. That's another thing. But that's also another conversation. Jay, stay with us. We're going to just wrap up things here because markets are closing. So large caps, nothing. So not very much, not to talk too much at all. Look at the change. 1.5 point change in the Nifty. That's the close. 6 point change on the Nifty Bank, which is a 53,000 index. So that's how flat today was. The IT index, it started 0.8% higher. It ends 1.25% higher. So actually the move is come in the IT index, and maybe if you just look at the small cap index, which is also done well. It's outperformed what the other indices have done. 0.75% of the small cap index out there. I just want to put out 4 names which really were top of the leaderboard with the volumes. One is Paytm, if you can just look at it. Paytm has surged to about 730 today. That's a big move, 6%, and backed by volumes. BSC, no letting off. I mean, actually, it came off a little bit, but still, I think it had about 5% on it. And there was, of course, PB Fintech, which surged as well, back above the 1700 rupee levels. We were discussing this earlier. So throw in a K Fintech as well. That also surged quite a bit. These were, actually the top 4 leaders on the volume list there in terms of what was up. So that's essentially the list. Otherwise, vibrant screen with small caps, lots and lots of small caps doing very, very well.
Okay, in terms of the mid and small cap action, many of these chemical agro companies, Tata Chemicals, Naveen Fluorine, Coromandel International, they did well. Outside of BSC, even the other brokerage-related companies, so brokerages, exchanges, market intermediaries, so whether it's KFin, Angel One came off from the session highs but still closed up in the green. IFL Securities up and about in trade. Jayashree Tea was a big mover, so that ended up with a gain of about 14%. Orient Cement stood out for the kind of price and volume action. And on the way down, you had cuts coming through on names like Industars, Vodafone Idea, very close to being a single-digit stock now. Jubilant Food, too, cracked about 3.5%. But we're going to wrap up on closing bell. Don't go anywhere. On the other side is Markets Forward. Stay tuned.
Market ends flat amid volatility. The Nifty fails to hold the 25,800 level. Banks fall slightly in line with blue chips, but mid caps and small caps specifically outperform.
Market regulator SEBI introduces a new product to bridge the MF-PMS gap, eases rules for investment advisors, investor nominations and debt issuances, allows market trades using UPI, gives mutual funds a light option, but widens the definition of connected persons in insider trading, a concern for many.
The Reserve Bank of India has spotted deficiencies in adherence to prudential norms and in business practices of several gold loan providers. The regulator has given lenders 3 months to set things in order. Analysts see limited impact for large gold financiers. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we get you everything you need as you look forward to the next day, which is only the day after tomorrow. I'm Prashant. With me, my colleague Rima. Rima, hi.
Hi, what a smile when you said that, right? We'll see you straight on Thursday morning, but we're with you for the next 20 minutes with all the big news, key developments in Dalal Street, top corporate voices and the events to track ahead. But a very quiet, slow sort of a day, right, today?
I mean, 1.5 point change on the Nifty or something like that, right? By 3:30, adjusted maybe a little different, but nothing at all. And we were expecting a quiet day, holiday tomorrow. That, of course, playing on the minds of many. Also, we reported right in the morning that F&O sort of paper or final rules in terms of what SEBI wants to do to curb the amount of trading in the F&O segment may be out in the next, actually may be out very soon. So we'll see. Maybe that also kind of, kept people a little bit at the margin. But I think the holidays, of course, also at work. Overnight handover was nothing at all. Banks were quiet. The Nifty Bank was absolutely quiet as well. No change. Small cap index did better, 0.75%. The IT services index did even better with about 1.25% gain. Lots and lots of action in small caps. Long list, Paytm, PB Fintech, K Fintech, and so on and so forth. So there was no lack of volume-led gainers in the broader market, really. But a bit of a break as far as large cap action is concerned. Rima.
Well, the mid and small cap universe looked so much better. The small cap index ending with a gain of nearly about 3/4 of a percentage point higher. Advanced decline ratio well in favor of the stocks advancing. And lots of pockets which did very well today. So chemical, specialty chemicals, agrochemical names, whether it's Navin Fluorine, Tata Chemicals had a 4 to 5% rally. Coromandel International was higher in trade. Brokerage and exchange-related names, so BSC, IFL, MC, IFL Securities we're talking about, Angel One, these stocks too ended up higher. In terms of just big sector moves, the Nifty IT index ends with a gain of more than 1%. On the way down, you had PSUs, particularly oil and gas-related names. ONGC was under pressure. Brent crude prices have come down to levels of $70 per barrel, and Reliance Industries has been struggling for the last 2 days. In 2 days, Reliance Industries has lost nearly about 4%. So that was a bit of an overhang. But let's tell you what we have for you in store today on our show. We start with the top movers and shakers with Vivek. Stocks on our radar include Angel One as it revises the brokerage charges. Nalco soars on Kotak's bullish note. Gold financiers are under RBI's lens for irregularities in lending. We'll get you the details. And finally, we'll tell you the big events to watch out for tomorrow and for Thursday. Let's get to the first segment of the day then. Vivek is now joining in. He's at the big wall with the top movers and shakers of the day. Vivek.
Well, thank you so much for that. Another day where, the market spread was quite good. Now, quite a lot of stocks on the radar, individual stocks that made the big moves. First on our list has to be Tech Mahindra. Big TLSA upgrade coming in over there. Stock ended higher by over 3%. The second stock and the one that did quite well throughout the trading session was National Aluminium, that is Nalco. Almost 6.5% higher, a double upgrade coming in from Kotak from a sell to an add rating. Alumina supply tightness is what they're seeing, and the back of that, over 6.5% higher on very good volumes. The other stock on the radar was PB Fintech Policy Bazaar. Remember yesterday the management was on our channel and they went ahead and clarified as far as the capital allocation was concerned. Today, a very sharp recovery, almost 6.5% higher as far as PB Fintech was concerned. Like you mentioned, some of the other stocks related to the exchange. K Fintech was another name, in the broader end of the universe. The top gainer as far as the NSE 500 was concerned, over 11% today. But quite a few stocks on the downside as well. First on the radar, has to be, one from the gold financier pack. While all of them did see some selling pressure, Muthoot Finance ended low by almost 4%. In the last hour, you actually saw quite a bit of accelerated selling pressure over there. IndusInd Bank today
No fresh news flow over there, but ended as the top laggard as far as the Nifty 50 index was concerned. Jubilant Foodworks today seeing a bit of profit booking after the recent rally, almost 3% lower today. And Bharat Dynamics, select PSU defense names, especially continue to see selling pressure, the top laggard as far as the mid-cap index was concerned.
All right. Thanks very much for that, Vivek. Appreciate it. That's a quick snapshot view of what moved up and down. Jay Bala is with us of Catch the Chaos. Mayuresh Joshi of William O'Neill is also with us. Mayuresh, quick word on the big sector, which is, of course, IT services. And Rima will shed more light on this in just a bit. Is there anything to do here before earnings kick off, in your opinion? Do you think, much ado about nothing? Stocks are moving on a day-to-day basis. Yesterday, the index was down about 0.7, 0.8. Today, 1% plus higher. But just a lot of flipping and flopping around. But to what end?
Afternoon, Prashant. I think to a large extent, the market is of the belief that with the Fed rate cuts, the expectations in core segments that the IT sector caters to, BFSI, retail, manufacturing, and the consumer discretionary patterns which get determined in Q3 should start showing signs of revival. And therefore, I think the order flows and order wins should be far more consistent as we head into the second half in key niche areas like cloud, AI, generative AI. Europe is also recovering to a large extent, and a lot of management commentaries, specifically the mid-cap IT companies, are pointing to stable growth in terms of revenue numbers, stable growth in terms of margins as well. And pricing does not seem to be an issue at this juncture. Obviously, I think price action valuations for both mid-cap and large-cap IT companies are way ahead of the standard deviation of the past few years. However, I think a few mid-cap companies that consistently grow persistent and propose is something to be held on. Datamatics, Prashant, is one stock that we are keeping on our radar. Our belief is that if numbers come out in a far more consistent fashion, this stock can be one where earnings can actually show a positive surprise move on the upside.
Okay, Datamatics is one you're watching out for in the IT pack. Year to date, stock is down close to about 15%. And in the last 1 year, it's not done too much, but earnings is going to be crucial here. But let's talk about Angel One. Stock closed up with a gain of about 2.5%, but at the session high, Angel One was up more than 8%. This is after the brokerage charges for cash and equity transactions have been revised effective today. Hi, Vamakshi joins us for more. Vamakshi?
Well, absolutely, Rima. Angel One was in focus today after the revision for its brokerage charges came through, and this is in response to NSE as well as BSE revising the transaction charges structure from true to label, from slab-wise to true to label. Angel One is now going to charge around 20 rupees or 0.1% plus GST, whichever is lower per executed order. The minimum brokerage is expected to be at rupees 2. In fact, before this, there was no such brokerage on cash delivery transactions, and Angel One was in fact offering the lowest brokerage rates and lower other charges as compared to other discount brokers. Now, of course, on account of this shift, Angel One expected the revenues to be impacted by around 8%. The company had told us back in July, and this hike in the brokerage rate that has now come through could be a measure to mitigate that impact. So, positive move out there, but it is important to watch out for the kind of volumes that will now come through given the higher brokerages. So overall, given those factors, Angel One was surging in trade. It reached that high, but then cooled down towards the end of the trading session.
Thank you very much for that. The sector of the day was IT, the Nifty IT index, ending with a gain of more than 1%. So CLSA says, and they're negative on IT, they believe the stocks have run ahead of fundamentals. The key reason is the Nifty IT index is up 14% in Q2, in the June to September period, but there haven't been any kind of EPS upgrades to, back up this kind of stock price action. So expectations have run beyond fundamentals after the recent rally. They do not see a broad pickup in discretionary demand even after the US interest rate cuts or the cut in the US 10-year bond yields. There is still some macro uncertainty surrounding US elections and geopolitics. Morgan Stanley, just purely when it comes to Q2 numbers and what they expect, they're saying Q2 revenue growth will be similar or slightly better than Q1. In terms of growth rates, the BFS, banking financial sector recovery, continues even in the current quarter. Near-term management commentary remains cautious. They say there is a lot of pushback for when it comes to investors investing in Indian IT, because they say the stocks have already run up over the last 3 months. Investor positioning is overweight. Valuations are on the higher side. But according to Morgan Stanley, higher valuations could hold up in the early stages of a recovery cycle that we're currently in. So a bit of a bullish and bearish view coming in ahead of the earnings season. It starts next Thursday on 10th of October with TCS. Jay, anything in the first comment on the kind of IT rally that we've seen over the last 3 months, though it's paused now, and individual stocks, anything that you like?
No, actually, IT for me is an avoid, and I've been liking mid-cap IT more than the frontline IT for some time now. And the fact that IT index is coming off from 44,000, very near to 44,000, I've been projecting that as a resistance. And it's now cooling off from there and sort of meandering. And if the IT index were to close below 41,000, that'll be a big, big warning sign that it could be a significant top, a top that could take the markets first to 31,000, maybe even 23,000. So watch out for it. So IT index, along with TCS, is to be watched. We don't want to see TCS close below 4,100. That will be an important signal. But right now, it's just, struggling at a key resistance. But there is no trend reversal at the moment. Watch 41,000 on a closing basis as an important support.
All right, let's talk about metals now. Nalco was up 7% today. The question is it a one-day hit or is something turning? Kotak believes, well, things are turning. Nigel is here to tell us why. Nigel.
Well, that's right. Nalco was fueled up in today's trading session by Kotak that turned their stance on it. Earlier, they had a sell call. Now they have a buy rating. Well, and they've increased their target price from around 160 to around 235. They've tweaked a couple of estimates out there. So on the EBITDA front, they've reworked it upwards for the next few years. And on the multiple front, they've increased it from around 5.5 times to around 7 times. And 4 big factors is what they have highlighted: pricing, cost, and volume growth. On pricing, they have upgraded their estimates both for alumina as well as aluminium for the coming years. They've also highlighted the supply-demand dynamics that are playing out in the alumina space. And that's why, because in a tight alumina market, prices will remain strong out there. So that's on pricing. On the cost front, they're getting a lot of their coal from captive sources. And because of that, in fact, the cost will come down lower. In the last year, we saw some impact. This year, we'll see. And going ahead as well, the cost of coal will fall down because they're getting their coal from captive sources. And point number 3 is the street has always been concerned. Where's the volume growth going to come from? They've announced this expansion of the alumina refinery, but now Kotak has started penciling those numbers in. They're expecting it to start delivering volumes in the second half of FY27. So Kotak turning their stance, the bulls turning to Nalco in today's session. Back to you guys.
All right, Nigel, thank you very much for that. In metals, Jay, anything you like?
Last week we spoke about Hindalco, liking Hindalco, and it's gone to fresh 52-week highs. Nalco has got quite a good potential to challenge the all-time high at about 280 and change. And the short-term momentum is extremely strong. And I think at least there is a sequence of one more higher low to come through. So whether or not that takes it to 280 and change remains to be seen. But at least it's got one more high to come through. The nearest resistance is about 234 and the next resistance comes at about 280.
Okay, all right. I want to get your thoughts on oil marketing companies as well, but just in a bit, we're talking about the other commodity, which is gold, but not so much about what gold is doing. The RBI spotted deficiencies in adherence to prudential norms and in business practices of several gold loan providers. Abhishek is here. Manappuram, Muthoot both fell today. Abhishek, tell us more.
Well, to begin with, the RBI has found deficiencies in selected supervised entities. Those are the gold financiers especially. So comprehensive review has been advised for all. On review and on-site examination of selected, supervisory entities, RBI has found that there is, prudential guidelines and practices which are being missed by lenders. So RBI has pointed out several irregular practices that are being, held by these entities. Some of them are shortcomings in use of third-party sourcing and appraisal of loans, valuation of gold without the presence of customer, inadequate due diligence and lack of end-use monitoring with respect to where the money is being used by the customer, lack of transparency during auctioning of gold ornaments and jewelry on default of customer. There is also weakness in monitoring the LTV, that is loan to value ratio, which is typically in the range of 65 to 75% for most of these lenders, and incorrect application of risk weights, etc. details that have been given by lenders to RBI. So Citi has written a note wherein they have mentioned the gold loan share as a proportionate of the total overall book size of the firm. Amongst banks, Federal Bank has about 12.2%, Bank of Baroda at about 4.6%, RBL Bank and SBI about 3.5 to 3.8%. With respect to NBFCs, Muthoot Finance has the highest share, 82.5% of their loans form gold loans, Manappuram about 52.5%, IFL Finance more than 21% and SBFC around 16%. Back to you.
Thank you very much for that. And in that, it's only IFL Finance stock price which closed up in the green with a gain of nearly 1%. Remember, after a 6-month period when RBI had banned IFL Finance from dealing with gold loans, it was lifted recently. So the expectation is that perhaps it's now all clear. They've gone through all their processes. It's been vetted by RBI, and therefore they can go ahead and things should be fine compared to the rest of the pack. But Mayuresh, in these gold financiers, banks which are involved in this particular sector, it's a fast-growing space. Which one do you like?
Yeah, so I think Federal Bank has done a decent job. Obviously, I think as a percentage of gold loans, it's significantly higher at 12%, as Abhishek pointed out, compared to the rest of the pack. But again, I think the expectation that are getting largely laid out in terms of advances growth, the management is quite sanguine in terms of a decent advances growth coming through. The biggest advantage, Rima, that Federal Bank gets when the entire system is grappling with the deposit growth is the remittances, which form a decent chunk in terms of their inflows at a very, very low and a marginal cost. So to that extent, maybe a sentimental impact on how the bank might behave with the RBI norms or directives being pushed through. But overall, I think from an earnings perspective and EPS-RS rating as we see it at Markets with India, I think the bank is poised for decent earnings growth over the next few years.
Okay. Thank you very much, Mayuresh and Jeff, for joining in. We need to slip into a very short break. On the other side, we'll come back and tell you all about the big events to watch.
Donald Trump again, and I think he should debate again.
Welcome back. You're with us here on Markets Forward. Let's get you a quick sampling of the views that we got through the course of the day on the channel. We'll start with the auto space. Mahindra and Mahindra's farm equipment and tractor business head was with us. They told us there is a strong momentum in the tractor market as sales, even in the inauspicious Shraddh period, are up 10 to 15% as compared to the Shraddh period last year. The company is maintaining volume growth guidance of 5%, which they've held on to, although they've said there's upside risk, but they've refused to change it upwards, at least today. On exports, they're a bit more cautious. They're saying, well, exports over the next 3 to 4 months perhaps would be in the slow lane.
Bajaj Auto expects a 6 to 8% underlying growth for motorcycles. They also expect to carry the EV momentum forward in the month of October. The management told CNBC-TV18 that Nigeria and other export markets are seeing a steady improvement and they expect about a 10% growth in October. They also added that their green energy portfolio, which is basically EV plus CNG, is now 40% of their domestic revenue.
Well, from autos to real estate, we have the management of Max Estates join us as well. The company told us that they are expecting total pre-sales in FY25, that is this financial year, of between 5,500 to 5,600 crore rupees. Remember, this number in FY24 was about 1,800 crores, so that's a big jump. Annuity portfolio on the commercial assets in the next 3 to 5 years should be between 450 to 500 crore rupees. This compares to the figure of about 125 crores last year. They also added that they're developing about 10 million square feet across commercial and residential portfolio, which is yet to be launched, but which is under construction. Okay, well, some more views. This is a CNBC-TV18 exclusive. Managing Director and CEO of Kotak Mahindra Bank, Ashok Vaswani, said that they were engaging with the RBI almost every week in an effort to lift restrictions. They reiterated that slowing deposit rates are not a cause for worry. Mr. Vaswani also added that the bank aimed to take the business to the leadership position in the next 5 years. Listen in.
India has the best digital public infrastructure compared to any other place in the world. I've worked in every other place in the world. I've never seen anything like this, right? Now, obviously, that has led to the demand for digital services having gone up dramatically. And it's about the bank systems having to keep up pace with that. So we've been spending the last couple of months really focused on how we grow and make our systems foolproof. So we've taken this as an opportunity to really say how we'll really leapfrog and make our systems really resilient and relevant for the days to come. So I think we've made very, very good progress. Obviously, we've been in continuous touch with the RBI, sometimes even every week, updating them, getting their guidance, making sure we're on the right path. And I think we've made tremendous amounts of progress. Kotak is a great brand. Kotak is a great platform. There's no reason why Kotak shouldn't be within the top 3 private sector banks. And I'm talking not only of the bank, I'm talking about our subs. Where our subs are within the top 5, why we can't be within the top 3, or just full stop, be within the top 5, right? Growth and transforming for scale is exactly what this mandate is about.
That's the aspiration and ambition laid out. But before we wrap this show, we'll bring you some of the key market events to watch out for. Vamakshi joins in. Vamakshi.
Well, Reema, we're all excited. It's a holiday tomorrow, but there's lots to watch out on the global front. As far as the US markets are concerned, we will be watching out for the US crude oil inventories. On October 3rd, we will be keeping an eye out on US initial jobless claims as well as the services PMI data. But apart from that, lots of stocks to watch out for as well. Lots of board meetings scheduled on October 3rd. JTL Industries will be considering a stock split as well as bonus issue. Bajaj Steel will be considering a bonus issue. Spandana Spurti, the board will be meeting in order to consider issuance of NCDs on private placement basis. Reflex Industries will be considering fundraising plans, and Reliance Power will also be in focus, and that is because they will be considering a stake sale for raising of funds. Lastly, keep an eye out on Google's event, that is Google for India 2024, that is taking place on October 3rd.
All right, Vamakshi, thank you very much for that. So that's essentially what to watch out for as we come back day after tomorrow. Enjoy your holiday. It's a wrap on this edition of Markets Forward. But news and updates will continue here after a quick commercial break. Stay with us.
People have a right to hear us discuss the issues. And as you say here in Las Vegas, I'm all in. I'm all in. We know this will be a tight race until the very end. And let's level set. We are the underdog. We are the underdog, and we have some hard work ahead. But here's the thing. We like hard work. Hard work is good work. Hard work is good work. And earlier this year, we had a chance to pass the toughest bipartisan border security bill in decades. And Donald Trump tanked the bill because he thought that that bill, if passed, would have hurt him and he'd prefer to run on a problem instead of fixing a problem. That's not the kind of president we want.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. A roller coaster ride on Dalal Street. The Sensex and the Nifty end a volatile session with marginal losses. Mid caps outperformed, small caps fare even better. Israeli soldiers enter southern Lebanon hours after its army announced a limited ground operation against Hezbollah. Israel warns Lebanese citizens against traveling in southern Lebanon. Hezbollah says it has targeted Israeli troops across the border. Explosions are heard in Tel Aviv.
No reason why Kotak shouldn't be within the top 3 private sector banks. And I'm talking not only of the bank, I'm talking about our subs. Where our subs are within the top 5.
Kotak Mahindra Bank CEO Ashok Vaswani is aiming to be among the top 3 private lenders by 2030. He sets out a mandate of transforming for scale, says bank has used RBI restrictions as an opportunity to leapfrog and make systems resilient. That's an exclusive. The Reserve Bank warns gold loan financiers of regulatory action after spotting several irregular practices. The regulator gives lenders 3 months to set things in order. Bajaj Auto and TVS Motor report strong sales growth in September. Bajaj closes the gap with Ola Electric in the electric scooter race. Car sales throw up a mixed bag. Tata Motors reports a 9% decline. M&M's SUV sales up 24%. 40 constituencies in Jammu and Kashmir vote in the final phase of the assembly elections. 44% voter turnout. As of 1 p.m., 415 candidates are in the fray and results will be declared on the 8th of October. The Supreme Court reserves its judgment on the pleas challenging the weaponization of bulldozer demolition by state governments. Hints at laying down guidelines that will be applicable to all communities across India. As always, let's start with the market action. Wild swings on Dalal Street today as the Sensex and the Nifty finally closed a volatile session, but with marginal losses. The Sensex was down just about 30 points. The Nifty absolutely flat, just about in the red. The mid-cap index closed about 200 points higher and was a 150-point gain there as far as the Nifty small cap was concerned. Clearly, that outperformance was visible today. Prashant is standing by now to wrap up the market action for us. Volatile, Prashant, but the flat close.
It was a quiet handover from Wall Street, and it was expected to be a quiet session, largely because we've got a midweek holiday, the 2nd of October holiday tomorrow. So things started on a very quiet note, and they ended on a very quiet note as well. A broader market, not quiet at all, very vibrant screen once again. But I'll start with the basic indices. The Nifty didn't do very much at all. The Bank Nifty, again, very quiet. The small cap index did much better, and that showed up in broader markets. The index was up about 0.75% more, and mid caps also outperformed the large caps today. Large cap Nifty, I'll start with what was up. Take Mahindra was the top gainer. Mahindra itself did very well. Britannia, Adani Enterprises, Infosys and Kotak Mahindra Bank were some of the other names which did well. Actually, the IT services index was the top performing sector today. IndusInd Bank, ONGC and Bajaj Auto were the pullbacks that you basically had today. In the broader market, big volume-led gains once again. Market advanced decline, I mean, it was positively skewed, but not as big as what the volume-led gainers list really showed. So Nalco was a big mover. There was Paytm, which is now 700 plus easy. BSE was a big mover today. K Fintech, PB Fintech. There was Polycap, which is basically another 5%. Big moves in the last 5 days. Saregama reversed from the morning. Electra Green Tech, Kaplan Point, Wellspun Living, 5-star. There was VMart, Orient Cements, EPAC Durables and Sign DLM, just to name a few of the big volume-led gains today. What was under pressure? Sterling Solar Wilson was down another 3% today. Muthoot and Manappuram, the gold financiers after the RBI advisory. And there was a Jubilant Foodworks, which lost a little bit at the margin as well. So quiet overall, but bubbling beneath the surface with small caps more than anything else doing bulk of the heavy lifting. Back to you.
Right, Prashant, many thanks for joining us. That was the market action for you. But from stocks, let's head to commodities where geopolitical tensions continue to weigh on sentiment. Brent crude prices, in fact, now dropping below $70 a barrel after Israel launched a ground invasion of Lebanon. The rising tensions in the region could impact supply. Crude oil prices are down 17% in the last 3 months. Meanwhile, gold prices remain steady around record levels. In fact, gold prices have gained 13% since July, clocking the best quarterly gain in over 3 years. The big international story that we continue to track this evening: Israel has invaded Lebanon, significantly ramping up its military offensive against Hezbollah. The Netanyahu government has called it a limited military operation, saying that it will do whatever it takes to avoid the 7th October-style attacks. Reports suggest that Israeli forces fired flares into the sky amidst heavy shelling as they were entering the region. Soldiers and military vehicles were seen assembling around the Israel-Lebanon border several hours before the incursions began. The Israeli military launched more airstrikes targeting southern Beirut as well. Several neighborhoods were severely damaged in the bombing. The Israeli army had ordered people to evacuate prior to the attack. According to Lebanese health ministry, at least 95 people have been killed in the last 24 hours. Lebanon's prime minister has urged the UN to provide aid for the $1 million for the 1 million who were displaced by the attack. Israel has claimed that Houthis, the Yemen-based militant group, targeted the Israeli army bases in Tel Aviv. Israel claimed to have retaliated with drone strikes. Explosions were heard around the region. However, there have been no reports of casualties or damages so far.
Along Israel's northern border, against the threat Hezbollah poses to civilians in northern Israel. These localized ground raids will target Hezbollah strongholds that threaten Israeli towns, kibbutzim, and communities along our border.
Meanwhile, Israel continues its military operations in Gaza. The IDF has struck a refugee camp in central Gaza, killing at least 13 people, 7 of them children. Israeli forces also carried out military raids in Palestine's West Bank. Reports say that a 25-year-old man was shot and arrests were carried out in the region. And here's the latest in the Russia-Ukraine conflict. Ukraine has said that at least 7 people were killed after Russian forces struck a marketplace in Kherson, located in the country's eastern region. Russia has claimed that it has captured a village in the eastern front line in what comes as a sign that Kremlin will ramp up its war efforts. Russia stated it will increase its defense spending by 25% to 13.5 trillion rubles in 2025. This will be the highest defense spending by Russia to date. From geopolitics to central banks, Federal Reserve Chairman Jerome Powell has hinted at more rate cuts, adding that the Fed is not in a hurry. Addressing the media, Powell said that the central bank plans to proceed cautiously, adding that the Fed would consider 2 more rate cuts this year if economic conditions meet expectations, while also adding that the Fed is not on any preset course.
We will do what it takes in terms of the speed with which we move. But if you look at where we were 2 weeks ago, coming up on 3 weeks ago, I guess, when we wrote down our SEPs and made our decision, it was a situation where people were thinking, the bulk of the committee was at 75 or 100 basis points, and the votes were on 50, and that would mean 2 more cuts. It wouldn't mean more 50s. Now, of course, that'll depend on the data, but ultimately that's what the baseline is. If the economy performs as expected, then that would mean 2 more cuts this year, a total of 50 more.
Well, that's the US Fed chair. Let's talk about the Reserve Bank back home. Former central bank governor C. Rangarajan believes the RBI could be cautious and cut rates by 25 basis points instead of a big 50 basis point cut. Speaking with my colleague Parikshit, Rangarajan said inflation is on the decline and the Reserve Bank has room to ease rates.
2 6-week periods during which the inflation rate has fallen. That can give a lead to cut the repo rate. Choice is between 25 basis points and 50 basis points. If you want to be cautious, we can cut 25 and store something for the next time. Or we can take front-loaded cut of deeper thing.
Well, that's the former RBI Governor C. Rangarajan. The big newsmaker of the day, Kotak Mahindra Bank's new CEO Ashok Vaswani says that he sees no reason why the bank shouldn't be among India's top 3 private banks. In an exclusive conversation with me, Vaswani said the bank should be in the number 3 position, if not ahead, by 2030. He called it their rightful position when asked about whether they were potentially planning to acquire IDBI Bank. Vaswani kept his cards close to his chest. He, however, said that they have never shied away from M&A and not shying away from it even today. That's not all. Vaswani also told me that the bank has used the RBI's restriction as an opportunity to try and leapfrog and make systems more resilient.
Kotak is a great brand. Kotak is a great platform. There's no reason why Kotak shouldn't be within the top 3 private sector banks. And I'm talking not only of the bank, I'm talking about our subs. Where our subs are within the top 5, why we can't be within the top 3, or just full stop, be within the top 5. Right? Growth and transforming for scale is exactly what this mandate is about. It's not unusual for deposits to drop off in the first quarter because you normally end March on a pretty high. Frankly, I've worked in the US, I've worked in the UK, and deposits have pretty much stayed flat as a percentage of GDP and continued to grow all over the years, right? And there, obviously the participation in the capital markets is much, much, much higher than in India. So this notion that suddenly, there's going to be a complete dearth of deposits and everybody's going to invest in the capital markets, I think it's overdone. Right? And I think that, look, as long as there's an economy, as long as there's expenditure, as long as there's businesses, deposits will continue to kind of grow. Is the customer becoming more sophisticated and savvy? Absolutely. And that's bound to happen, right? But I don't see this situation as suddenly deposits are going to suddenly disappear. We are not shying away from M&A even today. We look at every single opportunity that comes along. And as and when the opportunity comes along and presents ourselves, we will evaluate it.
But does it still make strategic sense, IDBI Bank specifically?
I don't think it's hot and cooking right now. So I think when the time comes and, there's talk about doing something, we will definitely look at it and evaluate.
The transaction is still it's quite literally, from all indications from the government, it's kind of moving forward at this point in time. So does Kotak intend to take it forward or not?
When the government tells us and the RBI tells us, we'll definitely have a look at it.
And you can watch that exclusive interview with Kotak Mahindra Bank's MD and CEO Ashok Vaswani. Tune in at 7:30 p.m. and 9:30 p.m. Now, the Reserve Bank has flagged irregularities in the processing of loans against gold jewellery by several banks and NBFCs. The regulator has given lenders 3 months to adhere to the guidelines. The RBI said that non-compliance could attract supervisory action. Abhishek is standing by with more details. Abhishek, what irregularities has the central bank found?
Well, it's a surprise factor that, a secured product like gold financing has come under RBI radar with reference to deficiencies that have been identified in select supervised entities or players that are there in the gold financing space. So comprehensive review has been advised for all, which is a period of 3 months which has been given to them. On a review and on-site examination of select supervisory entities, adherence of prudential guidelines as well as practices with regard to loans against jewelry as well as gold ornaments, RBI has pointed out to several irregular practices. Some of them are shortcomings in the use of third parties for sourcing and appraisal of loans. Valuation of loans or gold is being done without the presence of customer. Inadequate due diligence and lack of end use of monitoring of the gold loans that have been handed out to customers. Inadequate, also transparency during auctioning of gold ornaments and jewelry on default of customer is an area of issue. Weakness in monitoring the LTV. Now, LTV is loan to value ratio, which is typically in the range of 65% to 75%. There also weaknesses have been seen, and incorrect application of risk weights, etc. have been found by RBI. So, RBI has given these players 3 months to comply with the norms and get their act in place. Now, Citi has written a note wherein they have mentioned that gold loan share of lenders are in terms of banks, Federal Bank 12.2%, Bank of Baroda 4.6%, RBL and SBI at around 3.5 to 3.8%. In terms of NBFCs, Muthoot Finance has a large share, 82.5% of the book is in gold financing, Manappuram about 52.6%, IIFL Finance about 21.2%, and SBFC amongst the top players being in NBFC space amongst the gold financers. Back to you.
Abhishek, many thanks for joining us. Oil marketing companies have hiked the price of commercial LPG cylinders. Starting today, the price of a 19 kg cylinder has been increased by over 48 rupees. The cost of a 5 kg variant has been hiked by 12 rupees. However, there has been no change in the domestic LPG cylinder rates. Shares of SpiceJet and Indigo up in early trade after jet fuel prices were cut for the second straight month in October. Prices of aviation turbine fuel were slashed by 6%, which roughly amounts to 6,000 rupees a kilolitre. Prices in Delhi were reduced to 87,597 rupees kilolitre, while prices in Mumbai were reduced to 81,866 per kilolitre. Here's the latest from the auto sector, where two-wheeler makers Bajaj Auto and TVS Motors have seen sales accelerate in September to beat expectations. The month has also seen Bajaj close the gap with Ola Electric in the EV race. However, car sales a mixed bag, with Tata Motors posting a 9% decline and M&M's SUV sales up 24%. Vinny is here with more. Vinny.
So yes, among the four-wheelers, let's start with that since Tata Motors just came out with its numbers. So talking about M&M, the auto segment, that did quite well, above estimates. They managed to see a growth also of 16% on a year-on-year basis, month-on-month basis. Also, they managed to see a good growth. We also had Ashok Leyland as well as Eicher VECV, which reported their September sales numbers. They were in line with what the street was expecting. So Ashok Leyland, bit of a decline in terms of on a year-on-year basis, 5% decline, but month-on-month basis, they've managed to see a strong growth in terms of momentum. They've seen a 29% growth on a month-on-month basis, and VECV on a month-on-month basis also has seen a double-digit growth. So surely strong momentum seems to be picking up in all these companies. But Tata Motors, that's coming at a bit of a miss that we're seeing this time around, a large miss in terms of what we had versus the estimates. So what Tata Motors reported is 69,694 units total sales is what I'm talking about, and our expectations was that somewhere around 80,000. Now the management also came in with a commentary saying that slow consumer demand as well as seasonal factors was something that impacted the sales of the company going in this month, but going forward festive season is there, so they're expecting a pickup in demand. Let's move on, talk about the two-wheeler names. Bajaj Auto as well as TVS Motors, they managed to report good numbers, both above the estimates. Two-wheeler sales, mainly good monsoon is something that is supporting the sales, as well as festive demand is expected to see a bit of a pickup. We spoke to the management of Bajaj Auto earlier in the morning. They also said that they expect this growth to continue even in the month of October, as well as their EV side or the green portfolio that now accounts to 40% of their domestic revenue. So that's an interesting factor coming in there. TVS Motors also similar strong growth trends both on a year-on-year basis as well as on a month-on-month basis. Lastly, the tractor side, farm equipment. So M&M tractors, that also managed to see an inline number this time in September.
lower, while Escorts also managed to see a decent number. The trend coming in from both these companies is that the second half of FY25 for tractors and farm equipment is expected to be better.
Winnie, many thanks. Up next, the Supreme Court reserves its judgment on pleas challenging the weaponization of bulldozer demolitions by state governments. That and more when we get back.
La difesa sempre deve essere proporzionata all'attacco. Quando c'è qualcosa sproporzionato si fa vedere una tendenza dominatrice che va oltre la moralità. Un paese che con le forze fa queste cose, qualsiasi paese parlo, che fa queste cose di un modo così superlativo, sono azioni immorali. Anche nella guerra c'è una moralità da custodire. La guerra è immorale, ma le regole di guerra indicano qualche moralità.
The Supreme Court has reserved the judgment on pleas challenging the weaponization of bulldozer demolition by state governments. The apex court had hinted at laying down guidelines that will be applicable to all communities across India. Ashmit is standing by with more. Ashmit, take us to the key observations made by the Supreme Court, and when can we expect now further action?
Well, after nearly a 2-hour-long hearing, the Apex Court reserving its judgment, clarifying that it will be issuing guidelines that will be applicable across the country to across all states as well as all religious communities. The Apex Court was particular in pointing that out. All of this on the back of various petitions being filed before the Apex Court, pointing out cases of quote-unquote bulldozer justice being followed in states such as UP, Rajasthan, Madhya Pradesh. And these are some of the concerns that were highlighted by the petitioners, that there is a weaponization of municipal laws, that demolitions are being done in a way so as to target people who have been accused of crimes such as rioting, that there is no remedy, there is no legal remedy made available to these persons, and that this is being even brandished by politicians as a case of swift justice. Now, the Apex Court made various observations. Number one, the Supreme Court observed that it is secular in nature. The guidelines that will be issued will be applicable to all religious communities, and also pointing out that demolitions should not be used in a way to target people who have been accused of a crime, going in to say that demolition should only be done in cases where there is, in fact, a violation of municipal laws. And even in that situation, there needs to be due process followed, which is issuance of, number one, a notice, and then subsequently making a suggestion that even in such cases, after the demolition order has been passed, a 10 to 15-day window is provided to the accused. Now, what's important here is that the Solicitor General defending the states of UP, Rajasthan, as well as MP, sought to defend, saying that it should not be colored, this demolition should not be colored as a religiously motivated exercise, but rather the Apex Court should be careful that the guidelines should not in any way take away powers of the municipal board, of the municipal administrative bodies, and also importantly, should not take away, should not give undue benefits to what the Solicitor General called serial encroachers. So that's the word of caution coming in from the Solicitor General. All eyes now on the Apex Court as it gets set to deliver its judgment.
All right, Ashmit, appreciate you joining us. Well, it is the final phase of the assembly elections in Jammu and Kashmir. 40 constituencies are voting across the Union Territory amidst protests over the killing of Hezbollah's leader by Israel. 415 candidates in the fray, and results will be declared on the 8th of October. Ishan Wani reports from Baramulla.
Brisk voting is being witnessed in the third and last phase of J&K Assembly elections, which is witnessing a tight contest between National Conference and Congress combined with the BJP and other political parties. Many of them are independents and several of them are also backed by Jamaat-e-Islami. Now, Jamaat-e-Islami is also fighting these elections and they are trying to push in the independents as well. Then you have the factor of Engineer Rashid, who has been given an anticipatory bail and is trying to ensure that his candidates also win on these particular seats, because this has been one of those places from where Engineer Rashid became an MP from, and he received an overwhelming vote and he was able to defeat Umar Abdullah of the National Conference. But these elections are different given the fact that after 10 years these polls are happening and people want their representation and their words to be heard and their representation from the local MLAs to be done. And that's why today we are witnessing brisk polling happening in parts of Kashmir Valley. In Jammu, the BJP is trying to retain those seats which they have won year after year, precisely after an Hindutva wave came in and they were able to upset the Congress on those seats and retain them for several years now. It will be an interesting and tight contest because on the 8th of October there will be results coming out, who will be the kingmaker and who will be in a position to form any government. Whether anyone will have numbers, the time will tell, but a tough competition is happening between political parties in the valley, but people are trying to vote on several issues. What we have seen on the ground, people want jobs, development, statehood to be restored, and there are other promises also which political parties have made, where the people are now choosing clearly those political parties who they believe can do better work for them.
Well, that is the latest there from Jammu and Kashmir, the final phase of voting. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a minute with more.
This takes me back to a conversation that I remember having with Mr. Murthy about starting Infosys. And I said, like 7 of you, of course, he was the first among equals. But I said, how did you get a decision made? Because, and especially we are known as argumentative Indians for a particular reason. What was that like? And he told me, he said, look, it was very simple. We had a sort of unwritten rule that in God we trust, everybody else brings data to the table. What was it like for you?
So we started with a smaller group. As Pramath was saying, Sanjeev, Pramath, myself, only a couple of others. It was a small group. And I think we spent a lot of time So even as a precursor, we used to meet one Saturday a month at my old office, and we would have conversations. And this happened for a couple of years. So I think that helps with alignment. And then ultimately we said, we want to build a liberal arts and sciences, an interdisciplinary university. So everybody was aligned. This was going to be
And some people did get off the ship.
Yeah, because some people wanted something else. So we were very clear that Indian higher ed had become too specialized, that we needed a new institution that really provided breadth and depth, that was interdisciplinary and holistic, and that gave students choice. So we agreed on the principles. We agreed on some of the disciplines we would cover and what we wouldn't cover. And we also said that we have to hire the best in the world to come, and the pedagogy has to be exciting. We'll primarily be undergraduate to start with.
Right.
And then over time, we'll build out a very strong PhD program. We won't have a very big master's program. So I think we spent a lot of time, so we were aligned on what the broader purpose is, the vision, broadly what the strategy is. And then we were able to bring in many other people. So we also had a governance model where we said, even if you put in a lot of money, you still have one vote. And you operate through...
How did that conversation go?
Well, I think a lot of it depends on, Sanjeev and I were initially the two largest contributors. And we'd said, we are going to do this. So it just became the norm. And we just went to everybody. When actually there was someone who wanted to put a lot of money in, wanted more than one vote, we turned that person down. So it's just a principle you stick to as you build it out. But we never realized when we started that we could end up becoming the largest, we think, collective philanthropy project in India.
Right.
We've raised about 3,500 crores, Shireen, in pure philanthropic money. We've had people like HDFC Group to Axis Bank to the Bajaj Group support Ashoka at scale. Individuals, R.K. Damani, Mr. Jhunjhunwala, Rakesh Jhunjhunwala, many others have contributed. 200 founders have contributed towards building this institution because they believe it's an important project for the country, that India needs a new institution. That's a new form of education for India.
What is the Ashoka differentiator?
Where when we first dreamt of Ashoka, we had no idea that students from 40 countries would be applying to our university. Now our aspiration is, why shouldn't it be one of the best in the world?
We are the best option for anyone wanting to do high quality scholarly academic work in India.
You firmly believed in what...
Hello and welcome. You're watching Commodity Champions and I'm Manisha Gupta. Well, gold's bull run seems far from catching its breath this year. This year alone, the gold prices have touched new highs 37 times. This quarter was the best quarter for the yellow metal in last 8 years. Prices surged from an $1,800 an ounce levels in October 2023 to $2,685 per ounce in the month of September. Well, the Fed rate cut followed by China's stimulus blitz has further made the metal one of the most favorable investment options for investors. But how far will this bull run go and what can jewelers anticipate in this hot market? And as a buyer or a consumer, what should you be doing? To get all of those answers, we have now with us Mr. Suvankar Sen. He's Managing Director and CEO at Senco Gold and Diamonds. Mr. Sen, hi, thank you so much for joining us. And first things first, everybody really seems to be discussing on where the gold prices are headed from here. So at Senco Gold, what are the calculations that you have been making on where the gold prices could be in this year and the next?
So Manisha, if you know, a month ago, when gold prices were about $2,500 per troy ounce, we were assuming that yes, the upside that we could see from that level, because at 2,500 there was a strong base that was getting created. So we were expecting that it could be a 10% upside. So we've already covered almost $150 from those 2,500 levels, and I see that this year, it's already October has started, so we are left with 3 months in a calendar year and maybe 1 or 2 months more. Now, let us analyze that. What is it that is in the pipeline? We are having the US elections. We could see that the Israel-Hamas war has now extended to Lebanon as well, which builds in more uncertainty. So we do not, we can expect a 27.50. It won't be very surprising if that happens. But at the same time, from a retailer perspective and a consumer perspective, what we have seen in the month of September after the prices have gone up, the way in the month of August, we could see a very robust demand, and then there were consumers who were extremely, extremely positive towards buying. But post the Fed rates and the movement of the gold price upwards, we could see that the demand going down. And last 2 weeks of September was considerably slower in terms of retail. Plus for jewelry, the Pitsi Paksh had started as well. So we are positive about the festive season. Now, 2 more days left. But yes, last 2 weeks were slow. That's how it was.
Sure. So Subankar, how would you look at the festival season and the Diwali and the New Year's, etc. then? Even at these higher prices, would you say that the demand will come back? I mean, we do know that there are more weddings this time around. The Kate report suggests 48 lakh weddings within the month of November and December, and 15% of every wedding perhaps is jewelry buying. So with those kind of calculations, would you say that at these higher prices also the demand will come back?
So there are two kinds of demand. Those who have weddings or have to buy something for these auspicious occasions, no matter what the prices are, right? There will be some purchase happening, and the impact will be in terms of volume. Might be that because of the gold prices shooting up or being on upward trend, a consumer will not be able to buy that much quantity of gold or for the wedding as well. But they have a budget fixed. They know that they need to buy something, and the confidence that the consumer have been getting on the commodity, on the gold or the product, is that yes, it's on an upward trend. So there's no harm in buying for the future. So there are two kinds of sentiments, but yes, volume will take a hit.
Mr. Sen, looking at your portfolio right now, whether it is about gold and diamond and studded and lab-growns, etc., how have you categorized it all in sense of percentage?
So see, our percentage has been about 85-86% gold, about 10 to 11% diamonds, and remaining 3-4% was platinum and silver. In the overall analysis, we could see that there has been a very good demand for silver as well, right? In spite of the silver prices on an upward trend, and diamond has been a kind of a mixed response. We haven't seen too much of growth in diamonds, but yes, with the festive season and the weddings coming in, the demand that was not there in the first half of the year will come back. So yes, weddings is going to be a very big factor, plus the festive. See, the sentiment towards the commodity, gold or diamonds or silver, is not as bad. It's actually a very positive thing. It's just the ability of the buyer to buy as much quantity as the buyer would like to buy is the one in question. So that's how we would like to look at it.
Mr. Sen, when you look at jewelers as an industry, a lot of consumers and investors do believe that you sell is great, your numbers are great. Even if you don't sell, then the gold that is lying with you in sense of inventory, because that valuation is increasing, as a jeweler, you don't really get to lose on either sides. How would you react to that?
So see, for a lot of players like us or many more organized players, they have hedging system in place. So yes, the percentage of hedging could change from jeweler to jeweler. Someone could be 100% hedged, someone could be 80% hedged, someone could be 60% hedged, depending on the risk appetite and the approach towards business. So, to the extent of the hedging that is done, yes, the gold prices do go up, but at the same time, for the quantities that are hedged, you would not really enjoy the benefit of the gold price rise. But at the same time, yes, the assets that you are holding, the inherent value of the asset goes up. So we have seen that, even during the COVID period, while we should not go back to those times 3 years back, but, when everything was looking very somber, but the gold prices kept moving up. And that was one of the reasons why the jewelry sector could come out of it very easily, because your asset that you're holding is appreciating. That's how I think one has to look at it. And yes, those who are not hedged, they will enjoy the benefit of the price more than those who are hedged.
All right. Well, that calculation is pretty clear, isn't it? Also, Mr. Sen, you are foraying into various other things as well, lab-growns being one part of it. And how are you looking at the new businesses now, and what is the thought behind that?
So see, it's all with the you see around the world, in terms of increase in prices, and how do we continue to try to create jewelry that our consumers can continue buying. And when the sector has these new, I would say, items or products that are getting introduced, it is our responsibility to try out and launch. So with Sensex brand of ours, which is focusing into lab-grown diamond jewelry, and we are also foraying into leather bags. Yeah, they are very initial stages. It's just been 5-6 months. We've started with 4 stores, but the good news, one of it is, Manisha, that last week, me and my fellow director, my wife, Joyita ma'am, we went to Milan, and we on the occasion of the Milan Fashion Week, we launched the brand and showcased the jewelry and the bags, trying to bring that international, I would say, designing and international exposure to the consumers of India. So that's how we are trying, and let's see that we are in the business of jewelry for sure, but ultimately we are in the business of luxury, whichever price range it could be. So that's what we have to work towards.
Absolutely. Mr. Sen, one final question. So how are the next 2 quarters now looking to you? Because this quarter is going to be all about India, festivals, weddings, Diwali, etc. And then would be about Christmas and New Year's and Valentine, more so in sense of the global perspective there. So next 2 quarters, how are you calculating, planning, putting your designs, your launches, etc.?
So the next quarter is fully focused on Diwali, Dhanteras, and weddings, because from mid of November, from early November, to be more specific, the wedding season will start till the early December. So that's going to be a good season for us. We are very positive. And this time in October, as we begin the quarter, we'll have the festive. Already, the consumers are positive. Advanced bookings are coming at these rates as well, which is a very good sign. And once we move on, December is actually not a really focused quarter. Christmas and New Year's, people are more in a festive mood, holiday mood. So it's the first 2 months which will be very important. And then we move on to the last quarter, Jan, Feb, March, which again is driven a lot by weddings. And yes, with Valentine's Day, and there will be a high possibility of higher diamond jewelry sales in that particular quarter. So we are very positive. Usually, always, it's the second half of the year which is better than first half of the year. So the first half of the year this time has been decent with a lot of challenges, price rise, but I think hopefully the second half will be better.
All right, Mr. Sen, thank you so much for joining us, and we wish you the best on sense of sales there, and congratulations again, of course, on those new launches that you as a luxury brand also seem to be bringing out now. With that, it's time for a short break, but don't go anywhere. We will throw the spotlight on India's sugar and ethanol industry on this other side.
An institute that's also inclusive.
We are perceived as being elite. I think that's largely because we do get very good students, and some of them from the very best schools. So I do think we're serving the country in one way, which is we're preventing the dollars from going outside. Individuals, R.K. Damani, Junjunwala, Rakesh Junjunwala, many others have contributed. 200 founders have contributed towards building this institution because they believe it's an important project for the country.
So we see Ashoka's mission to really be able to serve the country in solving these problems with the cadre of young people that we are feeding into the workplace.
If you want to maximize EBITDA, you'll be a teaching shop. You'll ignore, why would you run a PhD program? It's pure cost, no revenue. Right?
So how do you look at ROI then as far as Ashoka is concerned?
It's impact. We eventually will term out, and alumni, once they have matured, will take our place. We have no owner. There's no one family that backs this place.
The myth is that, if you study history or philosophy or political science or English literature, where will you get a job?
I'm a classic example of that. I studied philosophy, and guess where I am. So
we have students who've turned down Berkeley, who've turned down Duke, Urbana-Champaign, London School of Economics, to come to Ashoka.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and instinct.
Welcome back to Commodity Champions. And the sugar industry is expecting a fresh boost after Food Minister Prahlad Joshi hinted at a possible ethanol price hikes for the 2024-25 season. He also suggested a review of the MSP of sugar, which has remained unchanged since Feb 2019. Besides this, the industry is also hoping that the government will review sugar exports as they believe India will have a room to export 20 lakh tons of sugar this year. The industry is optimistic about the country's 20% blending target that has been set for March 2026. I caught up with Ravi Gupta of Shriyanika Sugars, Gautam Goyal of Dhampur Bioorganics and Avantika Saraugi of Balrampur Chini Mills. Listen into these conversations.
The deliberation about enhancing the program from 20% to beyond has already started. Niti Aayog is in discussion on that. Then there are also parallel discussion on blending ethanol with the diesel, which will create a huge requirement. So as far as ethanol industry is concerned, I think the demand side, there is huge. And you see, look at the bigger aspect. We are 85% dependent on imported fuel for our transportation, and we have just not yet reached 20%, which I'm sure will reach next year. So there is a lot of scope to increase this blending in petrol and diesel. So I'm absolutely not worried on the demand side of the ethanol. And I think going forward, as we have achieved in the past, but in the future also, I'm very, very optimistic that more demand will be created and the production will match accordingly.
So when it comes to vehicles, when it comes to ethanol as an innovation, where do you see the next step for the sugar industry?
See, we are a growing country, and the GDP is growing. When GDP grows, the automobile population will grow. Demand for fuels will continue to rise. We're rising at the rate of 7%. I think it will go beyond, because as the GDP becomes higher, I don't see any challenge to the demand of ethanol in the time to see. And as far as moving to the other areas, yes, why not? The innovation and research should continue to go on. We should find more avenues where the sugarcane juice and sugarcane can be used, maybe in the bioplastics, which has already happened, maybe green hydrogen. We should work on all across. This is the area which is open for us, and this area has huge potential in many things, not only on pure fuel ethanol, but in green hydrogen, in bioplastics.
This is an ever ongoing debate about food being used for ethanol when it comes to maize and rice. And we've seen the conversations around that, especially maize, where we saw the prices run up. And there is this conversation about increase in production vis-a-vis and, bringing other crop numbers down and maize being going higher. How are you reading that? And do you see a proper mix there?
Manisha, I don't think so that, it's a food versus fuel debate in India at all. India was exporting around 4 million ton of the maize, which has got for making ethanol. India is continuously trying to increase the production of maize. The area of maize is already 5% higher. There are scope of a lot of yield improvement in the maize because the difference between the yield is close to 2 tons to 6 tons. So all these things are there. So what, in fact, with the right policy of the government, the exports have reduced, and we are using same for making ethanol. I mean, total Atmanirbhar, where we are using our home grown food maize for using the ethanol. So it is in that direction. I think the government is thinking is in the right direction. But as far as if you ask me my priority, the fuel ethanol should be the ethanol which is most efficient. And there are studies which is already done, and none other than credible organization like FO and a lot of studies in India as well, that ethanol is sugarcane ethanol is much more efficient in terms of water per liter of ethanol as compared to maize or as compared to rice. In terms of energy, FO study says that the sugarcane ethanol gives you 9 times of energy as compared to maize, which is 1.4. So in terms of priority, the sugarcane juice ethanol obviously come first, and then later maize and so on and so forth.
I do understand that the industry had a lot of wishes. I mean, you got them counted as well. There were 10 of them. But what would your top 3 be?
See, the most important is that, this whole industry, one of the things which is there, that FRP is our base mark for the raw material cost. So everything should be linked with the sugarcane. So MSP has not been increased since last 4-5 years, and whereas the sugarcane prices continue to increase year on year. So that correction is needed, which government is, as you have heard, is looking at it. Then ethanol has to be incentivized so that we have more and more sugar which can be converted into ethanol through sugarcane juice and bee molasses. So ethanol prices is another factor which we need to. Third most important factor is now we have to work. We have achieved a lot from 1.5% to 14% and 15%. Now we have to think beyond 20%. And to think beyond 20%, we have to now invest into the new areas like flexi-fuel cars, where we can use 100% ethanol. So what is required to be done? The tax, the GST tax rationalization, which is important, to build up the supply chain infrastructure, which is storage, supply, distribution. So now we have to take the next step forward, that what beyond 20%, and that is what the industry should prepare itself, both on the demand side, supply chain, as well as the raw material side. So that is what which is going forward, the industry effort is, and I think the government is quite aligned with that.
A final question. When you say the 20% blending is just right the corner and the industry is ready with it, and now we are thinking FFB, so would you say that perhaps the both weren't worked together when it started?
See, changes always takes time. It doesn't happen in a day. And, the first, far most important was to have the proof of concept, which we are very confident that the proof of concept was very good. Every stakeholder is convinced that there is possibility. When 1.5% started and 20% people have so much of skepticism whether it will happen or not happen. But right today, when you're back on the target, so everybody is confident it will happen. So now it's the time that the proof of concept, which was in the past, is there. And now everybody will take action. And I'm sure that we are absolutely on the right path and very fast walking on that path. And this is which is happening in industry, which you are seeing today. For example, if you talk in any forum, the renewable and the fuel ethanol is part of the conversation. It was not there 5 years ago because people didn't believe it. But now when people see on the ground that those things are coming up.
When the ethanol blending program was restarted by the current government, by the government under the leadership of Prime Minister Modi, and they came out with a very forward-looking program. So the industry also, I think played its took care and did a responsible thing and ramped up the capacity. We do believe the foundation has been laid by the sugar industry, and we will provide a stable platform to give the desired quantities. As you mentioned, the capacities right now between the sugar sector and the grain sector is probably the capacities that are already on stream provides enough ethanol for beyond E20. I think if my numbers are correct, E20 will need about, say, close to 1,000 crore liters, and the capacities which are already available will be in excess of about 1,250 to 1,300 crore liters, with further capacities coming on stream. So supply side, I don't think there will be a problem. Now, beyond E20, the policy has to be articulated, it has to be enforced, and I think that is what all of us, the manufacturers of ethanol, the consumers of ethanol, that is the vehicle, the CM, the vehicle manufacturers, whether two-wheelers or three-wheelers, are looking for that sort of policy guidelines with which they can plan their future going forward.
Going forward, I mean, there also is a conversation about sugar prices, sugar availability, sugar exports even. What are the conversations that you as an industry and as an organization having with ministries?
So see the sugar balance sheet, because again, the numbers for this year, the 23-24 numbers, we know that the overall production for this year was close to 34 million tons of sugar, gross sugar production, with I think about a 2.2 million ton diversion. So we have a healthy sort of closing stock of over 8 million tons. That is keeping into account a 29 million ton consumption. Now, in the coming year, 24-25, with the monsoons being healthy and robust the way they are, the grain crop is looking good. ISMA has already gone on record saying they anticipate a sugar production of about a gross sugar production of 33.3 million tons with an upward bias. We expect a diversion of in the region of 4.5 million tons to ethanol. We should give about 450 crore liters of ethanol, plus minus maybe 25-30 crore liters of ethanol. So that will give us a fairly robust. So we will have adequate sugar to permit about 2 million tons of export. And the international markets also are favorable at this point of time. And with the crop planting that has taken place in Maharashtra, I think it's pretty much a done deal that the 25-26 season is going to be considerably larger than this season. So we don't need a stock beyond 5.5 to 6 million tons, and it gives us enough room to export 2 million tons. And we request the government announces permits the export policy and allows us to liquidate our stocks, get some cash flow and breathing space, and take advantage of the upside in the international market.
All right, that is what the sugar industry is asking for. FRP, which is linked to cane prices. Also, the minimum selling price of sugar should be hiked. Ethanol prices should be revised. I mean, that could be coming any of these days. And then beyond 20% blending, what really is the plan that the government has in mind is something that the industry awaits at this point in time. But with that, that's all the time that we have on this edition of Commodity Champions. Thank you for watching.
That makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
First of all, we are seeing very strong momentum in the market, and clearly this is on the back of some very good rainfall. Of the 36 agri-climatic zones that we have in the country, 33 zones have got either normal or above normal rainfall. And even in terms of, if you see the state stratification, for only the states of Bihar and Punjab do we see little bit deficiency in the rainfall, but broadly all the agri states also have very good rainfall. In terms of revising the guidance, no, we will still maintain at 5% level because we want to see through the festive season and then maybe take a call at the end of Diwali. That would be our view. But most of the heavy lifting will happen in H2 of this year.
Hello and welcome to News Center with me, Parikshit Luthra. We spoke to former RBI Governor C. Rangarajan about the kind of reforms India now needs for the next 25 years. About the possibility of a rate cut by the RBI, he said that the current inflation cycle and sentiments do allow some room for the RBI to make a cut. The cautious move would be 25 basis points, followed by another 25 basis points. So let's see what the RBI does on that front. Having said that, when we asked him about the key reforms that India needs at this juncture, he said we need more capital and more efficient use of capital, and all reforms must be in that direction. Let's begin with that answer. I spoke to him earlier today.
Calculations show that in order to achieve the status of a developed country by 2047, the required rate of growth may be around 7%. And in order to achieve that, we need to have a rate of growth of 7%. And that requires in turn an investment rate of 35% if you assume an incremental capital output ratio of 5:1. The question to ask is this feasible? 7% rate of growth we have seen in recent period. It is not as if that we have not seen. After all, in the early 2000s, we had a much stronger growth. We even had a rate of growth of 9% per annum for 3 to 4 years continuously. Therefore, achieving a 35% investment rate should not become difficult. We already have touched 33% of GDP as the investment. Maybe another 1 or 2% more is not going to be difficult. But at the same time, we need to focus on reducing the incremental capital output ratio also. Earlier on, when we used to discuss about the required rate of growth, we used to use 4 as the incremental capital output ratio. But in the recent period, it has gone up to close to 5. Therefore, as we want to move ahead, we need to focus on 2 things. One, the investment ratio must be taken by another 1 or 2 percentage points. And at the same time, we should work towards getting the incremental capital output ratio from 5 to closer to 4. The two should go together. The two essentially mean we need more capital, and we also need a more efficient use of capital, which is all what incremental capital output ratio means. Therefore, when we look at the reform measures needed, it should focus on both aspects of the basics of growth. Let's activate various factors in such a way that investment rate picks up. And more importantly, let us also focus on how to get the efficiency in the use of capital move up. And we need to find out whether what kinds of reform measures will be needed in order to get that. Right. Therefore, the two should go together, and if that happens, I think it is not going to be that difficult in order to become a developed country by 2047.
One concern that we have also seen over the last 10 years is the share of manufacturing in our overall GDP. That has not risen, and there is a lot of thinking within the government as to how to increase that. Would there be any thoughts that you would like to share as to how India can increase the share of manufacturing in overall GDP?
This concept of share of manufacturing in GDP can lead to some misinterpretations also. The question is, what is manufacturing? The situation is quickly changing, because previously manufacturing included also certain activities which we now call as services, because previously manufacturing included even packaging and sending out all those activities. Now these are partly treated as services, because the manufacturer does not always do everything that is required to be done. Therefore, and also, what is the share? The share means which segment is increasing faster, whether it is pure manufacturing or whether services. Now, services itself has become important. Therefore, let us not overemphasize the fact that the increasing the manufacturing share is the most important thing. No, I think...
What about Make in India, sir? Manufacturing in India, making for the world, that has been a priority, but how can we give it a bigger boost now?
No, that is true, but the whole question is making in India for what? If you say making in India for India, this is a wrong approach. That is what the old import substitution meant. It meant that you manufacture in India, and the market for that is not outside India because you are not efficient, and you're just selling it in India. Therefore, that I think the clarity is very much needed. If efficiency is the important thing, then it is very clearly must be stated, making it in India for the world. Therefore, you will be treated as an efficient manufacturer. Inefficient manufacturing, inefficient way of import substitution is bad, and this was the wrong lesson that we had earlier, and we should not go into that area. We should really manufacture in an efficient way, and should be able to produce in India and sell it outside. And if you are able to sell it outside, automatically it means you are an efficient country. Therefore, the whole idea was simply saying we should increase manufacturing. Increase manufacturing for producing for the world as a whole.
Right.
Therefore, let us not mistake ourselves into doing something which will end us in the same situation we had in the beginning of the industrialization period in the post-independence period.
Do you expect the RBI to cut the repo rate now?
Cut, I see. It may be possible. I mean, I think the idea is that whether they're cutting the repo rate is leading the market or is following the market. In some sense, the inflation rate has, the overall headline inflation has fallen below 4%. I think in the last two times it was below 4%. Therefore, in some sense, if we cut the rate, we are following the market rather than leading the market. So, if there is enough evidence to show that that tendency is going to persist, I think we should do it. I mean, I think this is, and perhaps 2 6-week periods during which the inflation rate has fallen. That can give a lead to cut the repo rate, but I do not think that we should look only at the core inflation and not the total overall inflation. I think the inflation is inflation, and if it hurts, and therefore we should really look at the overall inflation, and with the overall inflation certainly shows a tendency to fall, and it all depends upon the perception of the central bank, how long a time we should look at. But apparently now we have seen about fairly 6 weeks plus 6 weeks period in which the inflation has been falling. Therefore, there is a good chance of the rate being cut.
Right. By how much would you expect, sir?
It is very difficult. I mean, I think the choice is between 25 basis points and 50 basis points. If you want to be cautious, we can cut 25 and store something for the next time, or we can take front-loaded cut of deeper thing. Therefore, we should be watching for the data as they are coming in. But it is difficult to say. But maybe 25 followed by 25 may be the cautious way of doing it.
My final question, sir. Any reform that the banking sector really needs? If there's one reform or recommendation close to your heart, what would that be?
Well, the point is that in the case of the public sector banks, if you talk in terms of reforms, the one thing that is needed is really to ensure that the board of directors should be made responsible for the decisions. I think the banks, so long as they are operated by public sector entities, should be also be held responsible for their actions. Now, the idea of passing on the blame to the government or passing on the blame to the government departments which control the institutions is not the right way to do it. I think that the right way to do it is really make the boards responsible and let them be conscious that they will be held responsible when something goes wrong.
Right. Mr. Rangarajan, it's a pleasure talking to you. Thank you very much for being with us here on CNBC. Well, that was former RBI Governor C. Rangarajan in conversation with CNBC-TV18, signing off with a note for board of directors of different banks, saying that whenever things go wrong, they need to be held accountable and they should know that. And this is the key banking reform that he is actually pushing for. We're going to take a short break. On the other side, we will be joined by the founder of Akasa Airways, also the chairman of the CI Skill Development Committee, Aditya Ghosh, and we will be talking about the government's internship scheme, which goes live this week.
Say overall 5% growth rate. September has been a slow month for us in exports, and there are two factors to it. One is that in our neighboring countries, there are some geopolitical challenges being played. These are all very big markets for brand Mahindra and Swaraj. And even in the US market, we are seeing that 11 quarters of continuous degrowth in US tractor industry. Now that is, we know the factors, that is on back of very high interest rate cycle, and people were waiting for Fed to start cutting. And now that has happened, I think the transmission will take 3-4 months time. And even in our US, which is our second largest market after India, the sentiment will revive. So that will again give us growth getting into our Q4. But I think for next 3-4 months, the exports might be a little slow.
We like to stick to the fundamentals.